All right, are we good? What's up, guys? Good morning. Sorry, it's a little behind. The little baby, my baby girl, woke me up at 4 o'clock in this morning, and I almost stayed up. Oh, I'm not ready. We're not ready. There we go. Let's make sure we have sound here real quick. How you guys doing today? How you guys doing this morning? We got some nice setups that I want to show you guys. Here she comes now. Let me make sure we have sound. We do. We're good. How you guys doing this morning? All right, let's get it, guys. Let's go through this. I have. I'm gonna show you guys Uber. There was an ascending wedge that looks like it's putting in a reversal pattern. So let's go to the markets. I'll tell you guys what I think about the markets. What do we do today? We're gonna go up. We're gonna go down, sideways. What am I looking for? All that fun stuff. All right, so let's go to the SPY. I was actually just checking out CRM right here. Um, let's see, could be a possible rejection off of that base, but it's crazy. We told you. This is what you get here. If you could, guys, like, share, subscribe if you're new here. Greatly appreciate it. We're trying to get to 100 subscribers and then hopefully 1,000. All right, we don't, we don't act like idiots or like we're better than everybody. You don't have to worry about being muted. You don't have to worry about all that stupid shit like saying how you trade is wrong. You can't trade mid caps, large caps, small caps. No, I trade them all. All right. That's what happens when you get an education. You've been doing this long enough. Set your stop. You're here to catch momentum, volume. You just got to know what you're doing. You got to know what to look for. And if you're new, ask questions. You have me here. So I can help you with anything that it is you might have. What am I doing here? Oh, I want to turn this down. All right. So, again, I've been trading for roughly 7 years, 6, 7 years. So let's get into it. I have a few that I'm looking at. Let's see. Let's see. So, iRobot. Amazon is buying iRobot. Um, iRobot. So they're iRobot right here. So it's falling. So you can put that on your list, guys. Already starting the day off with some news. To look for the bounce back, possibly. That's what I would do. I'd look for the bounce back if you get it. I don't know. I'd have to look into it, though. I'd have to look into exactly the news and what it was. But I think that's been going on for a while. So, all right, let's do it. SPY. Let's get into the SPY. We can go to the daily. It looks like we're trying to curl up and over, but we have a lot of resistance up here at this level. It looks like we're trying to curl. We got our pullback. Are they still buying the dip? We're gonna find out today. Because if we pull back and we stick a higher low, we'll say, let's say right in here at just right here in this area. All right, we have a couple levels. We'll say 453.25. Okay, 453.25. And we're already starting to come down. I wonder if it was the Case-Shiller Home Price Index. Or look for 453.70. So still 453 area is where we're looking. It's like $1 long. If we go to a 5-minute chart, I want to see if we start to do that, or are we just going to sit here and put in a range that should be broken by the end of the week. We should get some type of direction, whether it's up or down. Just to give you guys something that I'm looking at here. So, what is this? Friday's highs. See if we consolidate at Friday's highs. You know, see if the buyers are moving up, and then we can work our way back to the top side of this range. All right, those are the things I look for, along with like Nasdaq, and like where, you know, you'll start to notice these things with like what's healthcare doing, like what's UNH doing, what's JP Morgan doing, what's Chevron doing, what's Apple doing, what's Microsoft doing. Like those will kind of tell you, you know, what you can kind of expect from the market. It looks like they're all getting ready to pull back, and we'll go through that. We'll find that out in a second. You can use futures to, you know, determine, you know, what you think is going to happen for the day. I still want to see if the Qs get a pullback. No, I don't want settings. So look here. Let's go to the daily or even a 4-hour. It just seems to me like it looks like it wants to. It's trying to curl itself up. Like if I take you to the NQ, all right. If I take you to the NQ, notice how you're getting that curl. Right? Notice how you're getting that curl here. Support stepping in. Do we just reject the 9 EMA on the daily and break down and finally test this 1536 area? We could. It's a possibility. You know, you are getting rejections up here at this 9 EMA. So right now I'm playing it both ways. You know, I've got support. So I will, you know, take it as it comes. So this area here is an area of resistance. Do we finally break and pull it back in? You know, that's what I'm going to be looking for. And I will be looking for support down there, for unless something happens. You know, again, we can be in an earnings recession. Valuations are getting a tad too high. I showed you guys last night Spotify. I'm going right back to the Qs, but like look at Spotify, guys. The chart, it just felt like these type of stocks might get their pullbacks. They had like, I don't know if they had good earnings, bad earnings. They had new subscriber growth, okay, but does that equivalent to money? Does that equivalent to cash? All right, not sure. Not sure if it does. So if we get a pullback, I'm going to see if I can be short this thing. See where we can get it. Pre-market high is 157. Maybe 157. I wouldn't mind even this 155.63. 155.50 area. There's a gap fill back here. All right, and see if we can give this thing some more downside. Right now, I don't know how far it's down. So I want to see if we can eventually break this level. If I go to the daily, it's already past the 50-day. It's already broke that level right there. So it's 153. So if we pull it back to, I mean, just want to see if we, you know, 147 would be the target. Would be a target. You know, this would be a swing trade if I did it. Okay, we seen the rejection coming. We said it in chat. We said it last night. We've said it in a couple night ago's live stream. So just gotta join us. Hit the like, share, subscribe. We're here. We're live. So what am I going to do with the Qs? I mean, we got to see, guys. We got to see if we start to try and curl this thing up. That's what I want to see. Are we going to start to try and curl this up? Or does this level eventually break? Do we just push back up, put in a double top, sell it back off, and sit here? We could. It might be another boring day. You might want to look at small caps today. You might want to look at small caps if you guys have any. Let me actually fix this for you, because I know you guys can't really see anything. All right. It's going to make it tougher on me, but whatever. Let's see. So on the Qs, yesterday's highs are where I'm going to look at to see if it starts to put in support. All right. I want to see if yesterday's highs start to hold as support. Because, let's see here. Let me see. I got to look at the dollar as well. Like, look at the IWM. If the IWM does not hold here, you could look for a nice trade on the IWM back down to 192. All right, 192. They're all just hanging out up here. This could be a break and retest on the IWM if it can hold. Looks like we're just sitting up here. You guys see what I'm getting at? You're putting in a pennant here. Kind of a flag. Alright, let's look at the Dow. Alright, I still didn't even go really over news. Alright, the Dow's starting to roll over. Financials. I think they're gonna pull back too. Let me see. DXY. We gotta see what the dollar's doing. It's important. 2-hour chart's fine. Alright, so the dollar's been rallying, and you notice how we've put in this double bottom here. Yields have been also going. Alright, yields have also been going. There was some news with the yen last night, I think, or something happened with the euro. Something happened with the data. I can't remember exactly what it was. What exactly happened? So it's regained. Maybe she starts pushing back up. Kind of just hangs out here in this area. Because you can tie the dollar to your trades. Yeah, at least to the SPY and stuff. Let's see what Bitcoin's doing also. Let's go to the yields. Let's refresh this. What are yields doing this morning? Of course, I got to go use the restroom. Of course I do. Of course I do. So yields are still on the rise here. Yields are still on the rise. Give me 1 second. Excuse me, sorry. All right, what time is it? It's already 9:12. Let's get into the stocks, guys. We're going to just watch the dollar, watch yields. You know, we still have a decent spread from the 10 and 2s. I guess if you want to do the 3-month, 10-year, or 1-year, 10-year, whatever that goofy stuff is. 3-month, 2-year. But let's go to NVIDIA. We got to find out what sectors are going to be strong. Let me first look real quick and see what we have on the scanner, if it's going to bring anything up. It might bring up stuff from yesterday or today. So Zion, let's see here. I'm not sure if this stuff is from today or not. I'm not sure. BJ's, why would it be all this stuff? Top gainers, last net change, nothing. That's so weird. It's so weird. Maybe I gotta wait for the market open, I guess. I have another way we can find them. If you guys are on here, if you could, please like, share, subscribe, comment. Let us know, you know, tickers, anything you guys want to go over. So we have NVIDIA here. They just said somebody got into a car accident. I'm not sure who it was. It's hot in this house. Double bottom right here at our pivot high. This is a break and retest. It's a break and retest there. I know there's a lot of levels that I have finished out here. So what am I going to want to look for with NVIDIA? I'm gonna want to see, obviously, what the Nasdaq and stuff does. Jesus, fine, come up here. Come on, come on. Oh my God, this is my fucking morning. I just want to get to work so I can make some fucking money, and it's just something, just always something. Like now, look, I think all my stuff just got cleared out. It didn't. Thank you. Man, it was gonna suck. So, we had some economic data this morning. The housing price index dropped just a little bit. It's still increased. It still has an increase to it. 2.8 year over year. House price index month over month, 0.7. So that was right in line with last month. Consumer confidence comes out at 10 a.m. So remember, so look out for that. If you're in a trade, whatever, remember 10 o'clock you have that. Let's see here. China stocks, BABA. Let's not forget BABA and crew. Oh, Nvidia. I'm gonna want to watch for, this, if it can curl itself up. I want to see 240 or 448.60, 449. See if it starts to hold. See if yesterday's highs hold. Doesn't seem like it wants to. All right, what number do I have written down here? She's laying on it, so I can't tell you what numbers I have, but you're okay, babe. We're gonna see if this thing, if it breaks up. So what we have here, we have a double bottom right here, guys. There's a double bottom on the daily chart right here and here. Sorry, here. And this level is 450. So we're going to watch 450.60, 450.50. 450.50 is the number that I have down. See if we break up above it and can hold it. You couldn't do it pre-market. All right, we couldn't do it pre-market, so I want to see if we can hold it and start to bounce higher. There's a lot of resistance areas in all these charts. Today's not a great day. Uber, real quick, I'll show you guys that. Okay. Yes, 450.50 was the number. Come on. You're starting to get an ascending wedge. All right, this could be a reversal. Look how it came back. This morning before I came on, it was just here. So it did come back down. That trend line is still intact right now. So see if this ends up breaking down or up and out. AMD has been dead. All right, AMD's been dead. We can look at Spotify. So here's AMD. See if it holds again. See if it holds. Maybe see if yesterday's close starts to hold, but it looks like it's trying to roll itself over. We'll go over to Microsoft, MSFT, and then we'll hit up Amazon. Thank you guys for the likes. Greatly appreciate it. I'll probably be looking at small caps this morning. Sorry, I know I'm a little back, but she's sitting here in front of everything. So Amazon's holding in a nice support. They don't report for a few more days. 7/28. So I suppose that's next week. 7/28. I guess maybe Monday. Today's Tuesday. 5, 6, 7, 8. No, they do report this week. Are you serious? Wow. I did not see that on there. You okay, Boobo? I don't see Amazon. 28. It says here on the chart the 28. That's weird. It says here the 28, right? No, 8.3. 8.3. So yeah, not for a while. Got some nice support here, guys. Really, your support's down here, but they've been stepping in here on low volume yesterday. So we'll look at Amazon. There was some news out with this iRobot stuff. Maybe that helps, but all in all, you okay? You okay, BB? You snoring? Her snoring. Wheezing. My little baby getting old. Again, I don't know. You know, like I said, we'll just see if we're sticking in. We're sitting on the middle part of this prior range. If it breaks, look for the bottom end right here at 127.37. Maybe short bounce backs, but there's just the bounce back isn't up until 131, so I don't see that much of a an opportunity there. Personally, what up, dog? What are you watching this morning? My boy came in with superhero yesterday. Some man of the hour right there. Look at this Google chart. All right, we got a nice pennant breakout, pulled back, retested. We could get a possible long off of this Google chart. All right, if this holds at 122, see if we get a long. Give me 1 second to get my chart set up. The market's getting ready to open here. Sorry, guys. I'm just trying to set my stuff up for this market opens. It's just I'm gonna see what small caps we have. As soon as I get these set up, and I'll see what we have as far as opportunity. The RSI is pretty low. MACD's negative on the SPY. So we'll see if we get a turnaround. We're gonna see. All right. I think we could. I think we could start to see a little bit of like a shift up, or we could just stay here and we get nothing. I don't know. Maybe you don't get positioning till the end of the day. Maybe they don't do it until futures, until after hours. But I do know, end of the day, we have Microsoft and crew reporting, so there might be some hedging in front of that. Some, not necessarily hedging, but some, I don't know. I just can't think. Can't think. So I'm going to be looking at small caps, NVIDIA. There's probably no reason to play Tesla. There might be a day 2 trade on Tesla. I'm not sure. But, wow. Look at that. This is going to... Okay, so there's a nice pullback. See if it holds up. That could be a nice break and retest there. We'll see. But I would keep your expectations low on that because, you could get a day 2 continuation. But then again, it could also just not do anything. And you can find yourself being in options, or unless you buy the stock, which is I'd prefer. All of you do. If you don't have the capital, maybe trade lower volatility stocks. Because unless you're getting this momentum, you should. We'll see. We'll see what happens. See if maybe there's a little bit more short squeeze or something to go with Tesla. I mean, where's the upside at? Where do we run into resistance? We do have it up here. So that's not too bad. 283. Maybe even right here. Maybe that is the range right there. You got to weigh it out. Got to weigh out your risk. Oh, Daddy, sorry, baby. I did not mean to grab your whisker. Look at Tesla trying to get a bounce right there, guys. I'm sorry, Bean. I'm sorry, Bean. Nobody watching. It's not entertaining. Um, I don't know what I'm doing. Seriously, I don't even know what the fuck I'm doing. I'm losing it. Um, all right, guys, get ready. Like I said, I'm not sure how much or what we'll have going on today. But I'm looking all that up right now. I'm going through my scanners and stuff right now. Watch Spotify. See if Spotify starts to break here, guys. See what happens. See if it starts to break this level. All right. See if it starts to break this level. Look at the pre-market volume. This has earnings. All right. We could see a nice. We're gonna have our levels right here at 144.50. Pre-market lows. Okay. Pre-market lows. Or we could get a bounce, maybe short the low of yesterday. We're gonna see. We got Baba, Alibaba. Okay, so there's a lot. There are some opportunity. Look at the gap up. We told you the gap up yesterday. Let's look for a pullback into yesterday's high of day. All right, I'm gonna look for a pullback to yesterday's high of day in this area to take a long on Baba. Not sure how far I want to take this thing. It could just go without us. So just know that. It could just end up going. And market's opening up in 1 minute. So your China ADRs will be in play. I want to see if the SPY starts coming into support. I don't have any levels, I don't think, for Alibaba here at anything higher than here. Man, I still would like to pull back to here. I really would, guys. I would like a pullback to 97. I'd like the pullback if I could get it. Let's go, guys. Good luck today. There's the bell. Let's get it, guys. When I see something, I will let y'all know if I get into something. Good luck today. Control that risk. I need a pullback in Baba. I need a pullback into this area, guys. Need a pullback. If I get it, I will be long into 97. All right. Oh, that's a lot of volume right there coming in, guys. Pretty damn quick. Watch out, guys. I don't know what's going on with Baba here. That volume came in out of nowhere. It felt like. Look at the volume on that. There's got to be news. Watch out for Neo too, bro. Look at Baba. I don't know if this will affect Neo also, but Neo's still going with the gap up. Yeah, it could be a day 2 continuation. Look at Baba. Something's going on. I don't know if that was the pullback or if... Look at the volume on that. Look at the volume on that sell-off right there, guys. Look at that. It was more than anything you had yesterday, and it just came in out of nowhere. Came in out of nowhere. I don't know if there's any news. Let me look into this. And there goes Carvana, up 2.5%. I might try for the long on Baba here, but I would watch out, guys. Look at this. Look at this volume. 2 million shares. It was more than you traded yesterday. Yeah, it looks like it's going to break. I'm not... something's going on here, guys. Something's going on with Baba. If you guys have news, let me know. Please, because I'd like to know what's going on here. Nothing's came across the wire. I just think that that's way too much volume for just a simple pullback. Looking on the 1 minute chart. Look at the 1 minute chart. Look at that. And it just came in and dumped. So is it trying to make this area resistance now? It's going to be hard to say. Maybe it's about, I don't know. But it's going to be really hard to get that type of volume to the buy side to break back up through there. So I would watch yourself. I really would. There's got to be news. There's got to be something going on with Baba. I might take the short. I might. I'm going to give it a second. I'm not just going to... Nothing's coming across from what I see. Bitcoin is popping. Let's see here. ELBM is going off right now also, guys. ELBM. Come on. Yeah, Baba's falling out of bed here. Give me a 3 minute chart. Come on. Come on, come on, come on, come on, come on, come on, come on. I'm going to get short on bounce backs. Okay? Bounce backs, I'm going to get short. There's something going on here. If it holds, then you're going to see an absolute crazy amount of buying to be able to get back above that sell bar that came in on a 1 minute candle that was 2 million shares to the sell side, just under 2 million shares to the sell side. 1 minute candle, and it just I just wonder if there's news. Now it's trying to turn 97 into resistance. But again, if we break back up to VWAP, I will look to get short. I'll let you guys know in the chat and on the mic if I do enter this trade. And look, Spotify is also trying to go to the downside here. So that's another one we have on the radar. That's an earnings catalyst. All right, there we go. We said short Spotify. It looks like that's trying to go down. You want to see an increase in volume, though. You know, we said 147 was the target. You got there. You got there. 147 was the target. You got there on Spotify. I'm still cautious about being long Baba. I really am. I want to be short if I can get a chance up to like VWAP or so. Look at Neo coming back down. I told you guys to watch. I told you guys to watch out. There's something going on with Baba. The volume isn't too bad on Neo. Neo doesn't look like Baba. You know, maybe it's just a separate catalyst. Look at the buy side volume too. Maybe this is a buyable dip. This might be a buyable dip. Watch out. Look, 3,000 shares. Buy. Man, this. Let's see here. There you go. Those are the ones you're going to want to see. You're going to want to see the 43,000, 50,000 shares. All right, there's a. So it broke. It's like there's a brick wall of sellers right here in front of VWAP. Look at the brick wall every time it gets up to it. There's a brick wall of sellers right under VWAP and at VWAP. If it can break and you can see these bids start to lift. 1248. The spread's pretty tight, so there it goes. The bid's lifted. There it goes. Now let's see if we start to get some decent movement. Look at the ass. Look, 54. So this is how you want to. Man, they gotta get it up above VWAP and hold it up there. Look at Nvidia go, guys. There goes Nvidia. We said if we can get up and we can hold that area that we were talking about, that double bottom on the daily. What was it? 450.55, I think it was right here. I'm pretty sure it was that area. Let me pull up a 15-minute chart. Hopefully we don't miss this. I would only think that there's a couple dollars left if you can break above 458. But yes, we broke above the 450.75 mark, and that was the double bottom on the daily. 450.75, we broke it. We've held it. Now we look to possibly buy pullbacks, or maybe it pulls back to pre-market lows. Maybe we can get a bounce back to this area. All right. I'm still watching a couple things. There goes. See if Nvidia can break through the highs. The volume is a little low. It's just average, I guess. The volume's average on it. I'm sure you have people wanting to wait. It's doing it. It's just gonna go. It's just gonna go. All right. So the S&Ps are coming up into an area of resistance. What's the Nasdaq doing? What are the Qs doing? Let me get up the Qs. I'll put it over here. All right, where's Baba? I want to get me something on. Come on. What are you gonna do, Baba? What are you gonna do? Look at the volume, how it just dropped. That is a crazy amount of sellers up there, guys. And look, there goes the Qs. Like I said this morning, guys, I felt like it's trying to roll itself up. All right, I feel like it's trying to roll itself up. All right, I am thinking about Baba puts. I'm gonna give it a second. Just feels like, I want to start to see this volume like increase. You know. Hold on, just spreads are pretty low. If you want to be short, Baba, there's a nice entry right there on the 9 EMA. I'm already short. I've already taken a piece off. Beautiful. Let's go. Let's go. Let's go. There's another piece off there, guys. Another piece off on Baba. We need the volume to come up. We need some more volume here, guys. This is going to be a gap fill. I need some more volume. Yeah, that's it. That's a small trade for the day. Get us green. Look at the sell. Look at the time in sales. If you can't see it, can you? Shit. So there was 2 pieces of profit, 3 pieces of profit. I'm sorry, taken off on that trade already. Now the volume is still low, so I'm going to hold off. I'm not going to. My expectations for this, maybe it gets back up here, or maybe it just falls out of bed and we get the increase. All right, but this sell. There was something going on. So we wait for the bounce back to VWAP. I've played Baba a lot, so I know how to play this thing a little bit. And you're getting the follow-through extension now. All right, you're getting the follow-through extension with the entry on the 9 EMA. Look at the volume start to pick up. We were in the 96 puts for this week. I got in around it was like 145, 146. They're 167 now, so about $20, $30 a contract. Let's see my bag. Look at the tail there, right off of that. So, just that's why I was a little like, hey, we should start to see more follow through and volume. Maybe they're just waiting for another entry. I'm gonna be watching Baba. I'm gonna be watching Baba. Those options were pretty liquid also. And there goes the SPY. That's what we said this morning. If anybody joined us, looks like you got a break and retest on the SPY at this area. Maybe they're anticipating decent earnings from whatchamacallit, from Microsoft. Okay, so there you go. Let's see. What do you got, Baba? So I'm just curious if this thing's going to fall out of bed today or not. Two, one. I'm watching the tape, and is that a, oh my God, Abby. Oh, that's not good, guys. There was just some news out here attacking. Oh my fucking God. Abby, come on! Sorry, I did not mean to yell. She's just stepping all over my keyboard and shit, and I don't want to.
Information indicates that Russia has laid additional sea mines in the approaches to Ukraine.
They have sea mines. What? Unbelievable. Unbelievable. What are you gonna do, Biden? What are you gonna do?
Watching shares of the wheat ETF popping here.
So there you go, guys. Wheat. There's news for wheat. See if you get a pullback on the Qs here to like 377, 377. Let me see. Come on, man. This fucking thing. Excuse my language. I do apologize. I gotta stop cussing. But it's real. It's go time. It's go time. Pre-market highs 377.88. Okay, maybe 380, 378, 378 even. Look for this pullback. See if we get a bounce, and then we'll take what is that? Friday's pivot high. See if we can get to 379. It's about $2 away. On that's QQQ Nasdaq. ELBM fell out of bed. It looks like. I got my eyes on Baba. I want to see if it can give us a pullback. I want to see if this thing can give us some. If that's going to be a failed breakout or what. So I'm going to be watching it right here. If it cannot break through here, we should get an increase. That's a decrease in buy volume. So I may try to take another entry. Hold on, Carvana's starting to go now. CVNA. I told you guys this area was key to watch if it starts trying to hold as support. What is this? Earnings call. Boom, boom, pivot high. So it's broke. So regained 46.50. There goes the SPY. The SPY just pulled back and ripped. All right. What does the Nasdaq do? I'm sure the Nasdaq's going to follow. Oh, my back. My back is still killing me, guys. Wow, it's only 9:57. I've already taken 3 profits out on the trade. That's awesome. This volume's light. Just watch. We have consumer confidence. Okay, consumer confidence getting ready to come out. Come here. Come here, you little witch. You little witch. If we are long, I want to see if we can get to 380 on the Qs. No, please, Abby. You got to go down. Please, baby. Please. I know you want to take a bath. You don't have to be mad at Dad. See, this volume's low. This volume is light on Baba. So as long as it's light, I'm going to be looking short. Look at the momentum Nvidia has. Look at the momentum Nvidia has. That's crazy. Oh my fucking god. Yes, just walk on everything. Sure. This area on Nvidia, guys, right here at what looks to be 459.87, right where it reversed. 459.87.
CB.
There's the break and retest, man. I couldn't fucking get on it because my stuff is froze up over here. I don't know. I have to wait a little bit. I can't buy the top on Nvidia. I just can't do it. You know, my opportunity should have been right here at the resistance level with VWAP cross. You know, it is what it is. You know, get an increase in volume when it break through. Maybe if I get my pullback, something. But I can't go long. I missed it. I do have a trade on Baba, so all's well. You know, it's not like you know, it's not like it's a total miss or anything. Look, Baba's weak still. The volume's getting lower though. You know, I don't know whether I should trust the volume or not, because this thing could just probably sell. Like, this is a crazy amount of selling that just took place at 99. I'm telling you guys, that's huge. Like, it'll probably be just as much as like a daily on it.
Elon Musk to appeal loss in SEC case to the U.S. Supreme Court. From Reuters.
Okay, so that's weird. So 5 minutes says that.
That's Tango Sandy Lima Alpha. That's regarding his.
But it says 1.7. But look at the 1 minute candle. There was literally almost. So what is it? You know. 1.4. Okay, so maybe it was right. Okay, I read it wrong then. All good. My mistake. Volumes. Look, see what I mean? It just starts to break down now on lower volume. Oh, shit. So there was a second entry there to get in on Baba if you wanted to take it. Again, I don't know how much follow through it's going to give you. I'm not sure. So that's the other part to this. It should start to make new lows here.
EVNA Carvana hitting 48.40 at the high, seeing bullish call activity. And Carvana up more than 4% now. Charlie Victor at Upper Alpha.
All right, guys. Carvana's going on. I told you guys, don't rule her out. Give her time. SPY's looking kind of bullish, actually. Let me see, 15-minute chart. I told you guys, I felt like we were trying to roll ourselves up and over. This is why you guys got to join us. Like, share, subscribe. All right, we don't do any of the BS stuff here. 15-minute chart. We got a little bit of volume here today. See if it can hold. You know, I came in the morning and was leaning bullish, buying dips. All right, that's what I felt as though we could look for. Nope, now it's trying to break. You know, but again, I would still look to see if it tries to hold and find support right here around 454, 16 area. Let's go, Vana. Let's go, Vana. Let's go. All right, so I'm looking at Carvana now, guys. Looks like it is time to play some Carvana. Let's go. So 38.2 fib right there, previous high a day. CVNA, boom, CVNA, 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 CVNA. And what helps is it helps the volatility get kicked out of this thing, you know, or you know, the implied volatility with the contracts, you know. We said it could be one of those days. No, how did I get... Oh, man, I got a terrible fill on that Carvana, guys. Ouch. That's bad. That's bad. That was not a good fill at all. Damn it. Oh, that's... Oh, man. Are you kidding me? Oh, what's today? Tuesday? Oh, my back. Damn it, they're selling her. They're selling her off. They're gonna try and sell it off. So I'm watching Carvana right now, guys. Want to see if she can hold up. ELBM people are looking at it. Looks like PLTR upstart up 10%. AI pop. That's right. We could look at AI and stuff like that too. We could look at AI with Carvana, but I mean, I took a small position on Carvana. Just want to see if we can get an extension up here. Just want to see if we can get an extension up here. See if we can get some volume to come in here. Bought the pullback. We'll see what happens. Oh, my back.
SMPS, Investors Business Daily Swing Trader Buy. Maybe November Papa Sandy. Shows that the high is 458.77, up 1.78%. UBE for the October 52.5 calls. At 47.44. TMUS T-Mobile press release says has begun rolling out 4-carrier aggregation for customers, boosting speeds on its 5G standalone network. That's TMUS. Tango Micro Uniform Sandy.
I want to see if we start getting some buyers coming in here on Carvana. See if it does. I doubt it will. What was my entry price here? I still didn't get filled. You gotta be kidding me. I still didn't get fucking filled. I lowered my bid. It still did not fill me on that. Completely insane. That's crazy. That's so crazy. Wow. That's insane. It literally, I put it under the, I was like, you gotta be kidding me. I'm fucked. I'm not fucked, but I don't like this to happen. I don't like this when this stuff happens. You know, I should have gave this thing more time. It'll probably consolidate. Um, see what happens. We'll see what happens here. You know, it's a big one though. It took back. Oh God, it's gonna break the level and everything else. This low volume pullback though. It's just. I think this is manipulated. They've been throwing it on Benzinga this whole time just to get fucking paid, to get people to come in on this thing. So leave it up to Benzinga to fucking steal your money and steal your information. Wow, unbelievable. Jesus Christ. This is a big loss, guys. Unreal. Well, it happens. It happens. I'm just not selling it right now because I know it's going to rip back up. I'll lose it all. I will go down fighting. I don't give a fuck. I mean, I do care, but, you know. Carvana. I'm down 2,300 and, I don't know, 3, 6, 9, 10, 15 minutes. The spreads are a little wide on it. I'm still going to give it time. Just going to give it a little high. If it can't hold this high, I'll just take the loss. It'll probably be 28. It's hard to say where it'll be at. It's hard to say. But came on. Now they're going to take control of it. I feel like the shorts are really going to start hopping in on it. Oh, see, I don't even have the mic on. I'm talking. I was saying that I should have stayed in Baba and should have just kept my eyes over there and never even fucked with Carvana. There's only it's not even 1 million shares being traded. Benzinga is promoting the hell out of this thing. And I see what's going on here. I see exactly what's going on here. But so I don't know. Yeah, don't do stuff like that. Let's see. What time is it? It's 10:30. I want to see if we can continue to put this uptrend in right here. See if we put in a higher low. I don't know. Baba short, that worked out. If you guys took it, but unlike me. All right, that's it. I'm going to get out. If I even can. See, I've been throwing out orders and they won't fill them. Like assholes that they are. They won't fill them. This is crazy. Oh my god, this is so bad, guys.
CNVR IPO is
Can we get a bounce back? I'm trying to like loosen this loss, but the thing is I throw orders out there, and I'll have it under ask, and they just won't fill.
and now
They won't fill. I feel like we could put in a higher low here. I'm sorry. I feel like we could put in a lower high here,
10%,
but that level was kind of key.
priced at $4.
That level was kind of key. You know, it's just gonna fall the fuck out of bed. Oh, this is bad. This is so bad. I think I'm close to $3,000 down now. Oh, fuck me. I'm gonna have to take a little time to recover from this one. Want to pop back up here, and then I'll limit order out, see if I can't save an extra 600-700 on this. Or I could give it time and see what happens. It's only Tuesday. Oh, my back. Oh, it filled me. It's gonna pop up now, watch. It finally filled me. That was bad, guys. That was a bad loss. Oh, God. Whatever. I just not counting the trade that I did get on Baba to the upside. There's our lower. Well, really, it's a lower high. Well, I'm out. It's done. That order's filled. It's over with. What the fuck was I thinking? What the fuck was I thinking? I have no idea. I was green on the day. I thought Carvana had a little bit of juice to it, so I threw some orders out there, and I get filled on a bad one. I told you yesterday, Spotify to the downside. I said it this morning too. I said we were looking for 150 to break, and I said the target was at least 147. And you're getting even more out of it. 147 was the target. Baba, man, that hurts. Baba's still going down. I gotta recover from this, whether it's today, tomorrow, another day. Wow, I just did that. I just did that. Oh my god, I fucking fell for it. Let's go to the scanner and see what we have going on. That was bad. That was so bad. It's all good. Yo, I told you guys. You're going to get the good. You're going to get the bad. You're going to get the ugly. You know? You're going to get the good, the bad, the ugly. I need to remember. There's a reason why I didn't call Carvana out. There's a reason why I didn't call it out. Let's see. AI. Looks like these things are falling out of bed. NVIDIA. Why does this thing, when I backspace, it does all the letters except one? You know what I mean? It does all of them except one. I don't know, guys. I don't know. It's 10:30. Are we going to start getting a rollover here in the markets? I'll have to bring up futures and get a bigger chart. I mean, Baba's just paying. All you got to do is wait. Take profit. Just be patient. That we couldn't have got a better entry. I entered up here right at VWAP. It's crazy. Crazy I let fucking Carvana take that away. Maybe I need to do some self-reflecting. Maybe I need to go find a tree somewhere in the woods. I don't know. That was a joke. That was a joke. So how did you guys do today? How did you guys do today? That's what I want to know. How are you guys doing? What are you guys trading? What is the lowdown?
SNAP snap the August 14 calls active, Sandy November Alpha pop-up.
The analysis has been right. I told you guys pre-market. Look for Spotify short. I said it last night. Now that's not a definite. We don't know, but
AGIL now halted on a circuit breaker.
AGI what? Oh my god. How much did you pay for it? If you don't mind me asking, if you remember. I can tell you whether you're going to get break even or not. What's the strike price and what day is it? And whatnot. I can probably tell you if you're going to be able to. Okay. And what's it at right now? There's a nice bear flag. Look at that sell that just came in there on that bear flag. 70. If it's at like, oh, okay, 41. I was gonna say if it's at like 25.30, it might be a little hard. I think you might be break even. Might be like right here. Might take you another at least 60, 70 cents, if not a dollar. It's gonna be hard. That depends on if it can actually not do this and just chop around too. You know. So I would, of course. Let me see. This is where they're gonna fuck everybody on premium, guys. This is where they're gonna fuck all of you. Me, if I was in them. God, I gotta stop cussing. But I really don't care. You know, it's not for kids, right? But if it does offend you, just let me know. And I'll see what I can do. This thing could just sit here and just chop around and then roll over end of day and then where this contract's at. You know, 20, 30, 15, 10 cents. And it's a 453 put. I probably... Let's see, you're trying to... What are we trying to do? Let's read the chart. Let's just read the chart. What is it telling us? Let's go to a 15-minute chart. Yeah, I was just thinking that drop, that breakdown that we got might have been good for you. Because look, this has been a pullback on what? It's been a pullback on low volume. Right? Look at the low volume. See how it's pulling back? See how it's pulling back? And the volume's also pulling back. That's why I got in Carvana. So things could just change out of nowhere. It can make up its own mind. But it may be going up here to find resistance to break down again. Stupid fuck. Come on. Not sure if it's trying to come back up here and turn pre-market, like this area, into resistance again, or what she's trying to do. She might pull up and pull. I don't know. I really don't know, buddy. I would have taken it on that just to minimize your risk, but again, just see what happens. Just maybe give it a minute. I don't know. Just being comfortable with your stop loss and like, putting on the. That's the whole point of like risk and probability. I really got screwed on this last trade.
AGIL resuming.
This trade hurt today. That one hurt. I'm not showing it, but it hurt. It really did. This fucking Carvana trade today hurt. I don't know why I didn't just buy 100 shares. I don't know why I didn't just buy 100 shares. And I wouldn't have to worry about it. Because look at it. It's just going to grind right back up. That was too big of a loss for something that wasn't even worth, wasn't even worth it. There was momentum, but I was looking because I entered like here. But my fill like screwed me so bad that I'm like, all right, well, we hold high a day. I mean, I had 38.2 fib, high a day. Look, a lower volume. I had a high volume break through the high. Like, chances are they usually will stick. It didn't, and then the spreads were nuts. And I get screwed and hold it. I just made it worse by holding it. Because I'm trying to throw limit orders out there to, like, lessen the loss. And look at it. It's probably just going to go right back up and revisit VWAP or something. And again, you don't know this, especially when you start dealing with numbers like that in options. And I'm throwing numbers out below the ask, and I'm like, I'm just not getting filled. And it's telling me that there's no buyers at all. And it finally took my order. That was so trashed. I lost so bad on that trade, guys. You guys have no idea. You know, it could have also not been bad if I'd have got a decent fill, but it is what it is. Got to move on. You know, it's not the first time, it's not the second, and it's not going to be the last. So, as I talk about it, the son of a bitch is going to go up and test VWAP, like I said. Oh my god, I could get sick. Let's see where the contracts are at. Um, can somebody tell me why my shit just keeps freezing up? I would love to know. I would love to know. Look, it's going to pull back. It's going to hold this resistance. It's going to test high a day or something again. Look at the volume. Look at the increase in volume. You son of a bitch. You son of a bitch. I can't believe it's still early, man. I took 3 profits and still came out with a huge, bigger, not huge. It's not huge, guys. Don't get me wrong. It's still, I still came out with a bigger loss than I would have liked to have said I did. And that's not helping you guys out at all. It's not helping you guys out at all. Let's go here. Orders. See, just like that, I could have said, like right now, the ask is at 125. I ended up getting out at 111. 111. Oh, God. Yeah, but it shouldn't happen to me because, dude, we're not even trading a million shares on a 3-minute candle. It does happen, but I don't know. It is what it is. Like I say, I tried to get out like 4 or 5 different times. I'm just throwing orders out there to try to get this thing off. Once I noticed that it wasn't breaking, and at the same time, it's showing me that we have a low volume pullback, and then now we're starting to get some buyers in. The buying starting to increase. I just could. It wouldn't fill me. It would not fill me. They were sending this thing back down. You know, if you're smarter, I don't know what's going on outside. They're screaming and all kinds of shit. I don't know. If you just stay cognizant of stuff like that, you know, you shouldn't have to worry about taking on a bigger loss than normal, or like I had coffee here I forgot about. Should have never went. I should have never put on that. I should have not. I should have never bought that many contracts, and I should have just went shares. The first thing that went wrong was options. That was the first thing that went wrong. There's only there's only 500,000 shares being traded. 300,000 shares being traded. Not even 300 shares. What an idiot am I? And I come on here and try to tell you guys I can help you guys, and I make stupid decisions like that. You know? Again, I knew that the volume was low, but I was kind of putting it on. Why did I put it on? I put it on because we had a clear increase in volume through the break of the high of the day. 38.2 fib. Like my Fibonacci lined up with VWAP, 9 EMA, and the previous high right here. And I was anticipating maybe some buyers getting in, and it didn't happen. So I start throwing out orders, and then it's not filling, and it's just dropping and dropping and dropping. And the spread is so big that I can't just market order out. You know, I could have, and it probably, obviously now, knowing that my limit orders were not getting filled, would have saved me money. But, you know, who's to say I wouldn't have gotten filled on a limit order? So it's like, what side of the trade do what do you look at? I look at what happened, not like made up things. Woulda, shoulda, coulda. So I'm throwing out orders. It's not filling. I'm seeing what's going on. You know, it's just drop going out of bed, and they're just they're just selling it. The sellers are on the bid now. They want out. They want out. And that was the trade. That's why I got in. Is it a good reason to get in? No. Just because of the fact that there's no R vol. This is why I try to help you guys with like knowing volume and whatchamacallit, relative volume, and I'm drawing a blank. I'm drawing a blank. It's got to have a news catalyst. It's got to have volume and oh my god, what is the word? Maybe I'm going crazy, guys. I'm going crazy. Maybe I need to get my head checked. Maybe I need to get my head checked. But yeah, that's all. We need to watch the volume. That's so important. You know, if we look at Spotify, which we brought up yesterday, last night we went over all the levels. You know, look at the volume. It's double, triple the volume. You're getting double, triple the move. You know, man, it's still going. Well, that was a good shout out. It lets me know that, you know, I can kind of do something here. That's so bad. I can't even look at that. I can't even look at it no more. But I'll be here. I'm just going to scan through some charts, guys. If you guys need anything. Well, like I said, what were we doing? We're running a test up here to 354.85, calling it resistance to pull it back down. All right, that was the thought, and that's what happened. And Baba is still making new lows, guys. Still making new lows. What a trade. What a trade of the day, guys. Holy cow. I took profits on it 3 times on those follow throughs. Um, let's see. Oh god, that's so bad. I can't sit here and look at that Carvana trade. So they're up a little. They're up a little over 50 some dollars a contract. $60 a contract. 70, 65. So those Baba contracts are up $60 a contract. That's not bad. You know, a nice slow momentum to the downside, like we said. Oh, my back is still messing with me. What else do we have? Maybe I'll just throw in a 1 minute, trade the SPY, or should I take a break? Because I don't need to get hurt anymore. I don't need any more. Start raises, I'll start holding on price target.
ELWS resuming. $78 down 28% off the lows.
Upstart's been a monster. If you guys don't know, Upstart has been a monster. There's some news out on Apple from Reuters about advertising. Not sure how that's going to play out, if it even does. Holy hell, man, I feel like I'm gonna get sick. What an idiot. What a freaking idiot. Goldman Sachs. Nvidia. Hey, there's a pullback on Nvidia, but not sure what it if it's worth chasing at this time. It's 10:54. It's almost 11 o'clock. Could we get a bounce? Could we see a bounce? I don't know. I don't know. I don't know if we can. SPY is under VWAP. Alright, SPY's under WeWAP. WeWAP. I was thinking of WeWork and Upstart. SPY's under VWAP at 450. Okay. What are y'all doing right now? What's everybody doing? I wonder if we can share this and actually get a group going on here. Maybe I gotta do more work myself. Oh, let's talk about this morning. Like, share, and subscribe if you guys can. This morning, I was up at 4 o'clock. I got up at 4 a.m. this morning. Got up, went to my secretary's desk. She wasn't there. I said, what time is it? It was 4. I'm like, oh shit, I'm early. So I said, you know what? Let me just start doing things now. And I thought about it, and I thought about it, and I thought about it. And I was good. I was like, I could have just stayed awake. Well, I watched the video. I don't know what it was. I watched something, but my cat's been coming in pretty early. Like I say, like 4 in the morning, she came in. And I almost stayed up. And just started the stream early. And I didn't, and so that's why I was late. I was gonna see if I don't know, because I have a secretary. I don't know if you guys know that or not. It's Vanessa. Vanessa's sexy too. She's so hot. She's so sexy. I actually start to think she runs the company too, but let's not tell her about this loss today. She's gonna be hot. She's gonna be hot. So I gotta make it. I gotta get it back. I'm not gonna play the game to get it back, but we'll get it back. We got a lot of volatility, a lot of opportunity tomorrow, the next couple days. Um, yeah, I'm not. I think FOMC is, man. I don't want to be the bearer of bad news. Just like when Vanessa told me she had, you know, she was, in a relationship. You don't have to know. I don't think there's going to be much volatility. I hate to be the bearer of bad news. I don't know if it's going to be that great unless we get a surprise. Unless we get something where they say, "Hey, we plan on raising the year-end target," stuff like that. I don't know if it's going to be that volatile. Look at Nvidia starting to pop. Let me see. Let me see here. Let me do this. You guys think Vanessa will lotion up my legs? Lotion me up? Think she will? I think she might. She knows me pretty well though. She might know what I'm trying to do. Look at this bull flag here, guys. It doesn't look that great. That's so ugly. It's so ugly. Yeah, it does. The only thing is just, I mean, you can even start playing the opposite at 12 o'clock, 12:30. You know what I mean? Like if we start to sell off, I'm already out. It's all the way up, ain't it? It's all the way up. Oh shit. Let's see. I fucking knew it, man. I fucking knew it. You piece of shit. Oh my god. See, listen. I knew something like this would have happened. I knew this would have happened, but I had to take it. I had to, I couldn't let this thing just fade off and me just turn that loss into something bigger. There's a double bottom. Now I'm seeing it put in a double bottom. See if it pulls back to VWAP. Maybe I buy the shares and go after it again. No, I'm just kidding. I'm done. I'm not fucking with Carvana today. I need some type of shares. I knew it. The problem is like throwing out the orders. I knew I should have just held. I was trying, but I'm like, man, I can't let this get any worse. That would be stupid. I've already given back Baba plus some. I shouldn't be in this trade anyway. There's not even 1 million shares being traded in X amount of time, in a 3-minute candle. So, it just made sense to just do what I could to just call it a loss and watch it rip higher without me. I knew this was going to happen. I had a feeling it was just going to roll over. I had to sit through the pullback, let it go up. I could probably tell you right now, it might be 1,000. I might have just cut the loss in half, maybe 800 to 1,100. 850 to 1,100. Let's see here. And this doesn't usually happen to me. You'll rarely see me take a loss like this. Rarely ever will I give back a trade. Again, I still have to add up the win, or the win on Baba, but I know I gave it back, so it's like it may not be that bad. Again, here it goes. There's level 2 speed up. Let's see. I don't even. That's crazy. 40. Wow. Wow. And to think, I think I limit ordered out of this at like 111, 110. You know, there's an extra $40 a contract. You know, wow. That's bad. That's so bad. It's gonna go right back up. Again, sometimes it's like this in trading. You get those sick feelings in your stomach where you could throw up. It's all right though. We'll get it back. I'll get it back. I won't size up to do it either. I'm just gonna do the damn thing. That's all. Um, what do you guys think? You guys think we get think we get do you think we get this rate hike and then pause, or do you think we get this rate hike and then get another one? It's working its way down. See what it does off this trend line. Not even. There's just nothing there. I don't think. There's nothing there on it. And look, it broke the uptrend. I think it broke it though. Because now I'm doing it backwards. Oh, my back. My fucking back. My flipping back. And my account. My account and my back. It really put a hurting on them. Let's see if Vanessa will rub me down. I might call her in here. You're such a piece of shit, Carvana. You really are. You're such a piece of shit. Watch it right now start to go down and sell off just because it drug people back in this name. And I feel like Benzinga was doing a little promotion there, having it come through the scanner. It does have a wedge. The SPY does have a nice wedge here. GLTO, Galecto to join the Russell the Russell Microcap Index. Let's see here. AGILO or AGIL. So look, there's your wedge. See that downtrend? See how they keep smacking the downtrend? It's putting in a little wedge here. And I still feel like Microsoft could do pretty decent on earnings for the reasons I gave. Alright, it broke up out of the downtrend, even though there was two. Or am I reading this wrong? I think you might get some upside. Maybe it comes back up here to put in a lower high. I'm going to make something to eat real quick. I'll be right back. Thank you guys for hanging out. We do have, if anything comes across the scanner, we will let you know. He's being a bit quiet today for whatever reason. But yeah. So yeah, big loss for me today. What's new? It's life. I'm used to it. Life sucks. You know. My girl's leaving me, so why not my account too? You know what I mean? Everybody's saying goodbye. Let's see. I won't let that happen. The account I have control of. But $380. I still think if the Qs can hold up, maybe we have so much shit that's gonna start popping off tomorrow. I think Thursday's really gonna be the day. Tomorrow, Thursday, and Friday. The only reason I say tomorrow is because of tonight's earnings with Microsoft, Google, all the other ones. All right, so I think you could get some nice volatility tomorrow, and then even tomorrow night we get ServiceNow. These tech companies that might be a little overvalued. We have Boeing. Fucking Carvana's at almost at 150 again. Jesus Christ. Don't play Carvana yet, guys, if you guys are tempted to. That's a nice break and retest on Microsoft. See if it can get a bounce here. The volume's not necessarily there, though. It's almost lunchtime. Oh, it's only 11 o'clock. I would like to see if Microsoft can bounce. The SPY looks like it wants to bounce. So there may be a possible long here. Look at that. Boom. A break, retest, bang. Let's go to new highs. Where would be the targets? My target's right here. This is going to be my first target. Let's see. We got to break through the high a day. We break through the high a day. I'm looking for 251.50 to be the take profit area if we're able to get there. Yeah, the market expects it. So I don't think the market will go down. The only thing that I would watch for is the it's not the rate hike. It is, you know, balance sheet reduction. That's liquidity. And once there's liquidity problems, there's no going back from it other than adding liquidity. So there goes the SPY. I was just getting ready to come on and say, looks like the SPY can pop. Looks like MSFT and Meta and Microsoft and whatnot are trying to get a pop here. It might roll over, but we'll see. But yes, I think
PG&E announced deployment of distributed energy resource management
I
system
think
on Microsoft Azure.
it's not going to be the hikes. That's why I don't think the Fed meeting is going to be that volatile unless we get something on balance sheet reduction. Because right now the Fed's balance sheet's at like just under 9 trillion. They said they're supposed to like lower it. Look at Baba just go. Baba's dumping. $88 put $8. Grabbed a couple. Oh shit. Yeah. Look at it. It's just falling out of bed. I was in the 96s, I think. Like, not that I think, I know so. And I think they should be up a decent amount. Um, yeah, the 96 put for this week. Yeah, they're trading at 235. My entry was 145, so you're almost at 100% there, kinda. 1 plus 1. Nah, it's like for it to be 100%. 14 plus 14. 28. So if it gets to 28, these contracts get to 28, they'll be at 100%. Yeah, it's because you just got that extension. It just extended here. Boom, boom, boom. I'd be taking it because I'd be taking it on this because I mean you don't have to, but look how far away you are from VWAP, and it pulls back. It pulls back. It's going to take your contracts red. Man, 88's so far out. Damn, you still got to go all the way down. Holy shit. Holy shit. Damn, them things are far out. Oh, still going. Wow. Well, we told you. Short Baba. That's a nice trade there. Is it QS QuantumScape? Yeah, QuantumScape. Here goes a SPY trying to get its upside. I still feel like we're trying to get some more upside. What do you like QuantumScape for? You could. You could. You quite possibly could. I don't know what a rip would be. You might get like a 1.5% day. That would be a surprise. Yeah, you would probably get a run to all-time high. You know, you would start thinking about making a neck because that's a surprise to the market. The market didn't expect that. You're ripping to the up or downside for whatever reason. I don't know why you would go to the downside, but again, you know, unless he comes out and says like, so you got to think, how does the market take it? Does it say, oh shit, what's going on that the Fed can't raise rates anymore? What's going on that they have to cut rates? It's not good. Sorry, hold on. I have crackers in my mouth. I'm just saying, like a pause, the market will wonder why Fed funds rate you know, priced in a 90% chance that we were getting it. The market's going to wonder why we didn't get it. What is the Fed seeing that we're not? You know, I don't expect that because the Fed is and Powell have already came out and said, you know, they've mentioned volatility, and that's, you know, rapid price going up and down. So the whole point of them talking and doing things is to let the market know what it needs to price in, that they can tell them, it tells the market what it is they're going to do, and they do it. You know, they don't want to surprise the market, even though volatility pays. Yeah, we still got a little struggle up here though. And you know, this trade wouldn't have been so bad if number one, even with the fill that it gave me, I wasn't too happy about, but at least when I throw some limit orders out there, like, could you give me, like, it was so bad that I couldn't even get filled on the limit orders that I was throwing that were under ask. Damn near throwing them out, you know, at the bid, and they weren't getting taken. Again, maybe I should have held it. Maybe we get like a gap up tomorrow. But I stopped out because unless we get like a million, like a million, like 1.5, 2 million share candles, you gotta wait. And then I will do the math on it later on. I'll see what it was. You know, because we got a winner on Baba. I said it this morning. I said, guys, I want to get short Baba. We've seen this high volume. Look at that volume on this. It just crashed. I'm like, what's going on? I didn't know if there was news or not. I said, a bounce back to VWAP. We're getting short Baba. I'm getting short Baba. You do what you want. This trade is probably damn near 100% now. So, and I also did not call out Carvana for that very reason, that there was low volume. I got hurt with those limit orders. Couldn't get filled, and it just dropped out of bed without me. And I couldn't sit there to just hold on to it, even though I thought it would curl itself back up to like help the loss out. I mean, that break is on lower volume, but you know, whatever you got to do, man. Whatever you got to do. That's why you want to give yourself time and work on entries. Like if I was to go short, I probably wouldn't do it here, but I could see here at 455 going short, maybe putting on a small tier position. Just putting on like a couple, whether it's 2, 3 of them, 5, 6, 10, whatever. I don't know what's big or small to you guys, but definitely up here. You know, you gotta think this is going to be resistance until it breaks and pulls back and holds it. So if I pull like right here is a base rate there that matches up with previous high a day. See what happens if you reject there, or if you break, pull back, hold it, go higher. I don't know. Maybe there's an anticipation of Google earnings being decent, which I think they will be. It's just Google, Meta, you know. What's the outlook? Man, I hope people were able to take advantage of BABA. I really do. These are the trades that last all day long, and they just fall out of bed all day. Huge double-digit gainers there, guys. We're so close to being 100% on these contracts. So I hope you guys called. That's why you guys gotta tune in, listen, like, share, you know, and if you don't know what the plays are or whatever, and you're listening at work, just type it in chat. You know, ask me, you know, if I have any plays. You know what? And I think, did I put it in chat? I don't think I put Baba in chat because it was early this morning. No, I didn't. I said it on the mic. I'll make sure to start doing stuff like that too. Maybe putting it in the chat. I'll be right back. I'm gonna go get a Red Bull and I'm gonna grab something to eat real quick. I'll be back in like 2 minutes.
Demand growth. After all, when we take a look at where the economy is today in terms of output and employment relative to where we thought it would be, before the pandemic hit, we're about on track. Before the pandemic, there wasn't a sense that the economy was out of balance in an inflationary or recessionary way. So it's not obvious today. In other words, there's good reason to think that inflation is going to keep continue moderating,
right.
Even without further policy action.
All right, that's fair enough. But a lot of people think that maybe the data that we're seeing in the economy, whether it's here in the U.S. or globally, may be lagging the action that's actually happening. Actually, earlier today, I spoke to the incoming co-CEO of Oaktree, Armin Panosi, and he believes that later this year we're going to see interest rate sensitive industries and also cyclical industries start to default just under the pressure of this higher cost of capital.
Well, for sure. And the Fed policy is restrictive by their own admission and by every reasonable measure. It's not severely restrictive, and this is going to affect principally in the interest-sensitive sectors such as housing and construction. But at the same time, household balance sheets are in pretty good shape. Incomes are growing. The fiscal stance is going to continue to be supportive as there is still spending left that will be felt in the economy from earlier measures. So there are good reasons to think that this economy could avoid a recession. But there are also good reasons to think that growth is going to be slow.
Then how do you interpret the fact that the yield curve has inverted 100 basis points for the third time in the last year or so, more than 100 basis points?
No, that's good, man. You just,
economic indicators have shown
you know,
several months that
learn from me. Don't do what I do.
a recession.
Don't have a winning trade and then go on and like
You know, the historians
overdo
look
yourself
at
and
say,
turn it into a
"That's
loser.
recession."
Or you'll be a loser.
If you remember, typically when the yield curve is inverted,
Could look for this area to be resistance, but I think we're going to start trying to curl ourselves up.
Down from a situation in which there was excess demand. As I just suggested, if we look from a pre-pandemic perspective, it's not obvious that the economy is so out of balance. On the other hand, the Fed has restrictive policies, and that has caused the inversion, as it appears that investors are somewhat more optimistic about the outlook for inflation.
All right, so John, you're very optimistic, but I think even you admit your base case has a very narrow path to that soft landing. Have you factored in a possible UPS strike? Some other labor negotiations going on around the country right now that's going to increase the cost of labor and increase the cost of goods, and that UPS strike possibly creating another shock to supply and another shock to the supply chain?
Well, I wouldn't overemphasize the action even of an important company like UPS. Obviously, there are risks that could create a more severe outlook for the economy. But this idea that there's a narrow path assumes that somehow that a recession is inevitable at this point, and it will only take some good luck to avoid it. I'd put it more the other way around, but we'll see.
If I were in the news conference tomorrow, one question that I would ask Powell, and I won't be, so I'll ask you, John, is that so he wants to see credible signs that inflation is moving down toward target, consistent signs that it's moving down towards target. Do you have to see a more pronounced weakening labor market to see that?
No, I don't think that that's obvious. Clearly, the growth rate in employment is going to slow towards the underlying growth of the labor force itself. But at the same time, I think look back before the pandemic, the unemployment rate was about where it is now, and there was no perceived problem with excessive wage growth. And so far, I think it's hard to think or hard to demonstrate that wage growth to date has caused inflation rather than followed inflation. So a lot of it will be determined by the outlook in the labor market, but it doesn't strike me as obvious that right now the unemployment rate is too low and the unemployment rate must go up to produce a convincing move towards the inflation target, as I would say most commentators and some officials have stated very clearly. In other words, they want unemployment rate to go up in order to hit the inflation target. I don't think it's.
I don't have the mic on. Sorry. I still think it's going to go higher. I do.
John Lipsky from MBER.
I really do. I don't know when these shares.
Yeah, not a negative outlook.
I don't know when the.
No, and it's important because he's the NBR. That's the official recession data. Time now for a news update.
I don't know what.
Hi, Leslie.
Hey, Sarah.
I don't know.
I'm
I just think it's going to go up.
News update at this hour.
I don't know when the
LeBron
shares.
James' son Bronny is recovering in the hospital after suffering cardiac arrest. That's
Oh my
according
God.
to a family spokesperson who said
I'm
it
sure he's
happened Monday
fine.
during basketball practice at the University of Southern California. The spokesperson went on to say that Bronny is no longer in the ICU.
Bronny?
And is in stable condition.
What?
More backlash in Israel over the government's controversial judicial overhaul.
That's
measure.
cool. Whatever they
Israel
feel.
Medical Association ordered doctors
I'd be like,
to
Mom, Dad,
support
Bronny?
around the nation
Really? You're calling me fucking Bronny? You couldn't give me a fucking name?
confrontations. Labor leaders
Come
have
on.
threatened a wider strike.
Oh, that's Bronny over there. Bronny. Nah, motherfucker. Bronny is on the court in the NBA. Okay?
New video shows
Not
the
LeBron Jr.
Ohio family was reunited with their missing 4-year-old boy.
Fucking
The boy
Bronny.
disappeared
Oh my
while
God.
playing in his backyard, and soon Ohio
Oh
State
my
troopers
God.
were called in to search for him. A helicopter crew spotted him in a bean field and guided the search party.
But that's cool, you know,
to his
whatever
location,
they,
he was
you know,
found
whatever they
safe.
do.
What a happy
That's
ending
fine.
to that story. Send it back
I
to
couldn't do that to my kid.
Yeah, wow. And all on tape. Leslie, thank you. Leslie Picker. After the break, the Senate probing billionaire Leon
She got some work done.
$158 million in payments to Jeffrey Epstein.
She got some
Details
work
on that
done.
After the break.
Plus, watching RTX this morning, better than expected earnings overshadowed by the disclosure.
She got
of
some
a
lipo
deep
suction, or
theft
not
Whitney
lipo, but
engines.
she got,
The company lowering its free
whatchamacallit.
cash flow expectations.
Oh,
As a
come
result of
on.
that disclosure, the stock now at a 9-month low.
I wanna
shares down
see
double
it.
digits. The airlines
They're not
also
gonna
down
show
on this
her.
news as well. Much more squawk on the street coming up in a moment.
Fuck it. You guys want to talk about Bronny? Bro's daughter is named Branya. Oh my God! Yo, why are they doing that? Why would they do that to the fucking kids? Come here, little Bronny. Nigga, Bronny is on the court in the NBA. That's not Bronny. Okay? And Branya? Oh my gosh. Sounds like it's a little selfish, right? Yeah, I'm gonna name y'all after me. Because I'm that shit. I'm that shit in that toilet. I'm the shit. I'm gonna name y'all after me. You can't give them their own names or add like a junior or something. Bronny and Bronya. Jesus Christ. Come on, Bron. Get your head out your ass, bro. So what? You make some money. You're good at basketball. You know, you're good at basketball. You don't have to do that to your kids. That's so funny. Yo, I wouldn't doubt it, though. I would not doubt it. I would not doubt it. Bro, you're telling me they named the kid Bronny. Bronny. Oh my God. Yeah, Spy's going off. Alright, this is it. Here we go. Short squeeze. Spy calls. Let's lose some more money. Just kidding. I'm going to buy the pullback. I'm going to be buying pullbacks. I told you guys this morning. I said, hey, I think we're going to go to the upside. You know, in the flesh, right here, live. I said, I think the Qs, the Spy, is trying to work themselves to the upside. And what are we doing? What are we doing? What are we doing, Brownie? I gotta hashtag that for sure. I'm gonna bring his ass over here and talk to him about it. Be like, yo, tell us how you feel. I want to sit down. I want to talk to you. Is everything okay? How do you like this name? How do you feel? We need to know. The people need to know. Are you alright? You know, it ain't your fault. You know, don't think this is your fault. This is your dad's fault. He ain't that smart. That's why he had to play basketball. And yes, it's a little bit selfish to name you after him.
Good morning, Frank. Well, that
Like,
Senate Finance Committee sending a
I'm doing it. Watch. I'm gonna see if I can find Bronny after he gets up out the hospital, and we're gonna have a talk about his name and how he feels.
Ron Wyden's letter says the investigation, which has been ongoing
Watch me.
for over a year, is part of the committee's broader look at tax avoidance and evasion by the wealthy. Wyden saying Black used a type of trust called a GRAT to avoid hundreds of millions of dollars in taxes.
I think he'd be down with
Grats are
that.
common among the wealthy, but
I
Wyden
think
said
Bronny
Black
would be
may
down
have
with that
received
because I think he
improper
feels the same way.
payments
Like, why you
from
gotta
his
do me
trust.
like that?
Now, the more
He said
explosive
Bronya.
case in this letter was over Black's
That's still so
$158
funny
billion
because I wouldn't put it
payment
past him.
to
Don't even
Epstein
let them know about it because
Black
if they have a girl and they find out you
estate
know what I mean
planning
that could be a
Wyden
thing.
calling the payments, quote, an
It don't sound
extraordinary
bad. I mean, that sounds
compensation
better than
scheme, which
Bronny.
involved amounts that far
Like-
exceeded those paid to other professional advisors involved in your estate and tax planning.
Bron.
Wyden saying Black has refused to provide detailed answers to either the trust or the payment questions. In a statement, Leon Black spokesperson saying he has provided the committee with over 150 pages of personal tax information and that the letters, quote, attempt to smear Mr. Black by association with his former family office advisor is misguided and improper. Spokesperson adding that the trust
I don't know. I
transactions
just
were
personally
both
couldn't do
lawful
that.
in
Even
all
if you're good at
respects,
something, like,
were
you know what I mean?
conceived
Let
of,
them be
vetted,
them,
and
or give it
implemented by
make it a
reputable law
junior or
firms
something.
and
I don't know.
tax and
That's
other
all I gotta
advisors.
say about that.
Frank, a lot of new questions here between the relationship and the money flow between Epstein and billionaire Leon Black. Frank?
All right, Robert, thank you. Our Robert Frank reporting. All right, coming up here on Squawk on the Street, Starboard's Jeff Smith is next. We were talking his current position in Salesforce.
Can hear. I don't know if
the
you guys
state
can
of
hear it in
activist investing, and
CNBC.
if he has any other
There's
companies that are
ambulances
now
and
his
stuff in the
sights. You will
background.
not want to miss this interview coming up in just 2 minutes. Much more Squawk on the Street back after this.
I'm gonna grab a Red Bull, and I'm gonna start looking up Bronny's information so I can bring him on, and we can talk about this because I think this needs to be talked about. I never knew that. I never knew that he did that to him. That's crazy. That's so selfish. It's not even funny. And Bron goes around telling people what they need to do, this and that. Nah, bro, we gonna tell you what to do, bro. Don't do that to your kid. That's crazy. That's so crazy. That's crazy. Fucking Bronny. Let's see if we can get a pullback either to the highs on the Qs. Let me actually pull up NASDAQ futures real quick, and we are going to go see if we can't pull out a I want to see if we can pull out a nice winner here. We're getting an increase in volume. Come on, come on, come on, come on, come on, come on. Come on, let's go, Brownie. Hustle up. We still have resistance up here at this pivot. 157 on futures. Let's see here.
Health.com.
Welcome back to Squawk on the Street. Activist investor Starboard Value has made a splash pushing for changes at Salesforce, the stock up more than 50% since they announced the stake last October. And then earlier this month, the firm announced a 5% stake in Canadian energy firm Algonquin, calling for the firm to reduce its gross leverage to industry standards 5 times, improve earnings, 75 cents by the end of 2025, and some other changes as well. We'll talk about it. Joining me to update us on these moves and where he might be looking to invest next is Starboard Value CEO Jeff Smith here at the New York Stock Exchange. Welcome. Good to see you.
Good to see you too, Sarah.
Just one on the overall environment. Market's been up, excited about the end of the rate hikes, excited about a soft landing. What does that environment mean to you in the way you operate and find targets? Is this a good environment, target rich?
Yeah, I mean, what we want more than anything are healthy markets, and I think we're seeing healthy markets. I mean, you guys talk about it on CNBC all the time. The market and the index is up dramatically, but it's really driven by a subset of stocks that are up a lot, and the rest of the market is a mix. And so from our standpoint as stock pickers, this is a great stock pickers market.
Okay, my mic wasn't on, but I was saying the Qs are ripping, so let's get it.
Stocks go up. When you see them disappoint, their stocks
The job is to not lose money, but I feel like maybe that's the destination that we're headed. I want to pull back on the Qs. I want to get a pullback, test the previous pivot high right here at the initial morning high of today.
We're looking at them. That can be a great opportunity for us.
Your gap fill.
This type of market is very healthy.
So here's your gap fill. We don't have that much room left to go to the upside. I might just have to let it go.
That you haven't announced yet.
You know, maybe the Qs have some room, but
Again, what we look at, we look for companies that really good businesses and where we can help them improve mostly on the operations side. So can we get them to perform better? Have
that hurt.
And if they're undervalued,
I don't know how much room we have. I really don't. I don't think we have that much room.
So one of those is,
I mean, where are we going to go to? This gap fill at 379.85 to 380, and then we pull back, or do we rip above it and continue higher? I think we gotta wait. I think we should wait a minute. I said it yesterday that I think we should have went long yesterday. I never took it. I never took the long. I don't even know what I did yesterday. I can't even remember. I'm losing my mind. It's my dad's fault. Fucking naming me after him and some goofy name. Fucking Bronny. He probably don't even want to play basketball now. Like, that's out the window. I wouldn't blame him. Fucking did him dirty. Did him dirty, man. That's crazy. I never knew that. I can't believe I didn't know that.
So we also think there's extra upside above what we're even talking about if they actually monetize the water utility.
All right, so there's the SPY, there's the Qs.
But in general, what's gone
Let's
on
see if
is
we get this pullback.
Made the traditional utility investors a little more nervous. They went out and tried to do a large acquisition, which actually didn't happen. And their leverage is higher than their peers.
Bob was sitting flat. So I'm going to grab a Red Bull, and I will be
have more leverage or having
right back.
Cash flow issues are getting punished. This company has more leverage than its peers. So it's not as it's not as investable for the traditional utility investors. But the good news is that's easy to fix because those unregulated assets that they own are not really being fully valued. They're somewhat obfuscated in the portfolio. The traditional investors don't really want them, but they're hugely valuable. So we believe they can go out, they can sell the unregulated business, and they can use those proceeds, and they can pay down the debt to around, as you mentioned, around market levels, and then they can actually buy back shares. And if they do that, they can end up with a potentially lower payout ratio than their peers, which makes them really safe, maybe even be able to raise their dividend. And when you look at that, you would say, wow, if that were to happen, do I want to own a better utility? Because their asset mix is actually better than their peers. It's greener, it's cleaner, and it has the water business. So do we want to own a better utility at a 5+% dividend yield versus the peers at a 3+% dividend yield? I would think that people do.
What is management's attitude toward your proposal to spin out the renewables business?
Well, so far it's been very, very constructive. And they've announced already that they're going to explore alternatives for the unregulated renewables business. So we seem to be going more along a similar path, and hopefully we can accelerate that and work constructively together to create a lot of value for the benefit of shareholders.
Speaking of working constructively, we haven't talked to you about Salesforce. You were the first, I believe, of the 5 activists to get into this stock last year. There's been a lot of progress. Are you satisfied?
We love this company. We love this company. We love this company. When I came on CNBC and talked about Salesforce, I talked about it being a company that we never thought we'd have an opportunity to be able to own. We still feel that way. We've developed a great relationship with the management team, a great relationship with Mark as the CEO. Very happy with how we're working together. There's still more to be done, and I think they would agree. So if you go back
on margins?
Yeah, mostly on margins, but on both. If you go back to when I came on air and talked about this, which I think was about 9 months ago, we talked about it in terms of Rule of 40 math, meaning revenue growth plus profit margin. And when you compare them to their peers, they were at 37, 38%, and their peers were about 50%. So a huge gap, a 1,200 basis point gap.
You always looked at Oracle, right?
Yeah, and a few. And when you compare them and when you look at it that way, the issue that was going on at the time is that the market expected their revenue growth to come down. And if that were to happen, it was going to be something where they were worried, because if the margins don't get better and revenue growth comes down, the market was really concerned at that point in time. We knew there was a huge opportunity, and to the management's credit, when we sat down with them and talked to them about having to balance growth and profitability, having to be competitive for shareholders. They're competitive in their business. They want to be number 1 or number 2 in every product line that they have. We want them to be number 1, strive to be number 1 in shareholder metrics, be the best performing operating metric company. And so what they've done is pretty dramatic. I mean, they've raised their margins by 800 basis points. Revenue growth did slow a little bit, which was expected. But now they're kind of still at that 38, 39% on Rule of 40 math. So there's still another 1,000 basis points of opportunity. But we expect that they can get there. We think that there's another 500 plus basis points of margin opportunity, and we also think there's another 500 basis points in growth, because the 10% growth rate should accelerate back up to 15%. So we're very, very excited. If they can do that, we think it's probably $15 a share in free cash flow in the next couple of years. We think that means the stock should be over $300 a share. It's still undervalued, and we're, as you can tell, we're very excited.
You're excited.
About it. Yeah.
No, and what I've heard is that you guys are working very constructively with management there. I do wonder, though, if you're expecting margin expansion, whether you're willing to tolerate some pressure on margins because of all the investment in AI, which this company is doing, as are so many.
Yeah, there's enough room for them to be able to do both. I mean, this is a company that before we got involved, and they weren't wrong, but before we got involved, they really didn't focus on bottom line profitability. They were really just focused on their growth, because that's really what investors wanted. Now that they're focused on it, I mean, they took about $2 billion in costs out of the business. There's room to be able to invest in growth and also to be able to work on your profit margins. I mean, if you keep growing, the incremental margins in this business are tremendous, and we expect them to continue to grow at 10 to 15%.
What do you think of their AI strategy and how it could transform the company?
Look, AI, none of us really know. I mean, AI is an enormous opportunity. It's an enormous opportunity for Salesforce. It's an enormous opportunity for a lot of different companies. We're pretty excited about their opportunity.
What about potential to, and investors still talk about this, eventually down the road, separate Slack or a Tableau? Is that something that would be part of your playbook?
I'm not so sure. I mean, I think that they actually fit in with the product suite. We would expect them to integrate them more and allow them to be tools that keep everybody. I mean, customers are unbelievably sticky. Keeping them incredibly sticky is important. So we would leave that up to management to make that decision. From our standpoint, that's not an area that we're pushing.
All right, but you still think undervalued, $300 a share?
We think it could be more than $300 a share. If you look at $15 in free cash flow per share in a couple of years and you compare that to pure multiples, you easily get over that. And we think that they are now focused on the right balance of growth and profitability. The management team seems to be moving in the right direction altogether. The culture has embraced this. So, yeah, we have a high degree of confidence.
Are you buying into the AI hype cycle? I know you're also in Splunk, for instance, which is also trying to increase exposure there.
You know, I don't think we're thematic in that way. So we think AI is an incredible opportunity. There's been a few technology advancements over the last 20 plus years that have been able to do things like that. I mean, the internet was one to start with, and then you keep going and maybe you talk about cryptocurrency or blockchain, and then you might talk about AI, and I'm sure there's others in between. So I do believe that technology will continue to advance. I believe it will do two things. It will make companies more efficient. It will also increase demand for products for the companies that do it right. We are excited. You mentioned Splunk. We love Splunk. We think Splunk is very, very similar to Salesforce, just slightly behind in their execution. So remember, Salesforce was able to do this with Mark Benioff as the CEO running the business. Splunk had to bring in a new CEO and a new management team. But it's a similar opportunity as a company that was not focused on profit margins, but instead just focused on growth. And now they're focused on a balance of revenue growth and profitability. And with that focus, we actually think that they can almost double their free cash flow per share in the next couple of years.
Harder to do, though, with both of these companies in an environment where we're not in recession, but there are concerns about cloud spending and IT budgets getting cut, even with the excitement around AI.
We actually think it's the other way. We actually think it might be easier for them to do. So you're in an environment where it's more acceptable in the market and in the country in general for there to be layoffs and for you to hold the line. So these companies that are very profitable can now focus on getting to the right size and the right scale and to put their human resources and human assets in the right place and take them away from other places, even if that means some people need to be laid off. In some other environments, that's harder to do. In this environment, we think it's a little easier to rationalize the workforce. So I think they can do both. They can grow into these businesses and they can also manage their bottom line profitability.
When I think of you, I sometimes think of the restaurant space. We've talked before about Papa John's and the changes you made there, about Darden and the changes you made there. And I'm curious, and I know you're stock picking, but how the industry looks to you now. They went through a huge COVID disruption, then they dealt with inflation, and whether there's some good opportunities.
We do think there are good opportunities in the restaurant space. I'm not ready to talk about it, but we do.
So how's everybody doing? Sorry, I didn't have this up. I apologize. I thought it was up.
The restaurant space. The restaurant space in general can be cheap and may have overreacted, and then you have to put it into two buckets. You have to put it into the delivery carryout business and then the full service business. And as you know, we've been in both with Darden and with Papa John's. There's interesting opportunities. And we'll see. We'll see. Again, we talked about it before. It depends whether things come into our strike zone and that we can pounce on it.
Well, certainly winners and losers in this high interest rate environment. Jeff, at least we got a hint. Thank you very much. Jeff Smith of Starboard. Getting some breaking news here on UPS. Frank, I'll send it over to you. You've been following this one closely.
Yeah, thanks a lot, Sarah. We are following some breaking news. UPS and the Teamsters announcing they've reached a tentative agreement. This impacts 340,000 UPS union workers.
My stuff was paused. Sorry.
So just looking at the Teamsters release.
Come
right
on.
now, they say UPS has put $30 billion of new money on the table throughout the length of this contract. We have reached out to UPS. No response so far. Here's a few of the highlights from the release. Existing full and part-time UPS Teamsters will get $2.75 more per hour this year.
See,
and up
there
to
it goes.
$7.50 more per hour.
So
over the
UPS,
length of the
guys,
contract.
UPS.
One of the big issues of contention was the pay for part-time workers. Part-time workers will be bumped up to $21 per hour
UPS.
immediately. More wage increases
SPU.
throughout the length of this contract that will impact both full-time and part-time workers. The release also highlights that UPS delivery drivers will be among some of the highest paid in the nation. Looking at shares of UPS right now, up more than 1.5%. Following this news, again, UPS and the Teamsters reaching a tentative contract. This impacts 340,000 union workers that work for UPS. Shares of UPS up over 1% right now. We've continued to talk about the impact that this could have had, potentially a $7 billion negative impact on the economy if there were a strike. That strike appears to have now been averted. The contract now with a tentative agreement. The deadline was July 31st, something we continue to watch. But again,
Is he just
shares of
repeating
UPS
himself?
Rising higher, now 2% higher.
Sounds
after
like he's
this
repeating
tentative
himself.
agreement that where UPS and the union, the Teamsters, have agreed to broad wage increases across the board.
I'm back with
What?
relief for
It
the
is a
overall
sigh of
economy.
relief.
I was in like a mind
Supply chain and
flip.
inflation.
Yeah, just getting a statement from some of the customers.
Did you guys see
before this
that?
deal was reached, companies like Macy's saying they have ways to try to mitigate the impact, as well as Amazon.
All right, Frank, glad to have you here for that
Thank you,
breaking
Sarah.
news, and thank you for being here. That's going to do it for us here on Squawk on the Street. Courtney Reagan.
Bro,
and the
you
Halftime
just put
Report
us on a
the other
mind
side of
trip.
the break.
Look how small she is. Phew. I don't even want to say it. I could make a joke right now, but I will hold back. You know, I'll hold back. She's just small. That's all I'm going to say. That's all I'm going to say. So what I'm going to do now is I'm going to run through this scanner. I'm going to see what's working, not working, while I sit here and wait for the SPY to potentially pull back. If I get the pullback, I would love the pullback because I wouldn't mind getting long into this Microsoft earnings. I wouldn't mind it at all. Come on. Every time I just like breathe on my mouse, it just has to touch it and fuck everything up. I think we need a pullback, guys. We need a pullback right here into this previous pivot. Look at the gap. You see that? We call that a gap. And we kind of just extended ourselves into the gap. And I want to see if... Okay, so it does come all the way down. Let me see here.
Welcome to the Halftime Report. I'm Courtney Reagan, and today for
There's
Scott Wapner,
there
front and
is
center
the
this hour, a moment of of truth for the rally as
Pullback.
big tech
Let's
earnings
see if we
get
get this
underway.
pullback.
Microsoft and Alphabet kick things off in
Let's
just
do
a
it.
few
Let's see
hours
if we
from
get this
now. The investment
pullback.
committee is standing by to break down what is at stake for these critical reports. So joining us for this hour is Josh Brown, Jim Leventhal, Stephanie Link, and Jason
Downtown
Snyder. Let's get you a quick
Josh
check on the
Brown.
market to see where things are as we await these key results after the bell. We are in positive territory, although marginally
Yes, we
so
are.
across
I
the
said
board,
it this
with the
morning.
Nasdaq
We'd
leading
probably
the
be
way,
in
higher by
positive
0.6%.
territory.
Dow Jones Industrial
We're trying to
averages
curl
been
ourselves
slightly on the
up.
flat line today, but
But
right
not
now,
none of y'all mother
trading
truckers want to listen to
above,
me.
That marker at 0.2%. Of course, the yield on the 10-year sitting
Not
below
one of
4%
y'all.
at 3.89%. We are
I'm just
leading the way
joking,
with
by the way.
materials and information technology
screen's
for the sectors.
frozen.
Financials and industrials are lagging. VIX, though, is still pretty quiet, below 14, and WTI is higher today, but still sitting just slightly under $80 a barrel. So we got a lot going on here. We have a Fed decision tomorrow. We've got big tech earnings. Jim, I want to start with you. Alphabet is coming up here after the bell. There are so many different ways that we can slice this, but if you're an investor, what is most important to you? Is it cloud? Is it AI innovation? Where are you looking?
Well, it is AI innovation, but before we go there,
because Google record of telegraphing enough to the street to get them comfortable with the number that they end up reporting. This is not a company that plays the game particularly well, and there have been over the last couple of years some, I don't want to say shockers, but some downside surprises. So if like your sole reason for buying it is because you think the earnings coming out are going to be an upside catalyst, well, you know more than I do. So Gazunga's I go with God. I don't invest that way, and I'm not somebody that trades stocks specifically for any given earnings report. I would rather trade the reaction. What I would tell you is if they take this stock down because it's like light by a penny, or they say something about the ad market that people don't love, for me, that would be a buying opportunity. Google is going to be one of the preeminent players in AI. Sergey Brin is back. Not just for lunch, he's back in his office. The Wall Street Journal is reporting that extensively. The founders of the company have returned, like Gandalf in the Two Towers, just at the moment where they're needed. And Google's working on its own AI environment with TensorFlow and its own chips, tensor processing units, or TPUs.
You guys hearing this?
They're not going to be left out of this race. I just popped into a Google Doc the other day to work on something for my daughter who's in high school, and the Google AI suggestion engine is in full force in there, doing all of the things that Microsoft has going on with OpenAI. So I think this is a long-term play on the big themes that are going to take us into 2030 in tech, and Alphabet is going to play there. So if you get a bad reaction on an earnings report, my instinct would be to buy it and not sell it.
Jason, I'm wondering, though, how much of the stock move for Alphabet is because of the excitement around AI. It's up something like 38% year to date.
Yep. No, and I think that's played a role for all the mega cap tech stocks, honestly, this kind of the discussion around AI. And for me, as it relates to Google tonight,
Where's Judge on a week like this?
What does ad revenue look like
He
going
took off on the
forward?
most
I know
important
last
week.
quarter There's a little bit of a slowdown there. I'm also looking for the cost cutting. Obviously, they've laid some people off. Let's see what the material impact on margins are going forward. And Google Cloud. Google Cloud was the first quarter of profitability last quarter. Let's see if there's some continued acceleration going to this quarter.
It's an interesting point about cost cutting. A number of the names that reported here in the last 24 hours sort of juiced up earnings by a lot of cost cutting. Stephanie, you were nodding your head about ad spending. Of course, that's a big one that we think about. What about also the YouTube revenue growth? Can the growth slowing? Can we reverse that?
Yeah, I think you can. I think it is all about digital ads. Really, I do, because I think you are going to see a rebound in that, and that will be positive. And then it's also going to be about cloud, what Jason just mentioned, right? Those are the two pieces I think that people look for, and also maybe there is some margin upside from the cost cutting, and so maybe you get some operating leverage if you get the top line a little bit better than expected. You know, I own Meta, and I care about digital ads for them too. So I'm watching tonight very closely as to how it pertains to Meta tomorrow.
Yeah, and obviously we can go there since you brought it up. The year of efficiency with Meta. I mean, is that a big part of the thesis for why you're continuing to look at?
Oh, and I wanted to say, if you're sitting in your seat all day like me, being a fat fuck, get the fuck off your ass and do some push-ups and sit-ups. Let's go. I'm doing mine.
It's also about revenue.
Stop being a lazy piece of shit.
Click to message, right? And then if we get digital ads on top of that, that should be
It's
positive.
just motivation. Don't get mad. I'm just kidding.
News is priced into the stock,
But seriously,
right? I mean,
get up off that ass.
Last year, now everyone's upgrading.
Get to
They got an
work.
upgrade today. So I'll stick with it. I just don't think it needs to be 7% of my portfolio.
What about Threads? What do you expect to hear there? It was all this excitement in the beginning. I signed up the first day and haven't looked at it since.
Yeah, it seems to have lost a little bit of momentum, right? It definitely has. So I don't think that's the growth driver for this particular piece of their business. But I do think AI is going to play a very important role overall. It already is.
It'll be actually fun for me because my back is killing me
There's a lot of ways to win with this name.
from sitting in this seat.
In trim, as I was buying all the way down last year.
Hey, but you're winning it now. Jim, what do you make of a name like Meta, where there's so many different ways that you could play it? There's things we could talk about with the metaverse, which is, of course, the reason why they changed their name, although they say that. I understand that's sort of the longer-term value from their perspective, and AI is shorter-term, which surprises me.
Yeah, well, you're talking to somebody who just fundamentally, emotionally does not like social media. Okay, so I'm sorry, Courtney, we haven't worked that well together or that much together, so you don't know that. But I'm adamantly opposed to it. You know, several months ago, I came off of Twitter because it's just a hate fest, and between that and the disinformation that I see on other platforms, I'm going to be that dinosaur who lives off of the modern grid, not actually, but just isn't on social media. For that reason, it's very hard for me. This is kind of the Peter Lynch school of investing, right? You want to invest in products that you like, that you believe in. So it's very hard for me to invest in it. Having said that, and this is, you know, the people who are invested in Meta and have done very well, much like I was saying about Alphabet, it is a very attractively priced stock. By no means do I think the rest of the world is going to come around to my take on social
Dude,
media.
yields are still rising, guys.
It's just not going to
Just so we're all aware.
Also, they call Twitter X.
Yields are rising.
That's a new thing. It just
then I'll change my mind.
I still have a lot of work to do today. I have so much stuff I got to do.
I mean, there's a lot going
Let's
on
see
there,
the dollar.
Stephanie's point about a total re-rating this year from last.
Look, I think Meta is actually, I agree with everything Stephanie said. I think it's actually a really easy
Dollar
story to
pulling
understand
back.
what's happening
Let's go
there.
to like
The only
a
real question is, when does it get too carried away? But the story is pretty linear. It was a bloated situation in 2021. They had vice presidents to report to other vice presidents to report to other vice presidents. They had people doing TikToks about throwing impromptu picnics on a Tuesday morning on the roof of the building. It was a joke, and they were fat and happy, and a lot of the tech giants, just like them, looked very similar. And it's amazing what happens when you realize how many people you can get rid of who aren't really adding anything.
So look at that, guys.
It's actually a double benefit. Number one, obviously the expense comes off. But number two, the people who are actually there and
You
want
have,
to do something and want a ship code,
you know,
all of a sudden they
the
believe in
dollar
the mission
coming
again,
down, it's
and
probably
they
going
get
up.
energized. So you get a double.
So you have like a
benefit
double
when
top
you
here.
clear
Can you
out,
see this
okay,
double
that's
top?
great. So the
There's
stock is
like,
more
oh
than
my
doubled.
gosh. There's your high, and then it makes a little higher low, a higher high. Well, look here.
Obviously, it gets much
There's your
tougher.
low,
So I think
and it puts in
Stephanie
another
basically has the
low.
story right. She has for a long
See
time.
that? See how it's the same,
I'm not saying
same,
sell the stock.
and then
I'm
it
just
just
trying to
curls
understand
up, and
where
then
is the
look,
next
curls
leg of
down,
growth gonna come
curls
from.
up.
It's not going to be the metaverse.
Let's see what happens here.
It might be you know,
It
something
still
to do
feels
with
like it's just
wearables, or
falling.
it might be a
So you can use
re-energization
the
of the
SPY
social media
and the
platform
dollar
Threads,
to trade off of one
but,
another.
you know, how much of that's already in the stock? And I think a lot of it. So I'm not in it.
And if you don't, you should
individually.
think
I
about it,
obviously have exposure
because
through the Qs,
they
through,
go hand
you know,
in hand.
various
It's a
ETFs and
great
funds, but
hedge.
I don't own
You
the
can
stock
long them
personally
both
at
or
this
short
time.
them both, and
Okay. Well, AI is expected to be front
you
and
want
center
to just
when
be doing it on
Microsoft
days that
reports.
there
Our Steve Kovac joins us, of
are
course. Steve,
momentum.
what are you expecting when it
You know,
comes
days
to
that
AI in this
there's
game?
momentum, then you want to look at doing
Microsoft
stuff
already
like
gave
that.
a gift to investors last week, announcing pricing
Oh
for its
my god,
AI
my back!
chatbot,
I
which
gotta do
it's
some
calling
push-ups and
Copilot. Now,
stuff.
this will cost enterprise
UPS.
customers an extra
They said there was news
$30 per
with
user per month and work with Office apps like Outlook, Teams, and Word.
wasn't
Now,
Palo
estimates
Alto,
are all
was it?
over the place, but the potential market is
No.
huge. There are hundreds of millions of Microsoft 365 users, but no word yet on when this will be available. Only a small group of Microsoft customers are testing it now. So look for more clarity on Microsoft's earnings call tonight on when they expect to realize sales from Copilot. Another potential AI beneficiary, Azure Cloud. That division's growth has slowed quite a bit over the last year, though the AI boom could spur more demand for cloud services. Analysts expecting Azure Cloud growth of around 25%. That'd be down from 40% growth in the year-ago quarter. A few other things to pay attention to, Court. Foreign exchange is more favorable than it was in the year-ago quarter thanks to the weakening dollar. And Windows licensing revenue will give a good hint at consumer demand for PCs, which cratered last year after 2 years of a pandemic boost. That segment was down 28% year over year in Microsoft's last earnings report, Court.
Interesting stuff. Thanks for laying the table for us, Steve. Jason, you own Microsoft. Are you obviously expecting a deceleration here in the cloud? And if so, what do you expect to see going forward? Can it reaccelerate, or is that just the trend we're going to see for some time as this market gets bigger and more competitive?
Yeah, and I think some deceleration is somewhat reasonable. I mean, the cloud exploded through the pandemic. I mean, we were seeing 50% year-over-year acceleration numbers. So seeing it at 25%, I think is reasonable. I think what's interesting, what Steve just mentioned, which I'm really looking forward to seeing how it plays out, is the consumer PC demand. How do those products look like? How are they growing? Because they've created over the last 2 years. There was a lot of run up there, so that'll be interesting. You know, and I just
I gotta turn the mic on first and foremost. What do you guys want to do today?
And now making it available on the retail side, it's going to be interesting. Let's see how that works out. And I do think the dollar weakening will be a tailwind, not necessarily for this quarter, but for the next quarter going forward.
Jim, you own Microsoft
Guys want
as
to,
well. What are you hoping to hear?
Oh shit! Somebody took the like away. Uh oh.
I mean,
Yo, bring that back. I want that back, yo.
Courtney, this is an expensive famous stock, and you know what
I'm just
really
kidding.
counting on here is for this
I'm just
to
kidding.
be a large
Oh, it's
portion of the
back.
S&P
Sweet.
500 as money comes into the S&P 500 and the markets overall over the rest of this year. Microsoft will perform, but I'm not expecting results tonight that will propel it higher after the run that it's had. What I'm
I was
hoping is that
thinking,
there's no news that opens up any sort of
who
downside
here
to it. I
does
don't
or
think
does
there
not
will
have a
be.
long term?
In summary, what I'm trying to say is I'm not expecting outperformance here. I'm also not expecting underperformance. This is the market in Microsoft.
You want a vanilla report. No,
Yep.
no surprises.
I'm just trying to keep talking for people quick. You know,
Vanilla, you better get better
if we get some
than vanilla,
clicks.
'cause it's trading at 36 times forward estimates. That's
Who
not-
has
To
the
my point
long
about
term?
it being such a- and you know there's a
Kind of
large weight in
curious.
all the indices.
Where did I put this at? Where am I? The financial district.
Microsoft doesn't disappoint.
We're coming live from you, by the way, if you did not know, from the financial district.
Expectations are quite high, and you
I
can't
should have put the
claim vanilla
diamond
high
district.
expectations.
Damn it.
Sprinkles in there, okay. Get some
Should have
sprinkles.
put the
Sprinkles.
the diamond
Wanna jump
district.
in?
I forgot about that.
Yeah, I want to.
We're coming straight live from Max's Trax NYC. If you all do not know Trax NYC, Max, we are live in the attic right now. Come see us.
Let me do
I'm
my
dead
shit here,
serious.
and then you can react.
Dead serious.
It's a 25 times.
If you're in New York,
value to EBITDA multiple.
stop on by Trax NYC.
It's 12 times.
We up here,
enterprise
we up
value to
top,
revenue.
losing money,
It's
like we do
43
every other
times,
day.
43 enterprise value to free cash flow. It's the second largest stock by market cap on the planet. Every one of those metrics is not just a little bit above the 3.
So there's your dollar move, and it's the SPY looks just like the dollar but inverse.
27%
All right,
above its
SPY
200-day moving
SPY and the
average.
dollar look
As
exactly
extended
the
as
same,
I think
but
Microsoft has been for the last
inverse.
10 years, quite frankly.
I don't know if I'm going to be trading anymore today, honestly. I took a big hit today, and I don't think I want to do that again.
Like,
I think I want to wait, because all it takes is one trade to get it back. Again, maybe it's not that big because of the BABA trade that we did take, fortunately, to the short side. That if you guys could have caught, you'd be sitting at 100%, and it's not even lunchtime yet.
You know my answer because we've been doing this for 10 years together, which
You
is
know,
frankly how long.
what a nice trade.
Say it one more time.
You want me to say that? I love you, Josh. No. No, look.
Price and time, guys. Price and time. Time's a little bit hard to get. You know, you want things to happen quick, but it won't. You got to give it times. Time, I mean.
That's been a disadvantage this year. If
Let
you
me see
want
where
to
we're
have
at.
a stock
So,
like Microsoft about 6.5%,
I don't know.
7% of the S&P 500, and you're not going to have any position.
I was
in
trying
that,
to do
that's
something
one
today. I
heck
was
of
trying to do
of
something.
An active bet for a manager that
Maybe
you
I'll
think
just
Microsoft
wait
has a
and
fatal flaw
do
to
it another
I'm not
day.
making that bet. I'm already making enough of a bet at having about half the market weight. I can't go lower than that. It's just too perilous for me as a portfolio
Debating whether or
manager,
not
putting
to.
together a portfolio of stocks. Now, Josh,
I'll
the
be back in a
contrary
second.
of this is you well know I've got overweights in materials, energy, industrials. That's where I'm willing to take my bets, but I'm not going to take an even stronger bet that I'm going to be out of Microsoft just because it's at 35 times earnings.
Fair enough. This is
Great answer, Jim.
This is fodder for us to discuss, I'm sure, tomorrow once we actually know some of the results. But we're going to turn now to the Fed. We do have a key rate decision. That is coming tomorrow. In a CNBC Fed survey, we have 47% of people saying that stocks are either somewhat or significantly overpriced for a soft landing. What do you make of that, Stephanie?
We're definitely in a soft landing patch right now. I don't know how long it lasts for because we have to wait to see what the impacts are, the lag effects of
We haven't even landed yet, girl.
said,
What the hell are you talking about? We're still in the air.
American Express's conference
What do you mean
call
soft
about the
landing?
Consumer in the U.S. grew 10% in their quarter. International grew 16%. T&E
And
had
why?
record orders.
There's a
So
ton
to
of
me,
new
that
people
speaks
coming
about
over
the
from
strength
different
of the
countries that
consumer,
have
because
fresh
the job
credit.
market is so strong because wages are so high. And I think with it being 70% of the economy, that's why I keep an eye on the consumer. Jim and I will talk about manufacturing all day long. We love that. That's one of our passions. But the consumer really matters. As a result, you add it all up. I expect no surprises tomorrow. They're going to raise another one because inflation is still too high. But the economy can handle it. And that's why I mentioned up the consumer. The consumer's hanging in. And as long as the consumer hangs in, they're going to continue to raise. And maybe they keep it high for a long period of time. But I think there's enough momentum in the economy.
Yeah, consumer confidence, of course, coming in higher than expectations.
Two-year high?
Yeah, the highest since June 2021 or something. So, yeah, the consumer is really hanging in there. I'm
and you know this because you cover them.
I'm somewhat surprised.
Yeah.
No one likes the higher prices that we've been dealing with inflation, but we've taken it on somehow and sort of plowed ahead. Jason, what do you expect from Powell? What do you want him to say in the commentary? What does the market need to hear?
Yeah, I think to Steph's point, I don't think we'll hear anything surprising. I mean, they've been very.
Let's watch. Let me go back to Uber. I'm starting to get tired.
Over the last several
Y'all putting me to
quarters,
sleep.
I
I hate to say it, but y'all putting me to sleep.
Basis point hike. I think what they'll talk about, however, is data dependency. They'll have Jackson Hole and all.
My back is so trashed.
To maybe make another move
I don't know what's
potentially
going
in
on.
September. But to Steph's point, I mean, the consumer is
Uber?
strong.
No, that's TLT. Uber.
Very tight labor market, CPI.
Call your ass an Uber. I got somewhere to be.
Travel from 3 to 2 is
Look at that
will be
pennant.
likely very challenging, but I think the soft landing can.
Call your ass an Uber. I got somewhere to be.
Jim, do you think that we've landed, or are we still landing?
Look at it trying to break up and out of here. It's trying to figure out what it wants to do. I think that's a failed breakdown.
I think we have landed. I think the landing has happened. That was,
It's
however,
hard. It's hard to
before the last
say.
couple of rate hikes that still
To
have
say
gone
what's
on.
going
So
on
we aren't
here.
landed yet, just by
I feel like it
definition,
wants to
whatever
come to the
rate hikes
downside. I
have
really do.
happened in the last 6
I really
months or
do.
more still have not had
I feel like
an
you had a
effect.
failed breakup higher and
However, I think there's a pretty
crash.
good chance that the soft landing is in place just because
Soft
of the strength
landing.
of the labor market. I
She
would
said
feel
soft
a lot better
landing.
about that if we got
We
some
haven't. We're still in the
indication
air,
from the Fed
bro.
that they're willing to entertain the notion that they've won. That's what's been missing for the last 6 to 9 months is this idea from the Fed that, hey, you know what, you've won the battle. You've actually stuck the landing. Nobody is willing to say that. The data, I think, proves that. But, you know, every time good data comes out, it gets explained away by somebody saying, yeah, but look at Supercore, or look at this component of CPI. Headline CPI is 3% year over year. It's coming down. If there's a two handle and the Fed's still raising rates, they're going to have a significant political problem, putting people out of work who have lasted through high inflation only to be, you know, taken out of work at the last minute here. So I would like to see some acknowledgement from Chairman Powell that they've won.
That's a very interesting thought. Yeah, I don't think you're going to get anything.
There's
right
a lot
now.
of things that I want, Josh, that I don't get, but I'll still put it out there.
Jim, I would say Powell is terrified of being labeled as Arthur Burns Part 2.
Yep.
And even though what we've experienced is not 1970s-esque inflation, it's its own thing, it's pandemic-related, it's demographic, blah, 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 it doesn't matter. He doesn't want to wave a checkered flag, have the Dow go to 40,000, have the IPO window vomit up 500 new companies and SPACs. That would almost be counterproductive. So I actually expect, I mean, what do I know? More fire and brimstone coming from him in Wyoming. And honestly, the market will react or not react. It won't matter. I don't think he's
That's
gonna
awesome,
say,
man.
all right, we're all
That's
set.
nice.
Gentlemen, start your engines. This is not going to happen. Why would he do it? How does that help? It doesn't help.
No mic drop here. I guess that's kind of a thing, right, with economic declarations. It's like recessions. We only know when we're well past it. Well, I want to make sure that we can hit on some big news that actually just happened before we started here on the air. Big news breaking on UPS within those last few minutes. So Frank Holland is going to join us now with the details. What's going on here, Frank? It looks like crisis averted.
It does appear like crisis averted. Certainly some big news. So shares of UPS at one point jumping 2% on the news of a tentative deal with the Teamster off those highs right now. Rival FedEx actually dipping into negative territory just fractionally after that news broke. So here's like the bones of this news. The deal prevents the 340,000 Teamsters workers at UPS from a potential strike that would have cost the U.S. economy an estimated $7 billion in just the first 10 days. The contract expires on July 31st. Teamsters would have had the option to strike on August 1st. But again, it appears that's been averted. I have to say appears right now, Courtney, because just yesterday we saw a tentative deal with the FedEx pilots. We thought there was a deal just last month. Both sides announced a tentative deal.
I'm going to do some push-ups and wake up, and I'm thinking about throwing in an Uber short.
Both sides are now calling this a win-win agreement. This is a statement.
Kind of curious what I should do, though, if I should do it.
This is a quote. Together we reached a win-win agreement.
I think you got a failed breakout. Now you're going to break down and all that fun stuff.
This agreement continues to
I'll look at the daily and weekly, dot my I's, cross my T's, and stuff like that, but I think it might happen. I think the Uber short might be happening. Call your ass at Uber, I got somewhere to be. I don't know why I have that in my head.
This is from the Teamsters on this tentative contract. They say $30 billion of new money throughout the length of the contract. Existing full and part-time workers get $2.75 more per hour.
Look, Spotify guys, I told you guys yesterday. You gotta bring your friends. All right, that's it. Last night's live stream gave you guys everything that happened today.
Bumped up to $21 per hour. Teamsters also saying delivery drivers who are UPS Teamsters will get
I told you,
$49 per hour.
and I continue to tell you guys. It's okay. It's not like, look at this. Look at that. Look at it.
Not being disrupted, but also the cost of labor at UPS changing significantly if this deal is ratified.
Yeah, wow, those numbers are actually pretty eye-opening.
Look,
$49 an hour.
still falling out of bed, guys.
It's a good job. I think both sides have agreed it's a good job.
140 now.
The long-term pay structure, the pay
140. I called it pre-market. I called it last night. That this setup, the type of company that it was, we're going to go into we can start to go into a valuation multiple recession. Valuation recession. A valuation sell-off.
How does it make you feel about pulling on the
Yeah, I mean, it was an overhang on the stock. It's the reason stock is up 8% and FedEx
Meta.
is up 47%.
Meta.
Right? It's lagged big time.
Meta.
So, it's a removal of an overhang. That's number one.
There's
and then
meta
you've
news,
got gives
guys.
and takes from what I gather from Frank's great reporting.
Antitrust.
$6 billion a year. If that's in fact the number, people were expecting $5
UK
billion
antitrust something.
However, part-time workers at 21
I'm not sure how to take that. Don't even know what he said. I don't even think he knows what he said.
I just think more importantly,
But the stock's
it
just
is
pulling back
an
off of this
overhang
level. It
lifted.
looks
The
like
stock
nothing
is not
major.
expensive. In fact, FedEx is actually now more expensive than UPS, which has historically not ever been the case. So
I'm just
FedEx
going to
is a
pull this
different
chart up
story.
so we
New
can all look
CEO,
at it.
restructuring, I get that
I
story.
told you
But
guys,
UPS should play
pre-market.
catch up because
Let's
demand
look
is
for the
certainly still
bounce
there.
I wanna
to
button up this
be
conversation,
short.
make sure to get Jason in, 'cause
This
you
is
own
a
FedEx.
company that is not going to do very well in a higher interest rate environment. When growth starts to slow, it's like new users picked up, but how does that turn to cash? You know, how does it turn to cash? You need sales. Sales.
Shareholder value. I think that's what's been playing out in the stock this year for FedEx.
All right, you got new people, but the growth, the people listening, the time was down. So that means no more, that's not as much ad revenue, which is sales. So, I'm going to start calling y'all out. Y'all need to start fucking listening to me. I'm tired of this shit. I'm tired of coming on every goddamn day and watching these things do what they do. And not somebody on here saying, yay, I got $100 ticket because I listened. I'm just kidding, guys. I'm just getting a little tired, so I got to wake myself up. I still got to do push-ups. No, but we did. We called Spotify this morning and last night. We said, this is the type of company we're looking for some downside. If things start to happen, you could see that with Uber. I mean, I don't know how much the state's going to like paying for Uber. But there's only so many people that, you know, are going to spend that amount of money extra just to have it delivered when they can just pick it up themselves or whatever and drive themselves home. You know? Maybe they want to risk getting a DUI. Maybe a DUI is actually more cheaper than an Uber. Who would have thought? You know, I don't drink, I don't drive. I don't drink and drive. So, I'm just saying, things are getting a little expensive. Uber's getting a little out of hand. What if people start drinking and driving now? And they drive themselves home instead of having someone else drive them home. These are the things we need to think about. These are the questions. Alright, this thing is all chopped up. I don't know what's going on with it now. Alright, time to draw a new trend line, I guess. Remove drawing. Let's go 15-minute chart or something. Man, guys, I'm serious when I tell you guys, I tore my back up. Maybe I gotta stand up straight or something. Maybe it's this seat, something. I don't know. But this, it's gotta be like a nerve or something. Or it's, you know, it's definitely something because it's bad. I feel like if I bend over or something and like kind of like go to like open, like just like feed my cat or something, I get like stuck. And I can't pick myself back up. So I gotta stand up straight.
Welcome back to the halftime report. Let's get to our charts of the day. First up, RTX.
Man, I wish I had
manufacturing issue with a powder
had the
metal
original
that's used
drawing
in
of it
jet engines.
because
Jim, you own this one. It is down sharply. The CEO was on our air earlier today.
oh,
so explaining
Raytheon.
what's going on.
Raytheon
This
had
feels like a
earnings,
big deal.
guys. It looked yesterday like it was going to be a bearish
Look at what's going
setup.
on. I think this is a major overreaction.
Okay.
Maybe they should change their name back to Raytheon from RTX. You know, maybe I don't know. But look, what's happened here is they're going to have some increased costs to fix, or maybe not even fix, just inspect some in-service engines, the GTF engine line, for a type of material that's in it. Now, this extra cost is going to be $500 million. Does that justify a $20 billion market cap reduction? I don't think so. So that's where I think there's an overreaction. But why is that happening? It's because anything in aerospace is disbelieved. Okay, it's disbelieved if there's a manufacturing issue because it conjures up images of the 737 MAX fiasco from a few years ago. So if you hear about, you know, pulling engines out of service to inspect them, people say, wait a second, how long is it going to take for them to come back into service? Because it took the 737 MAX, Steph, how long? 3 years to come back? Exactly. So you have a reaction? That is not likely to be the case here. And at the same time, company had a beat and raised its guidance overall. So this is not some sort of fatal flaw in the company, but this is an industry in which is a shoot first, ask questions later type of response for now. And I think this is actually a buying opportunity.
I was just going to say, is there an opportunity then?
It is, absolutely.
Okay. All right, well, you brought this up, so this kind of weaves in nicely with Boeing reporting earnings tomorrow.
He
before the
just.
bell. That's also
I
lower.
forget.
Stephanie,
Does
you
anybody
on
know
this
what he
line?
was
Yeah,
talking
the two of
about?
us do.
Yeah.
What stock?
For a really long time.
I don't even
Deliveries. It's all about
remember.
737 deliveries.
Was it
Are they gonna
Spotify?
increase
Oh,
it for
RTX.
737.
That's right,
From
RTX.
38 a month to 40. That'll help free cash flow if we get that number, and I think that's what people are expecting. But free cash flow is always what I focus on when we think about Boeing.
Okay, and if that's what you get, if you get the 40 number, do you stay where you are with your position?
I'm pretty big because I was buying all the way down.
Okay.
She's
I think
pretty
she was
big.
asking if you sell on a pop. No. Stephanie and I are in this for the long haul.
No, I mean the demand is huge in aviation. I mean, just look at GE today.
Right, exactly. And so let's go there. These are all sort of weaving in together nicely. General Electric hitting a new 52-week high today. What do you, I guess, make of the results, which were fairly strong? And does GE pick up anything from what's going on with RTX losing out on these jet engines potentially?
Maybe they do, but I mean, this company's in a restructuring mode, right? They're spinning off all of the businesses, and so everyone, then the management teams can focus on the various different businesses. 100%.
I want to see if we get a
focus, right?
rejection
So can
here.
management. So they beat, they raised. I mean, organic growth was orders were up 58%. Services up 21%. Operating margins expanded 160 basis points. This is not.
He does it again.
GE, and the stock is doing very nicely today, and I think you can still buy it.
Are you not hearing the words that are coming out of my mouth?
Jet engines, wind energy turbines, raising cash flow, sales forecasts.
I'm just kidding. I've already expected a small pullback here. It doesn't mean you're going to get a long-term downtrend.
Yeah, that is
But that is where I'd like to see it around this area start to revert back to the mean.
Yes, and sometimes in investing, Courtney, you kind of raise your hands and say, "What the?" Okay, let me tell you what. Okay, the guidance to some disappointed. Now let's put this into perspective. Okay, the guidance at the midpoint is 30% higher than where analyst estimates were at the beginning of the year. So in 7 months, we've seen a 30% rise to the guidance now from where the estimates were. This is an incredibly cheap stock. Why is it down 12% today? Because apropos of what I was saying earlier with RTX, anything in the aerospace industry, if you get a whiff of a problem, people are shoot first, ask questions later. Right now, what people are saying is, see, I knew the golden times for the airline industry couldn't last. I knew that demand is going to fall off. There's really no sign of demand falling off. If some people had some loftier expectations for guidance, I'm sorry, but this is another buying opportunity for a stock that has done nothing but over-exceed on operational results, and it's down 12%
Jim,
today.
this is why earnings season is silly season, and you get opportunities, and this is why you always have a little extra cash on the sidelines so you can buy on these times, these quality companies that really get hit for no real reason.
There are a lot of moves here today. Josh, I want to make sure that you're involved in this conversation too. Do you see any opportunity here to put some cash to work in this silly season of earnings?
I don't know if it's earnings related, but I want to spotlight something, and I think we made a chart for this. The question now is like, okay, everyone's excited because the rally is broadening out. If you do a ratio chart of, let's say, the Russell into the S&P 500, you can clearly see that the momentum is shifting. It's not that the S&P has to fall, but you're getting much bigger rallies and moves elsewhere away from just the index. And if that continues, I think the next place it stops is the energy stocks. So I want to highlight crude up 1% today, about 79 bucks. Patty, if you want to, I can't see, but if you're popping that chart up, I appreciate it.
Look at Carvana, guys. Good thing I got out, right?
This is the highest level
Look at Carvana now.
West Texas since April. And
They playing, folks. I know what they're I know what they're doing here. They're playing y'all. They're playing me. Out of nowhere, you get that massive volume.
That 81, 82 level is overhead resistance that dates back to January. So this is a critical level. Let's look at.
I'm kind of curious. Have we had any female traders stop by here or are here? I'm just curious because I don't know what it is with like women and like finance that like they don't trade or do anything like that. I think it's crazy. At least from what I've seen. I'm sure there's a few out there, but
components in the XLE, which again is the large cap energy stocks, have advanced for 4 consecutive days. Only by contrast, look at the S&P 500. Only 14% of S&P 500 components have done the same. So the momentum is shifting, and there's a lot of opportunity.
I'm gonna put a poll in the chat if you guys want to answer it. That'd be cool.
Is actually -5. That's a huge performance differential. A lot of people who are coming late to this rally want to put money to work. The question is where? How do I do it without becoming?
Sorry, my back is killing me.
Microsoft. This is
all right, so
and if crude happens to break
let's
out,
see here.
Coinciding with the
I was gonna see why do we think we don't have any like female traders as much as we do? Seems like we have some in the CFA part of town, but Celsius or Red Bull?
That's what I would be focusing on right now.
It does seem to be an area of focus for the market, and obviously Exxon reporting on Friday as well, so we'll get some more information from when the names in the space.
Let me see. Let me go to here.
Hi, Christina.
Hi, Courtney. A Russian fighter jet flew dangerously close to a U.S. drone over Syria. That's according to the Air Force. The jet was within feet of the drone when it released a flare, causing damage to the propeller. This is at least the third near collision this month between Russian jets and U.S. drones over Syria. Another NFL player has been indefinitely suspended for betting on league games. Yoma Owazarike is now the 10th player to be suspended for gambling or betting on other sports while in NFL locker rooms. The Broncos defensive end will be able to petition for reinstatement in July of next year. Europe is taking the lead on expanding availability to charging stations. Lawmakers adopting
I thought they were allowed to.
Charging station be installed
Roger
every
Goodell
3
just came on
miles
CNBC and was saying that they're allowed to.
and those stations
That they're
must
allowed
also
to bet
allow
on
payments
games,
by
I
card
thought.
or contactless device without a subscription. It's set to take effect in 2025.
So
Maybe that'll happen here. Courtney.
We'll see. Christina, thank you very much. Well, up next, our call of the day. This retail stock is down more than 13% in the last 3 months. But one
oh,
firm
come
says shares
on.
could double. We'll see what the committee
So
thinks.
this is the question. I'm going to put it in chat. Okay. I'm just curious. I've never had one, so I want to know how you guys, like what some of you guys think. Let me see if I could do. So there's something with like even the 8 ounce, like back in the day I used to get like 12, 16s and stuff, but dude, the way these Red Bulls taste, banger. Banger.
DC.
We're back on halftime with our call of the day. UBS getting more bullish on Nike, saying the stock could double. Steph, you own Nike shares. Do you agree with what this note says? Although the base case view is that could be a global macro slowdown, but they still think this Nike holds strong.
It's a longer term call. They're talking about 650 in earnings power by fiscal 26. So there's a lot that can happen between now and fiscal 26. That being said, they just reported 323. So that would be a very big jump in earnings if they can get there. And it's predicated on them getting to mid-teens EBIT margins, which is what the company has guided to. And this analyst believes that they can get there because of raw material costs coming down, because of freight costs coming down, because of pricing power, DTC, inventory rebuild. So I get all of it. I don't think there's anything here that changed from this analyst view today. I just think that they're basically looking out and seeing what the opportunities can be. And oh, by the way, it's getting no credit for the slow turn in the consumer in China. And that's another reason why I own it as well.
Yeah, that's a really good point. And you're making some other moves in retail as well.
Oh, yeah. Yeah, well, I sold out of Estee Lauder. I mean, it's not a good call by any means. And that basically is because they just came out with a cybersecurity issue, and I just think they're going to have to invest more, and so as a result, margins and the expansion that I was expecting to see, it's going to be muted. It's going to take a longer time. I might go back into it in a couple of quarters because I do think that's how long it's going to take to get resolution here. And I put that money into Target simply because the stock is down 26% from its highs. They're doing all the right things in terms of inventories and getting them down substantially. And I do think traffic is going to surprise to the upside. They have a value proposition, and the stock trades at 15 times forward estimates, gives you a 3% plus yield. So I'm in that one.
So even though that the consumer discretionary categories were much weaker than staples, and Target obviously skews higher there than say a Walmart, you have confidence that things can turn around.
Yeah, I mean, I think that they're balancing out their mix, right, between the durables and consumables and discretionary. And so he's been working on changing that. I don't know if they're going to get there in this quarter, but I do think that they still offer the value prop, as I mentioned. And again, the valuation.
Why does that look like Chick-fil-A instead of Target? You know what? Chick-fil-A at Target, I've solved their problems.
And I kind of like that.
They have the same type of logo, same colors.
When do you think the margin? Do you think the margins get back to 6%?
Yeah,
It should be. It should go back to, or it should go to Chick-fil-A and Target should do a collab.
Right? And so they've come down substantially, and I think that's going to help in the back half of the year.
Well, one retail stock I feel like is widely loved is Costco, Jason. That's where you are right now.
An easier one to own.
You are expensive though, right? Trading at 40 times forward, but it's up 24% year to date. They actually, talk about password crackdown and all the crackdowns we've seen. They've done some membership crackdown in the last month. They have 125 million card holders across the globe. I mean, talk about a renewal stream. They're always known for their cheap prices on their products. I just think that they've always been a juggernaut. And I do think also as well as a retailer, with some dollar weakness, they have almost 30% of their business overseas. That will also be a tailwind for the stock.
Yeah, talk about those renewal rates for Costco are very impressive. I think them and Amazon Prime, some of the highest in the mid-90s, I believe, almost year after year. Well, coming up, Cleveland Cliffs rallying on earnings. Jim's been pounding the table on this one. If you've watched the show ever, you know that. We'll get his take coming up next.
HGC, 1322. HHG Capital moving now up 21%. Hotel Golf Charlie.
Oh, is it? I think I'm dying too. So we've got something in common. Yep. Yeah, if I was dead, there's a triple bottom here. It might try and curl itself up, or it might make its second leg to the downside. Really nice to be early on this movement. Again, I literally used VWAP for my entry on the bounce back. I came in chat and said, hey, we're making new lows. We put in a this pivot high and it just quickly rejected. In that same manner, I was like, I'm going short because I do not think this thing is going to get above VWAP with all that was taking place. The sell orders were just piling up and piling up. So I said, let me get a short, and we got it. I was able to take 3 pieces of profit off not too long after I got in. Like here. SPY pulls back. Maybe I look for a long. If it dips and holds up here. You just got to know when to buy it. Like, especially with options, if you're not buying the stock, you got to be careful.
Welcome back to halftime. Cleveland Cliffs shares are higher today after earnings. Jim, you own this one. You've got to
Just
be happy
gotta
with your
be
victory lap up
careful.
7%.
Oh, thank you, Courtney. I feel
You
bad,
just
though,
gotta
that I've
be
tainted you from
careful.
afar over the years that you know I'm such a big Cliffs proponent, but thank you for that. Look, a fabulous quarter. The management team here for some time has been telling you what they're doing, that volumes are going up, selling prices are going up, costs are going down. And what does that all equal? Courtney, it equals free cash flow. Now, here's the free cash flow numbers. If you take this quarter's free cash flow and annualize it, it'll go up and down over the quarters to come, but that's not unreasonable. That's a free cash flow yield on the equity base of about 35%. What have they been doing with that free cash flow? They've been paying down debt. They've got a very low debt level right now. It's about 1 times their EBITDA on an annual basis, and they've been buying back shares. So they're doing everything right here. You know, people are going to say, okay, well, what are you going to do for me next? Bottom line is this is an economy that is expanding. All right, people have not wanted to believe that for quite some time, which is why the share price has been depressed. But this is an economy that is expanding. We're building autos. We're building factories. You know, these guys produce steel that went into the I-95 reconstruction a couple months ago. I mean, they're everywhere, including in electric vehicles, which is a high margin business. Things are going right here. It looks like they're going to continue to go right. And the last thing, because I could talk about this for a while, is they've done a fabulous job of decarbonizing the steel industry. This was notoriously, you think of blast furnaces, right? You see smoke going up.
Sure.
They're moving to hydrogen.
I'm getting
They're
tired.
The leading edge of getting into hydrogen to produce steel.
I'm getting
And
tired.
they've been reducing their carbon footprint. That's something worth noting.
And of course,
Fucking
cutting costs,
brownie.
as a number of other companies have been as well.
Fucking
Stephanie,
brownie. It's
you're
all
not in
brownie's
this name,
fault.
But
No.
Freeport Macmoran is one of your.
I used to be in this name, and
Okay.
I sold it. I was up 40% in like 2 months, and I put it into Freeport a couple of months ago, and I just added to it on Friday because they reported earnings and the stock fell 4%, back to silly earnings season. But they beat, right, and total revenues and earnings. They had better pricing power on copper, and copper actually is starting to perk up again, and their costs came down. $1 billion, a little less than $1 billion in debt, so they've really worked on their balance sheet, which I like, and it trades at 9 times EBITDA. So I just kind of felt like I wanted to be bigger. And then, of course, if we ever do get stimulus in China, the stock is going to take off for sure.
And it's up 4% today. Well, stay with us. Grade My Trade is coming up next on Halftime.
Getting lulled to sleep.
It's time for Grade My Trade for Jason. One viewer bought Honeywell at $200.10. Grade this trade.
So I give you a solid B here. Obviously, the price action in Honeywell hasn't been great this year. It's down around 2%. But I still like this aerospace and defense player. EPS growth is a little over 8% going forward. And I think that the materials and technology business has a lot of catalysts going forward. So I like this here.
Stephanie, this one's for you. Will in St. Louis bought 100 shares of GE Healthcare at $82.50 in June. Is this a buy, a sell, or a hold?
Yeah, I would buy it. They reported today it was a very good number. They beat, they raised, they had organic growth of 6%. They had overall orders were very strong. I just think that the stock's up 35% and the expectations were really high into the print. So you use this weakness to be buying and averaging into it. I'd give it an A.
There you go. You get it on sale then today. Final trades are coming up on halftime.
We're getting tired. We got to get moving. We got to do some push-ups. All that fun stuff.
BetterHelp.com.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Yeah, I was gonna say, look at the SPY pulling back, guys. There's the pullback and retest for the long.
We're back. It's not too late to sign up for our game plan. The event is happening today. It's hosted by CNBC and Boardroom, bringing together the most influential leaders across the sports landscape. Scott Wapner will be live in LA, but you can join online. For details, scan the QR code right here on the screen or visit cnbcevents.com/gameplan. Well, it is time for the final trades. Josh, you're up first. What do you got?
I think Live Nation gets back above 100, doesn't stop till it sees 110. I'm long the stock. I still like it.
Okay, it's not far from 100 right now. Jason, how about you?
I like M&T Bank, really solid EPS beat in the last quarter, and I like this acquisition of People's United Financial. I like it.
Stephanie Link, your final trade.
I like 3M. It was a very good beat and raise this morning. Operating margins beat by 300 basis points. Free cash flow grew 44%. Stock still down 8% on the year. Trades at 12 times earnings.
Okay, and Jim.
NXP Semiconductors, very attractively priced semiconductor company. Over 50% of their business is automotive. We know that there's a huge production catch-up going on.
Oh, my back is killing me.
In car production. They're raising prices. Excellent
Wake
results
up.
yesterday.
I gotta do some push-ups. My back is killing me. Fuck a duck, man.
Dividend yield. I'll
This
leave it there.
sucks.
Okay. Well, the markets here are still
I feel
higher
so
on
bad
the
for old
session,
people.
but Dow Jones Industrials higher by about 0.2%. Nasdaq also higher by 0.8%. The S&P 500 higher by 0.4%. Materials leading the way. Real estate the laggard. That does it for halftime. The exchange starts now.
Thanks, Court. I'm John Fort in for Kelly Evans. Here's what's ahead. The market all but certain the Fed's going to raise rates tomorrow, but it's not what the Fed does. It's what Powell says that could determine where the market goes next. We're going to look at what to expect, how to position from here. Plus, shares of Alaska Air down about 9.5% on disappointing revenue guidance. It's dragging the rest of the airline stocks down with it. We will talk live and exclusively with the CEO about what's going on with that guide, what it means for air travel and ticket prices ahead. And Google parent Alphabet on deck to report. Our guest says now is the time to buy. He's going to make his case coming up. But we're going to start with today's markets. Dom Chu has the numbers. Dom?
John, they are bid right now. You can see here we are just about at session highs right now, with the S&P 500 up about 18 points. Again,
So
session
tired.
highs right now, 45,
I gotta wake up,
73,
guys.
Just a notch below.
I gotta get my push-ups
that we
in.
got over this past week. The Dow Industrial's up 1/4%, 97 points, 35,508, and the
I
Nasdaq
think I put
Composite,
a
leading the
whatchamacallit
advancer
in
so far today,
chat.
up about 3/4%, 115
Don't
points to
know
the
if
upside.
you guys got it or not.
14,174. And by the way, you can see
It's just my
mostly
thoughts.
green behind
Kinda
me,
just
but
wondering.
it's some of those economically sensitive sectors that are leading the way higher. With regard to one of the thematic trades playing out today, the housing sector, real estate markets have been red hot overall. If you take a look at some of these home building stocks, check out what's happening with Pulte Group, one of the better performers in the S&P 500, up 5.5% after its profits and revenues come in this morning better than expectations. Why? Because people still demand housing, new housing construction, and by the way, they're raising prices, maybe expanding profit margins. So Pulte Group up 5.5%. NVR, DR Horton Lennar, some of the big home building peers that are catching a sympathy bid along with that. And the iShares Dow Jones U.S. Home Construction ETF ticker ITB is up 1.5% as well. And one of the bigger downside moves that we're seeing today, outside of the S&P 500, comes from streaming audio and podcast giant Spotify. Those shares down 14.25% right now after its revenue comes in lighter than expectations, as does its full-year revenue forecast. They did add subscribers and premium subscribers as well, so there's a little push-pull, but on balance, John, for a stock that was up 130% going over the course of the year-to-date period and then now dropping about 23% from that high, as you can see there. Spotify, really a big mover on the day. I'll send things back over to you.
Yeah, investors trading down the volume. Not the trade volume, but the volume on the share price. Thanks. We've got just 24 hours until the Fed's decision on interest rates. Forecasters are feeling a bit more optimistic about the economy. Steve Leisman has the details of that from CNBC's latest Fed survey. Steve?
Hey, John, good afternoon. There's a fairly consistent pattern where the most recent quarter, which is supposed to be terrible, ends up being revised up and somewhat less than terrible. And it's finally being projected forward, I think, now, where odds of a recession are being reduced by respondents to the survey. Take a look at the GDP forecast for 2023. In January, they thought it was going to be 0.4%. Now they're up to 1.23%. They've taken that out of the outlook for 2024, where they expected to have something of a bounce back from a really low rate. Now it's more along the line of 1.3%, which is below potential, but far from a recession. You can see that if you look at the quarterly numbers, they were all pretty much revised up. A big number there, second quarter, the one we just finished, it had been 0.5% in May. Now, then it went to 1.4. Now it's at 1.7. I've seen numbers as high as 2.5 from some of the forecasters out there. And same with all the other numbers. They're nothing to write home about. They're all anemic, but they're also not negative, and they're above where they were. It's not a recession built in. Another reason respondents have a hard time forecasting a recession is what they think is going to happen to the unemployment rate. They see only a modest increase to still low levels. 3.6 now goes to 4, and then up to 4.41. So not quite a percentage point built in terms of the deterioration in the job market. All of that leading to what we're talking about here, the decline in recession probabilities in this survey for the first time in a year, now below 50%. The low point had been 19% in December 2021. That went all the way up to 63 amid rampant fears of recession. Now it's back down, still elevated, but at 50% or 48%, the lowest since May 2022. And then look at the Fed outlook here, 5.13 now. They think it goes up by, a little bit more than a quarter. There's some people that are baking in that second one, but the overall opinion is that it's one more hike and done, and then it sort of stays there through December. And then we've talked about, you did yesterday, those cuts built in for next year. Risk levels are still high. just not as high as they were, and the chance of the Fed doing too much, as you know, John, remains one of the risks they're talking about.
Yeah, absolutely. Things are just kind of working out. I'll mention all the major indices so far today, also right up there near session highs. I mean, not a dramatic move higher, but things are just economically sort of working out. Stick with us, Steve. My next guest says a disinflationary soft landing is clearly in view, and what the Fed is doing now is figuring out the appropriate end game for this tightening cycle. Joining me now, Paul McCulley, former chief economist at PIMCO, currently an adjunct professor at Georgetown's McDonough School of Business. So, Paul, this hasn't shaped up exactly like you thought it would, say, 3-ish months ago, because, yeah, they're looking at possibly 2 hikes. They're not done, and yet things sort of seem to be working out. So what's Powell going to potentially say, one side or the other, that's going to affect the markets after tomorrow?
Yeah, I think the markets have been in line with a more positive outlook.
Damn, that's
a
nice,
soft
bro.
landing outlook. So the markets have
Yeah, man,
been
it sounds
there,
good.
But the Fed does not
Yeah,
want to
I am too. I'll see you there, bro. I'm gonna be here. I'll probably take a nap. Trying to do a couple things, but I'll worry about it later on.
the projections for end of year.
So yeah, man.
The bottom line is the
Appreciate
economy
it.
is doing better. Disinflation is happening. Soft landing is coming into vision. All of that is good news, but the Fed's not going to declare victory until it sees the whites of the eyes of a weaker labor market. It hasn't seen that yet, so I think they will tighten, obviously, tomorrow. And I think Chair Powell will reiterate that the projections have another hike before the end of the year, and that he thinks it's still likely unless the data come in on a positive surprise, both on inflation and softer labor. So we're almost there, but we're not there, and he ain't going to declare victory early. He's going to declare victory late.
Paul, hang tight. We want to bring in Rick Santelli here. 5-year notes up for auction. Let's see how they did from the CME. Rick?
Yes, John, it was a very interesting auction. 43 billion 5-year notes, the yield at the Dutch auction, 4.17%. The one issued market was around 4.16.
All right, spies are pulling back here, guys. Sorry, I was getting a little tired. Thank you guys for the likes. We have one person watching, and I finally wake up.
Demerits come in with respect to the grade, which is a B minus.
Let's see
but
here.
A B minus for a bad pricing is a really great grade. So what's up? Well, I'll tell you. If you look at one of the
I don't know.
metrics,
I want to see
bidders, pension funds, insurers, at
if we have anyone
that was
here
the most
familiar
aggressive
with
bidding by
something.
that group. Well, since
Do we
July
have
of
anyone here
2014,
familiar with something?
9 years, and that really put it over the top because all the other metrics were pretty darn good. It priced a little sloppy.
Pretty
But then
darn
again,
good.
trying to catch that falling knife, trying to buy this part of the curve, which has been ultra stable with respect to firmness of rates, is definitely a bit of a challenge. John Ford, back to you.
All right. B minus. Rick, thanks.
Yeah,
Steve Leisman, getting back to the
I'm looking for the
conversation
big trade, guys.
we're just having
The big,
about,
big,
what's the Fed to do,
boy
and
trade.
Paul was mentioning they're not declaring
All right, and I
victory.
want you guys to be a
They
part
can't,
of it
right?
if
Because
you,
inflation has been
can handle the risk.
relatively, core inflation,
Can
stubborn.
handle it.
Yeah. I think I heard a sound of a large exhale around noon, and it came from the Federal
What
Reserve,
is going
John,
on here?
when UPS signed
My whole
that
jaunt's
contract
messed
with
up.
Teamsters. I think they're very happy about that was done and does not seem to have been done over the top. I'm also really interested in what Rick was reporting, and I want to engage Mr. McCulley on this, John, which is what you don't want to be, I think, is an institutional bond investor and look back on the possibility that the Fed is at or near the end of its hiking cycle, and you missed a big, juicy 4.17% possibility of a yield on that 5-year. At some point, those long-end yields.
I wish I
will
could
start
get
to
the
look
CNBC
good
to
if
stay up
indeed
here
there's
with
a
us.
sense that the Fed is done here.
Wonder if I
with
could
the
lock
question
it.
And the proviso is whether or not somehow that curve
Lock it.
reinverts, but perhaps it pivots along
I
the long
wonder
end
if I could lock
and comes
it.
down.
Minimize,
and John, just for the
close.
investors at home, what I'm really asking about is this the time to think about locking in some rates? Because
See, like he said,
perhaps
thinking about
the
locking
long end
in.
is done.
Yeah, and just
The
to add a
screen.
little to that before, Paul, you jump in, everybody's feeling really good about what they're getting on savings right now, but that's going to fluctuate when rates come down. So if you lock in, you don't have to worry about that. Paul?
I think there's a lot of merit in moving into the belly of the curve, which would be the 3, 5, 7 area of the curve. Not so much the longer end of the curve, but yes, I think now is the time that, if I was still managing portfolios for other people's money, I would want to be at least neutral of duration versus the benchmark, and I would want to be in the belly of the curve in anticipation that the Fed's going to stop. And then looking out into 24, that as the economy soft lands and jobs slow down and so forth, then we actually will get an easing and a resloping of the curve. And in fact, I think that's the most exciting and interesting thing to talk about looking out to 24 is the Fed itself is forecasting easing, not this year, but next year. And right now they're in the end game for the tightening process. But soon, perhaps this fall, perhaps at Jackson Hole, the Fed will have to start talking about the easing process for 24.
Let me ask another one for the folks at home. What about some of these bond funds out there where the yields are pretty good? There's not an inordinate amount of risk in some of these, but people are feeling a little bit spooked based on what happened in 2022. The prices came way down. The flip side of that is the yields are now up, but there's been such a bias toward equities for years that they might be staying away. Similar situation where that's a way for the folks at home to perhaps play this and kind of rebalance their portfolios?
Well, it gets down to the whole issue for folks at home, the equity versus fixed income. But as you get older, you're more focused towards fixed income. And obviously, a lot of people got surprised last year that actually bond prices go down when interest rates go up. So they got to see that red ink on their statements. But from this perspective, in the 4 to 5 range for the belly of the curve, then I think it's a good opportunity to lock in those yields. And if you can, try to have the memory of what happened last year with respect to the prices of your funds be in the rearview mirror. But I know it's hard. It's probably the biggest question I get asked when I'm out and about here is, what happened to my bond portfolio? Interest rates went up, bottom line. Now they're up. You need to buy some bonds.
All right. You heard it here. We didn't shy away from the bond story. Paul, Steve, thank you. Meantime, Alaska Air having its worst day in 16 months after forecasting annual revenue below estimates. The company sees sales growing about 8 to 10% this year versus analyst expectations of about 11. For more, I'm joined by our Phil LeBeau, along with the CEO of Alaska Air. Phil, you can go ahead and kick things off.
Thank you, John. Ben Minicucci, thank you for joining us today. You've seen the reaction of your stock today. Doesn't matter that you beat the street on the top and the bottom line in the second quarter, and you had a very nice quarter. Your guidance has people spooked. What's changed?
Hey, good morning, Phil. Good morning, John from Seattle. Well, Phil, let me unpack it a little bit for you. So let me start with Q2. Q2 was a fantastic quarter for us. We're going to probably lead the industry in pre-tax margin. And I just want to take a moment to thank our employees for a fantastic quarter, not only on the financial side, but we led the industry in operational performance. For heading into Q3, and you've interviewed other airline CEOs, you're seeing a massive surge in international travel. And honestly, I think that's a good thing for our industry to have, international come back the way it is, because, we serve a lot of our global partners internationally, but that's having a little bit of a modest impact on domestic fares. So that notwithstanding, we're still going to have a strong Q3. We're still reiterating our full year margin guide of 9 to 12% on our EPS guidance, but we are seeing some deceleration in our unit revenues heading into Q3.
And that's why you have a guidance in terms of RASM, revenue per available seat mile, that is below what analysts are expecting for the third quarter. How much pricing power are you losing, Ben? And in layman's terms, are you basically saying, hey, the domestic travel boom is cooling off?
Not quite the opposite, Phil. Demand domestically is still strong. We're flying some of our highest load factors. So that's one thing we just have to remember. Load factors are high, demand is strong. like I said, the international surge is having an impact on domestic fares. But I will remind you that domestic fares are still significantly higher than they were pre-pandemic in 2019. So we feel good about where the industry is. I feel good about where Alaska's positioned now into the quarter, into the end of the year. So, we're not hitting the panic button. If we have to make adjustments, we will, but we still think we're in a solid position.
If that, Ben, if that demand, indulge me for a second, if that demand is still as strong as it is, why are we seeing the loss of pricing power that we would expect you to be able to maintain?
Well, Phil, that's a great question. So, like, just in terms of context, there's a few points of load factor that are moving to international. And just for context, we put our loyalty members are filling up the equivalent of 18 787s every day through our global partnership and through One World, which we're a part of. So, these were customers, and that's 50% higher than it was last year. So these are customers last year that were flying domestically that now are flying internationally. So I think that's where you're seeing a little bit of that drop in domestic fares. But demand is still strong, fares are still strong. And I think what we see is, this international surge is going to last between maybe June, maybe through September, October. But when kids are back in school, the balance between domestic and international will normalize. And I think you'll see this get back to a more steady state.
Ben, your routes are primarily focused in the western U.S., so you've been able to avoid a lot of the storms that have just made schedules a mess on the eastern half of the United States, primarily on the East Coast. But you've got strong heat wave that continues to really hammer the Southwest, where you have a number of operations, and it's a big area for you in terms of where your flights are to. Is that impacting your operations at all?
Phil, what I'll say about extreme temperatures, whether it's too hot or too cold, it does impact operations because, it's hard on machines, and more importantly, it's hard on people. So you got to put safety first and as you're operating. So we are impacted by, those extremes. But what I will say is that in the areas that we don't have extreme temperatures, we're operating extremely well. And again, kudos to our people that are running, the best operation in the country. But those are extremes, Phil, that are tough to operate in. There's no question.
How much does that hurt you? How much of a headwind is it?
It's a few points for sure. Like, for example, in the New York area, we got over 30 flights a day in the New York area. That impacted us significantly. We didn't have many cancels, but those are flights that were delayed significantly or even diverted before they can get in. So it does have a huge impact on us and, of course, on our guests.
Ben, thank you very much for explaining the guidance, which obviously is hitting your stock today. We appreciate you joining us from the Alaska Airlines headquarters in Seattle. John, I will send it back to you.
Phil LeBeau, thank you. Important details there and the balance between domestic and international, what happens after September, the extreme weather. So thank you, Phil, and Ben Minicucci from Alaska Air. Coming up, Alphabet is up about 40% to start the year, but still underperforming its mega cap peers. Our next guest says he's staying bullish, says the stock's trading at a discount. He'll make his case ahead of earnings next. Plus, rising rates have real estate firms racing to cut costs. CEO of Anywhere joins us fresh off earnings with that stock up, 10%, on how realtors are navigating a challenging housing market. And as we head to break, let's get a quick check on the markets. The Dow is higher by nearly 80 points. The S&P up almost 0.5%. The NASDAQ, the best performer of all, up about 0.85. The exchange is back after this.
This is The Exchange on CNBC.
Shares of Google parent Alphabet up a little bit more than 1% ahead of earnings after the bell, outperforming the NASDAQ, but not doing as well as Microsoft, up about 1.5%, also reports today. For the year, Alphabet's up about 38%, still underperforming mega cap peers overall, not just today. That's one of the reasons why my next guest says the time to buy is now, while the stock is trading at a discount. He also says AI concerns are overblown. He's got an outperform on the stock, $145 price target, which implies a 20% move from here. Joining me now, Jason Helfstein, internet analyst at Oppenheimer. Jason, I'm looking at the chart. I'm no chartist, but it seems like the question is, does it go back close to 150 where it was in late 2021 or closer to 100 where it was in March and April? What's the key number or two from the report later today that's going to determine which way it goes? Does it have to do with YouTube? Does it have to do with Google Cloud?
I mean, I would say that the core advertising number is probably the most important, right? It drives most of the earnings of the company. We're looking for 4% growth. The general view is that advertising, did not get worse in the quarter and should get marginally better in the next quarter. You've also had cost cutting going on at the company. They really don't give a lot of forward commentary, so it's us analysts guessing, but we do think you should start to see margin flow through. And while there is a concern about AI's impact on margins, that's not going to happen yet.
But I just wonder, is that enough? Is the core business performing to expectation enough to take it up to 145, 150 area, or do they have to have one of those growth areas or one of those areas that have been shakier? Again, I'm going back to YouTube and Google Cloud, sort of perform well to show people, oh, well, it's not just Microsoft that can do well in this game and have a portfolio that performs in uncertain times?
Yeah, I mean, you're not going to see AI in the numbers yet, right? I mean, Microsoft will talk about Azure, but we don't think AI is doing anything right now for Bing. In fact, in June, Bing traffic was down month to month. So that should make people feel better about the impact on Google. We think their search traffic has been quite stable. There is a long-term margin question here. How dilutive is AI to margins? We have 4% CapEx growth for next year. That's probably too low. But the street, the buy side has particularly, there's just there's a lot of confusion on where margins in the back half of the year and concerns that margins actually go down next year.
Now,
so
why is AI dilutive to margins? Just because you got to pay NVIDIA, on the CapEx side in order to do it, or?
Gen AI searches are more expensive to run than a traditional search. Right now, we don't know what % of Google searches will be Gen AI in the future versus a traditional search. And I think people have found that for most things they want to do, a traditional search actually today generates better results than a Gen AI search. That being said, AI is going to be integrated in all parts of the business, in G Suite, and they're going to just have to, deal with that. They are trying to drive down costs, and I do think over the next 12 months, you're going to find that the cost to do this is going to get a lot less than what has been talked about before.
Does that have to do with custom chips, right? Because Amazon's talking about that. Microsoft's certainly doing it. So is Google. If their chips can reach a performance level where they don't have to buy as much from, say, NVIDIA, which we know because its stock price has gone way up, they're able to charge and get excellent margins. If they're able to do more in-house and vertically integrate, does that help the margins on the AI story? Maybe not within search itself immediately, but longer term.
I think really it's about Alphabet using what they understand about all the information out there and actually shrinking the size of the data you have to look at to train and use AI. So when you have to understand everything that's ever been in the history of all time, that's quite expensive. If you can narrow that scope because you understand based on your existing businesses, your existing data, look, the user is probably just looking for an answer or a solution in this narrower set. That's much less expensive. But yes, I mean, Google keeps talking about, pushing out their depreciable life of their data centers. That's additive to margins. It's causing confusion about, what the right number should be, but that's additive to margins. And so we think that, the longer AI is around, the more efficient it'll continue to get. And we think Google's going to talk about that this quarter.
What does the street need to hear on costs? Expecting to see more cuts or just discipline in hiring or what?
I mean, it's a little both. We have headcount up 4% this quarter. It was up 14% last quarter. We have it pretty flat the next few quarters. And then kind of cost per employee, was down 7% last quarter. And there's been a number of press reports of that trying to be more efficient with office space and other things. That being said, they've been trying not to fire people. So, the question is, with an improving ad market, which we think you will see that in their numbers this quarter, can that flow to the bottom line?
All right, we'll see what Ruth Porat and others have to say. Numbers break on CNBC in overtime. Jason Helfstein, thank you.
Thank you.
Coming up, the latest read on luxury spending in China, what that means for the health of high-end retail here at home. The Exchange is back after this.
Welcome back to The Exchange. I'm Tyler Matheson with your CNBC News update. UPS and the Teamsters Union have reached a tentative agreement on a new contract. The deal comes just days before a threatened strike that would have impacted deliveries across the country. UPS CEO Carol Tomey told NBC News that the parties reached a win-win-win agreement. The agreement covers hundreds of thousands of workers and is awaiting UPS employee approval before taking effect. Just minutes ago, President Biden signed a proclamation establishing a national monument for Emmett Till and his mother, Mamie Till Mobley. The black teenager was abducted and killed in 1955, and his shocking murder helped fuel the civil rights movement. The monument is located across 3 sites in 2 states, including a church in Chicago, where thousands had gathered for his funeral. And some bad news for people with summer travel plans. Gas prices are on the rise. AAA says the average price per gallon in the U.S. is up to $3.63, 9 cents higher than last week, and 4 cents higher just overnight. John, back to you.
All right, Tyler, thank you. Coming up, new numbers on where home prices are headed and a read on how realtors are dealing with rising rates. It's an exclusive interview with the CEO of Anywhere Real Estate on the other side of this break. The Exchange will be right back.
And now, CNBC Trend Tracker.
Realty.com.
Welcome back. The iShares Home Construction ETF climbing today after the S&P Case-Shiller Index showed some prices in May rose. Home prices rose for the fourth straight month, but there's a noteworthy trend emerging in those numbers, and Diana Olick joins us with it. Diana.
Well, John, the gains come despite a sharp jump in mortgage rates during the month, and I'll get to that in a minute. But prices nationally rose 0.7% month to month, seasonally adjusted on the Case-Shiller Index. Still down 0.5% compared with May of last year, but they are just 1% below their June 2022 peak. Now, home prices began to fall in June of last year after mortgage rates took off higher. Experts at S&P Dow Jones say this bolsters the case that this January was the bottom for the cycle. They also noted regional differences in prices are striking. The Rust Belt is suddenly taking off. Prices gained the most in Chicago, Cleveland, and New York. The Midwest took over the South's reign as the strongest region. It's been 5 years since cold weather cities took the top spots. Cities in the West, where prices had inflated the most, were the worst performers in May: Seattle, San Francisco, and Phoenix. Mortgage rates did come down a bit in the 3 months that make up this running average of the May report, but they shot higher in mid-May. The 30-year fixed crossed back over 7% just this morning, John, to 7.04%.
Diana, what does this mean for post-COVID trends? Maybe adding in the other things that you see about when people were moving away from cities, maybe into exurbs, along with this data. What does the picture tell us about how people are treating real estate?
Well, I don't know what it says about the trend specifically post-COVID. We're seeing people move less. The issue is there's no supply. There is nothing for sale, so you can't move if you can't buy something. And people are still holding on to their homes. That is, sellers don't want to put homes on the market because they likely carry a mortgage rate that's 3 or 4%, and they don't want to trade up to 7%. So we have that golden handcuff effect on the supply. And for buyers out there, they're getting used to this new normal of 7%. We are seeing demand. The builders are seeing demand. It's just in the existing market, there's not enough supply.
All right, Diana, thank you. Meanwhile, those higher rates are having a big impact on my next guest's top line. Anywhere Real Estate parent company of Coldwell Banker, Sotheby's International Realty, and others reported a 22% year-over-year loss in revenue its second quarter, as the higher rates kept people from selling their homes. But it wasn't all bad news. Shares of Anywhere have been up more than 11% today after the company reiterated its full-year guidance, said it expects to reach its year-end goal of cutting costs by $200 million. Joining me now for an exclusive interview is Anywhere CEO Ryan Schneider. Ryan, welcome. So this efficiency is a huge part of your story, and you're moving ahead and expanding your franchise business. Explain why that's important to where you're taking this model.
Well, John, first off, thank you for having us. Yeah, we're really excited by a number of the things that we're doing, including expanding our high margin franchise business, but also how we're leveraging our national assets in owned brokerage across the great brands that you named, like Sotheby's International Realty and Coldwell Banker. We reported about $125 million of EBITDA this quarter, which is awesome in the challenging housing market, and we think distinguishes ourselves from a number of our competitors. And if you pair that with the cost changes we're making to make ourselves more streamlined in this environment, you can imagine the octane we're going to have economically when the housing market comes back to much more normal levels. So we're pretty excited about it, and obviously like the market's reaction today to our news.
Where does, in your operations, where does technology, does data fit in? How is that going to factor in as part of this efficiency strategy to prepare for when the market turns back up?
Well, it's a big part of the future. For us as Anywhere Real Estate, we're the largest player in this ecosystem across brokerage, franchise, title, mortgage, et cetera. And so we have the most data. We have the unique data scale in our industry. We've been leveraging it for years, John, with machine learning and predictive analytics. But I spent a lot of time on our call today talking about some of the really early things we're seeing with generative AI and large language models. And we think that's going to change both how people execute in the real estate transaction, agents, consumers, people like us, and how we run our company. And my message to our investors and potential investors is we want to be on that forefront of the journey, especially because we have more data than anyone else in the industry. We can train the models better, we can tune them better, and we think we can get more insights out of them for the future.
One of the first places that I heard about this vision of the metaverse was probably 20 years ago, where oh, we're going to be doing these.
All right, so I'm gonna go over my
homes.
thoughts here if
You know,
anybody's
Redfin and
still
others
with
are out
us.
there saying, oh, we're not going to need real estate agents anymore.
I'm gonna
You know,
go
we're
over
not
what I
gonna-
think
but
about the
it turns
markets
out
and this push
people
higher.
really want to trust someone when they're making
First
a
off, I'm
transaction
still a
that
little
they
hestant,
on either side, and people
just like I
actually
am in
like
life,
going
as
to
we all
see a
are.
home before they buy it. What is really going to change?
Let me see here. Let me
most
make
likely,
sure.
in the next 5 or 10 years, and what won't?
John,
Okay.
the technology has been.
So the Qs are coming to the pivot point that I said. Now this wasn't like a rally where I could really get behind. Maybe the premiums paid. You know, like I told you guys, I felt the curve up. I felt the break and retest on the Qs at least of this. Yeah, I don't know. It's like 376.85 ish. All right, so you got another break here. I think top end you're looking at, which it's gonna be a lot to get there, but it's around 381 flat. If you're able to get volume going in the afternoon. Now, if you notice on the Qs, you did have a good amount of buying yesterday. As far as the volume on like the 15-minute. I gotta use the restroom when I come back. But what I'm getting at is, let me see here. What do I think the markets do? Give me 1 minute. I'm gonna go use the restroom. Maybe we'll get some people back. Because I think it's important. I really do. I think it's really important. We are going to start coming into resistance here. This is the upside resistance. Maybe we start seeing some selling coming in here on the Qs. Let me use the restroom, and I will be right back.
In Coldwell Banker, in Sotheby's International Realty, in Corcoran, we can integrate across those also and use, scale, whether it's on purchasing, on technology, on data, et cetera, to make those diverse businesses successful.
Ryan, perhaps finally, how concerned should I be about this Airbnb effect I keep hearing about, where people have held on to properties that in other markets in previous times they might have unloaded because they're hoping or expecting that they're going to get enough cash flow from them to make the numbers work, and that those numbers are dropping in terms of who's willing to go and spend time and enough money at these Airbnb Vrbo properties to make the math work. What are you seeing in your data to shed some light on that?
I don't think you should worry that much, John, about the Airbnb effect. I think you should worry about that as a small component to the broader point that Diana made, which is we just do not have enough houses in this country, and we definitely do not have enough houses for sale. If there were more houses for sale, I guarantee you our agents could sell them. We want the home builders to succeed and bring new stock to the market. If there is an Airbnb effect and people start to put those houses on the market, that would be awesome, I think, for society. So anything that will unlock more housing supply in our economy would be awesome. And I'm pretty bullish on the medium term for housing because of the demographic trends, but we do need all the different pieces of supply to keep expanding to try to keep up with that.
All right. Ryan Schneider, CEO of Anywhere. Thank you.
Thank you, John.
Coming up, LVMH out with earnings just moments ago. Shares are up more than 25% so far this year, but with signs of slowdowns in two key markets, could that rally soon run out of road? That's next when the exchange comes right back.
now. Rated R.
Welcome back to the exchange. LVMH just out with earnings, and the results showed that while the Chinese economy overall slowing, the high-end consumer there still spending. Robert Frank has the numbers. Hey, Robert.
Hey, John. Well, LVMH reporting 17% sales growth in the quarter, but warning signs flashing here in the U.S. with sales in America falling 1%. CFO Jean-Jacques Guyonet saying the aspirational consumer in the U.S. is, quote, not shopping the way they used to. This is showing up especially in cognac and spirit sales, but also in leather goods and jewelry. He said it's the entry-level items that are falling, while the very high-price goods that are basically for the wealthy, they are still performing well. There was one caveat, and I highlighted some of this last week. That was Americans who are shopping in Europe, thereby cannibalizing some sales here in the U.S. European sales were up 18% in the quarter. They said about half that came from tourists, and most of those tourists were American. The one bright spot in all of this was China. Despite fears of a slowing economy there, the Chinese wealthy, as you mentioned, are still spending strong. Sales in Asia, ex-Japan, were up 34%. Especially strong were sales of leather goods and jewelry. Now, LVMH also hit with higher expenses, especially from that blowout Pharrell Williams fashion show back in June. The company didn't break out the cost of that, but cited, quote, one-off promotional expenses that put a lot of pressure on margins. Luxury stocks have been under pressure since Richemont cited its slowdown in the U.S. last week, and you can expect more pressure on these stocks tomorrow morning when they open, because again, John, China was an upside surprise, but the U.S. has been such a powerful engine of growth for these companies, and now pretty suddenly they're seeing that aspirational consumer drop out.
Well, Robert, I'm going to try to connect some dots. I don't know if they deserve to be connected, but give me your thoughts. We just had the Alaska Air CEO here on Overtime talking about international travel being particularly strong. That hurt him a bit. High-end consumers are doing that. But he said he expects that to rebalance in September. Does that hurt the likes of LVMH, who have been benefiting from those U.S. travelers going over to Europe, if in fact in September they're more staying home? Or is this such a high-end customer that LVMH has that they're still taking their ski trips in the winter in the Alps?
Well, if those high-end consumers come back to the U.S. in September and start buying more of their luxury here rather than Europe, which they're doing this summer, that will help their earnings and sales in the U.S. But the big question is what happens to that aspirational community. People think about luxury as the wealthy. In fact, the bread and butter for luxury companies is that aspirational upper middle income consumer that splurges when they're flush with cash. They're not flush with cash right now. They're not spending. So I think even if you get those wealthy people coming back to the U.S. and even spending, it's not going to make up for that aspirational consumer that's very quickly dropped out of spending.
You know what's going to happen to that aspirational consumer? Student loans. That's what's going to happen. So we'll see what they're still going to spend money on after the fall. Robert, thanks. Coming up, Microsoft and Alphabet out with earnings in about 2.5 hours. We're going to talk to the CEO of a company using AI to help boost productivity and sales at both next. And there are still a few hours left to get your virtual tickets to CNBC and Boardroom's Game Plan Conference. There's a QR code down there. You can scan it. That conference is bringing together some of the biggest names at the intersection of sports and business. Register and buy tickets, again, by scanning that code or heading over to CNBCevents.com. Be right back.
msftgoog.com.
Welcome back to the exchange. We are just a couple hours away from earnings from both Microsoft and Alphabet. Investors are going to be listening for any AI color. But Gong, an AI startup once valued north of $7 billion, already providing software on those tech giants' platforms to drive sales, build skills. So how is enterprise software going to be disrupted, and how soon? Well, joining me now for more is Gong co-founder and CEO Amit Bendoff. Amit, good to see you. So tell me, how quickly is this AI usage accelerating, and whose platform of the hyperscalers out there is doing the best job of accelerating it?
Well, we're seeing a huge boost with the current hype with AI right now. We started with AI in 2016 on the premise that enterprise applications were outdated and can be transformed with AI. We've been shy about it until now because it was too revolutionary for people, but now companies are reaching out. What can we do with AI? Can we improve productivity? How can we cut costs? And I think a lot of companies will benefit from it. All the hyperscalers, the platforms will see huge boost because AI is also compute intensive. So it does take a lot of computer resources, but it can also increase productivity big time.
So Microsoft announced this 365 tier that they're going to charge $30 more for the AI flavor. That got a lot of people excited last week. The stock went higher. But it also got a lot of competitors excited because they feel like, okay, now there's a big player in the space that's setting the bar high on pricing, kind of signaling that we expect to make some profit off of this. Were you happy about that also?
I think it's a good thing for companies to drive productivity with AI, and definitely there's profits to be made because you can think of AI not just this technology, but as a BPO. It replaces human labor, usually for people that are highly paid for menial work. So the opportunity is definitely out there, and I think we're not even scratching the surface of what is possible. A lot of companies been jumping on this bandwagon. Some were quick to crank up a GPT this or GPT that, but the companies have been doing something real and deep will succeed big time, and I don't think there's a limit to what the market will pay for that.
But when? So last quarter was big for me in AI because we saw both the NVIDIA surprise to the upside, which sent that stock skyrocketing, and we saw the Chegg surprise to the downside where they warned, we got some concern that this is actually getting people to consider not signing up for us. What's the next signal going to be for investors within software that AI is having a near-term impact? Because, we can talk about what it's going to do several quarters, even years down the line, but when's the next, and what is the next nearer-term impact?
Well, it is already doing some things, and I don't think we're going to see an overnight impact in terms of profitability of company. It's not like a 1 week, but we're already seeing the results of work that took a lot of people's time being done automatic right now. I'm not sure what is the right signal for investors. We're focusing more on building the business, but there's no doubt that it's coming, and we see mandates from companies from the top down, reduce cost with AI. It is clear that the opportunity is out there.
One of the areas of most intense focus for you is sales and using Gong software and AI to assist.
All right, so I was going to cover what I thought about the markets. Now, do I wait for Power Hour? Do I do it now? There's nobody here. Maybe I'll do it on the live stream, or unless we get some people here or something, I'll do it then. We can go over these earnings.
One of the examples, AI
let me see.
monitored one of our customers' conversation, and it recommended when you call on a new customer, please talk about one part of the solution and not the other. So, for example, if they had an iPad and application, talk about the iPad before you mention this. That small change increased sales by 12%, which is massive. The other areas, think about all the work that people need to do. You meet with a customer, there's, let's say, over a Zoom call, and then there are 3 or 4 action items.
Wow. Okay.
AI can do all of that for you.
I mean, we're going to have to leave it there. Thanks for the examples. We're going to watch those earnings. Amit Bendov from Gog. That's going to do it for the exchange.
Thanks for having
Power
me.
Lunch right after this break.
All right, so the spies and it looks like the Qs are starting to pull back a little now. I want to see where this finds support at, because this has been a low volume push today, and I mean it just has been. There's a little bit that's keeping me from just going long. Now I will, but I will also know in the back of my mind the stuff that I'm seeing. All right, and I'm not stupid. I know what's going on. That was a little message. So I feel like it's useful for me to say this here when there's nobody here really. So what I would do is I'll cover it. I'll cover it when we have people, or I'll cover it on the live.
I'm Tyler Matheson. Glad you could join us for a Tuesday. Coming up, who's the boss? We're seeing two distinct leadership styles emerging across boardrooms and corporations. Companies run on the one hand by seasoned, safe, experienced operators, and those run by revolutionary and sometimes risky mold breakers. Wonder who we're talking about there. Which is better for shareholders?
Plus, a fast fashion faux pas. TikTok recently launching an in-app shop, pushing big into e-commerce, but could it face similar issues to other e-platforms that sell made-in-China products? But first, a check on the markets. The Dow on pace for its 12th straight positive day, and it is up right now about 70 points. Everything, all of the major averages are actually higher right now, except for the transports, which are flitting just below the flat line.
All right, Morgan, let's start with the big list of earnings out and on deck. Everything from automobiles to housing and big technology. Let's start with GM. Shares down despite a second quarter earnings beat. The automaker raising full year guidance but announcing deeper cost cutting. CEO Mary Barra telling our Phil LeBeau she's still optimistic about the automaker meeting its EV goals.
If you look at our EV ramp up, we said we were going to produce 50,000 in the first half of this year, 100,000 in the second, and then cumulatively to 400,000 by middle of next year. We are still on track to do that.
And here with his reaction and thoughts, Michael Ward, auto analyst at the Benchmark Company, has a buy rating and a $60 price target on GM. Welcome, Michael. Good to have you with us. I guess my question about GM is this. It feels like a stock that is stuck in neutral and always has to me. It just sort of trades there from the high 20s to the high 30s. Maybe it nips into the, but it never breaks out, let alone get to 60.
Yeah, well, thanks for having me. First of all, it's amazing. Those are very cyclical. That's a given. And, historically, they perform very poorly in downturns.
Look at that flag on NVIDIA, guys. You guys see that?
I think one of the things that's really
it's
unique
pretty clear if you don't see it. Just like things in my life, I feel like
not just in North America, but
maybe it's
also
just
in
me.
Europe
I don't know.
and in China. And so when I look at General Motors, I look at Ford, and I look
But
at
things
the
are pretty
position of the group,
clear.
they're probably in a better position today than they ever have been in the early stages of a recovery.
Sometimes you
And
got to
so
be the
now it's
better
put up a
person to
show,
know what to
really.
do and just go ahead and do what's
That's
best
where we are.
for
So then is the read
the
through
other
here that this is
person.
not just a GM specific story, but this is going to translate
So
to other automakers?
I just
like
don't know
Ford
if
that
I can
report
go
later this
long
week,
this
too?
right now.
Yes,
I
and
could
I
go
think probably
probably
the
go
upturn of the
short
stock today
on a
probably has to do
retest
with
of
the
this
upcoming
pennant.
union negotiations.
Let me go to the
Yeah,
3
the
minute,
union
5 minute,
General
and all that
Motors
good
Stellantis
stuff.
expires
You
in
know, the
mid-September.
volume is
When you look back
it's kind of to the
historically,
buy side, honestly.
it's
That's a
4-year
technical
agreement, and every
breakdown.
time you come up to that expiration date,
Unless
in each
this
of
is
the
a
last
failed
5
breakdown, it pushes
periods,
back
like
up
August
only
before the
to
September deadline, the stocks have underperformed.
raise itself up
And so
higher.
that is a headwind, and really that comes down to news headlines.
This might
The
even be a
UAW
buying
needs to get out in
opportunity here.
front
Let me pull
on
up
the
the
news
2
that comes
minute
out
and
with
1 minute.
headlines that are looked at negatively as it relates to the auto manufacturers. And the vehicle manufacturers really can't say much. So
Really
unfortunately,
want
at
to
least for
dig
the
in
next
and see
month,
what's
the
going
stocks are
on
probably
here.
dead water. But I think when you look longer term, I mean,
Because
this
you're
is
only
the
going to
first
get the
time you're
truth
coming out
yourself.
where you don't need
I
to
don't know.
restructure cost.
You got to dig in and do the work,
And
or
the
else
companies
how are you going to
spending money
know
to accelerate growth, as
what
Mary
it's
Barnes
doing?
just mentioned on the electric vehicle side. And electric vehicles are coming. And in North
I
America,
mean, you can like
it's
kind
probably
of
gonna
sense
be more
stuff,
on
but
the pickup truck and van side,
you
which
really
is the
gotta
strength of General Motors and Ford.
I like your subtle
Really gotta,
analysis here, Michael, and I mean
like,
it.
see it.
I guess
you could say.
If I'm going to put it in my words, it's that GM is better positioned today because things aren't as bad as they usually are.
Now, two
That's
things.
a good way to put it. That's exactly right. And one of the reasons
Look how clean that is,
the stock's been
guys.
stuck in that rut
Look at
is because
it could never be more clear
early,
than this.
including going bankrupt in General
You
Motors
know,
case.
like a lot of stuff in my life,
the buy
it
rating
couldn't
of
be so
60,
clear.
By when?
Which is okay, you know, it's
usually it's a
okay, it's all
12-month
good.
12-month
You
timeline.
just,
All right, Michael, thank you very much. Michael Ward of
you
the
know,
Benchmark Company.
you
Appreciate your
read
time
the
today.
tea leaf.
Thank you.
No,
Thanks for having me.
You bet.
you read the
Those
tea
UAW
leaves,
negotiations are gonna be one
and
to watch, especially when you talk about EV transition and the
you
fact
know,
that the
it's all up to you to make the
labor,
decision on what it is
scheme
you want to
there
do.
is not as
Whether
intensive
it's
in
what
terms
you
of
want to do or
manner
not,
as
like
it
whether
is
I
with
think I like
ICE
Nvidia's
engines, and so this is
like
where you
short,
make a point.
if I should be shorted or not,
That's right.
you know.
That's right. All right, well, let's
It's not
get
that I want to
to
be
another
short, but
earnings mover. The
or it's
home
not that I want to
builders,
be
Pulte
long,
Group,
but
posting
you know,
strong
if
second
it's going to
quarter
go down, I got to
gains,
go
really
down.
topping Wall Street estimates
I got to
as
short it.
demand stayed
If
strong
it's going to
boosting
go up, I
new
got to
home
go,
sales
you know,
despite
I got to
mortgage
go
rates
long.
actually just crossing 7%.
So you can
last hour.
relate a lot of
Again,
this stuff to
as
your
a result, the
personal
stock is
life
up nearly
as
6%
well.
today. It's up 80% for the year. Let's bring in
It's okay
Stephen
if you guys
Kim,
don't understand it.
home
That's
builders
it's all
analyst
good.
at Evercore ISI. Great to have you. I don't think you're surprised. You've been pretty bullish on home builders for what, the better
I
part of a year
think-
now.
Yes, that's right.
I don't know. All I
Of the opinion that you're going to see significantly better than expected results due to the lack of inventory in the market. That was something that really convinced us last year.
Let's see here.
That we should stay
So
with these names.
I
even
was
though
going to
they
go
really looked like they
into
were
the
falling off a
markets. I
cliff.
was going to go into like the
And
SPY and
in
the
fact,
Qs and
that
whether
really
we should
has
take
been
longs
rewarded.
here
Investors
or
who've
be
stuck with the builders
cautious
since, let's say, last July.
or what we should
They're
do.
up about 90%.
How many times have we
Builders,
seen it
including
just start
Pulte,
to roll
and Pulte
itself
put up a
over
whopper of a quarter
when it
this
gets up to
morning. I mean,
these
it was
areas
really
and then just
across
roll
the
over towards the
board,
end of the day?
better than
A
expected.
lot.
And
We've
not
seen it
only
a
that,
lot.
but they leaned into it with their guidance and they said, look, these margins
Everything
that we're
is
generating,
high.
these are not, you know, there's no
5
shoe to
day,
drop. It was a phrase they used on
daily,
the call.
well not 5 day, but
They're
hourly,
forecasting them to stay very
daily,
strong for at least the next
5
couple of
minute,
quarters.
you know,
The incentive
it's all
piece of the
over.
puzzle, and I asked that on a day where we did see Case-Shiller home price numbers, where again an
Here,
increase
boom.
month on month for prices in the major
Consolidates.
metro areas here in the
Kinda
U.S. And as
curious
we've seen
if I
commodity
could get
costs
a
and
move
certain
to
costs
move.
associated, perhaps even with labor, begin to come off right now. I mean, is Pulte and the other home builders really in a sweet spot here in terms of margins?
Yeah, they really are.
to
I think
move
that's right.
trade.
You know, a year ago and even a year and a half ago, people were very concerned that the rise in prices was just just simply, unsustainable, and they saw it as something unnatural.
I hope you guys are
We
doing good
actually,
out there.
by contrast, saw as
I really do.
the natural result.
I don't know how much
of
longer
a
I'm
complete
gonna
and utter lack of supply. Nothing sells like a shortage,
this. Let's
and
see here.
basically these home prices got to where they were because somebody was buying.
Would you
them.
guys like to see
That's what you're still
the?
seeing today. The home prices are high.
Would you guys like
The
to go
mortgage
over
rates are
earnings
high,
calls
but
and like
there is no
what
supply
expectations
out
are
there,
going
and
into these
the
earnings?
situation cannot be fixed quickly because, frankly, we've been underbuilding this country for about 15 years. It's still hard to build houses. Pulte will tell you that. They'll be the first ones to tell you. It's not easy building houses, getting approvals, and finding all the labor and materials to do it. So Therefore, you're going to remain in this tight inventory situation for the foreseeable future, and that will be a benefit to the margins.
What does their order backlog look like?
Their orders were fantastic, actually. Their orders surpassed expectations. They were up like 24% year over year. More to the point, the communities that they are selling out of are generating more sales per community than they were in the pre-pandemic period. We attribute that to a number of things, including the fact that builders in general are trying to make sure that they are offering a product which maybe is a little smaller, maybe a little bit cheaper, or smaller, so that they can hit a price point. And typically, when you're doing that, you're selling more homes per community. That's sort of built into your business plan. So their productivity in units is very, very strong, and that's really a help to them in leveraging their fixed costs.
Quick question for you. Stock's up 82% so far this year. Is it still a buy here?
It is. I will tell you that when we've looked back, I've been doing this business for a very long time. You had Mike earlier on. I've been doing it probably as long as he has. And I'll tell you, when we've gone back and looked at what kind of runs you can see in home building stocks, we still have a ways to go. I know it seems like an awful lot, but you got to remember where you were starting from was basically as low as it ever gets. We've seen runs like this last longer than this, go further than this, and certainly hit valuations that are higher than where we're at right now.
All right, Stephen, thank you very much. Stephen Kim, we appreciate your time today.
Thanks for having me.
You bet. All right, moving on to two tech giants that report after the bell, Microsoft and Google. Investors looking for updates on AI and growth for cloud computing. Our next guest covers both of the names and also has a buy rating on both. He's Brent Thill of Jefferies. Brent, welcome. Good to have you back. Let's start with Microsoft. What are you looking for there? What are the key numbers we should pay attention to?
Yeah, the key for Microsoft is really closing out their fiscally strong Q4, growth of Azure Office, and most importantly, the AI impact. They launched pricing a week ago that kind of blew everyone away in terms of the price lift, between a 50 and 100% price lift per seat, per user. So when is the AI rollout going to have an impact? There'll be a lot of attention on that. I think there'll be a lot of attention on, the pricing. Everyone has said that was way higher at $30 per user per month. Why did they feel confident in pricing at that level?
What do you think?
The overall AI
what do you
impact,
think? Is it too aggressive, or what do you feel?
I felt like it was too aggressive out of the gate. Remember, enterprises are going to get discounts. They'll get it bundled in when they sign a larger enterprise license agreement with Microsoft. So I think initially on paper it looked really aggressive, but I think this goes back to Microsoft's view and the value that they're creating in this platform. It's not generally available, so you can't talk to a lot of customers to see, hey, do you think it's worth it? But I think everyone in the industry we talked to in the last week is like, that was way ahead of expectation. If they can pull it off, again, this is why we're so bullish on Microsoft. If they can get customers to pay for this, it's a massive revenue and earnings accretion story. The offset of this is the expense structure. Everyone is freaked out that they're going to have to guide way higher on expense. Ultimately, I think they get a hall pass as long as the revenue's there. They can guide to where they want on the expense structure. So CapEx and OpEx, I think the street's a lot higher than where published analysts are at now, bracing for an AI investment wave. Again, most of these products are not even generally available, so you have to plan and put in the infrastructure to get it sold.
Yeah, so in balancing investment versus actual monetization of these new AI capabilities, I could ask the same question about Alphabet as well, since these two are very much in an AI arms race against each other.
Yeah, a little different here, really about the state of the ad market rather than the enterprise demand market, where Google's most of its revenue is tied to advertisers. Again, the checks have been, advertisers felt better. The writer strike's helping YouTube. We continue to see good momentum around their AI platform. We don't believe the consumers are running to Bing. They're staying with Google. That's good for advertisers. They want to spend money where the users are. So overall, things are improving. They should accelerate revenue growth. And again, AI is a story here, but it's probably a little more murky. So everyone's going to ask a little more questions about directionally where they're going, when they can monetize it. They have not been as loud and as convicted as Microsoft. So more clarity there on that front will be needed. Stock's still cheap. We think, again, the simple thesis in AI, Microsoft will win the enterprise, Google will win the consumer. There's room for both are buys in our book.
Why do you think Google has been a little murky and seemingly a step behind?
Microsoft lost the cloud to Amazon. Nadella is a thought leader. He did not want to lose this. Look, none of these products are really even shipping. And so everyone's like, why did he get out there? And why did he carry the flag and the torch out in front of the parade and jump up and down? And it's because he didn't want to lose the next battle, which is the cloud shift and now the AI shift. He wanted to be out in front of this. I think that Google has the technology. I think everyone's going to be blown away when they take the cover and pop the hood on this engine and everyone gets to see the power behind their AI platform. That's been our thesis for a while. So they have done a poor job of articulating what they have, but behind the scenes, we think Google has an incredible lineup and they're going to shock us all. Again, you can see other AI products and work and all the consumer products you use. You jump in your car with Waze, you use Gmail, you use their productivity suite. You can already see their AI at work, but they haven't been as loud in articulating what it is relative to Microsoft. So Microsoft's carrying the torch in terms of the chatter and the expectations and the sentiment. And I think Google's really going to carry this on the product line when we get to see truly what it is. We haven't seen it yet.
Yeah.
So,
yeah, I mean, we've just talked about AI, commentary, guidance, investment, monetization of AI, both of these companies, what that looks like and what the future holds. But in terms of like the key metrics and the segments that are already generating money in meaningful ways today, what is going to move these stocks? Is it going to be Azure at Microsoft and the ads business, as you mentioned, at Google?
those are the two. Those are the two biggest mile markers. Again, enterprise demand for Microsoft, Azure, and Office, and then AI. Those are the ones to watch for Google. It's really the state of the advertising business. That's really what's driving the bulk of their revenue. So those are the big mile markers everyone's looking for.
All right. Brent Thill, thanks for joining us. Great to get a preview right there.
Thank you.
And of course, make sure to check out even more earnings coverage on Closing Bell
What
Overtime.
show will that be on? Yeah.
4 p.m. Eastern.
4
I'll be
p.m.
kicking that
Will you
off
be
with
there?
John Fort.
All
We're going
right.
to strap on our seatbelts. It should be a wild hour.
Be a good hour.
Yeah. All right, well, coming up on Power Lunch, in the meantime, another major earnings mover, Raytheon, down big, 12% right now after disclosing an engine manufacturing issue on some planes. We've got those details ahead. Plus, TikTok keeps adding services to its shopping list, expanding into music streaming, betting big on e-commerce, but is the platform taking a big risk with the White House watching its every move? And speaking of music streaming, check out Spotify as we head to break. Missing on revenue, issuing weak guidance. All that said, subscriber numbers did climb, but that stock is falling. It's down about 15% right now. Stay with us.
Fabletics.com.
Welcome back. TikTok keeps pushing the envelope despite having a regulatory target on its back here in the U.S. The social media platform recently announcing a push into music as well as retail. Deirdre Bosa and Steve Kovac are here to discuss. All right, Deirdre, lay this out for us, given the fact that this is, I think, yet one more example of an internet company, of a social media company becoming a all-in-one, one-stop shop.
And what's unusual about this is that it is a Chinese one. I mean, Chinese companies have traditionally had a lot of trouble moving into the West. They haven't even tried to. And then TikTok came along and proved essentially that it could be a real competitor to American internet companies like Facebook. So you saw Temu from Pinduoduo as well as Shein, these Chinese e-commerce companies, actually begin to have a lot of success here. They've flooded the market with a lot of advertising, Super Bowl ads, but they're gaining success and they're gaining American consumers. So now TikTok is looking at that and saying, hey, we want a piece of this also. But I don't know if you've used any of these, Morgan or Tyler. It is quite the experience. It is not shopping as we know it. It is shopping with Chinese characteristics.
Steve Kovac, you're laughing at that. I also think it's interesting we're getting this news 24 hours or I guess 48 hours after the rebrand of Twitter into X.
You took the words right out of my mouth. So we've been talking about X as a super app, or at least Elon Musk has. Well, that's kind of what TikTok is doing, not just this...
They're trying to do.
Not just this e-commerce thing, but just last week they added a new way to post with just text. We know TikTok, of course, as a video app. And then they're also getting into music streaming, taking on Spotify and Apple Music. And that's an interesting move here, too. They're doing it only in Brazil and Indonesia now. But look, TikTok actually got its start as a different app called Musical.ly, where people would kind of do these funny lip sync videos with music. It's become a huge music discovery platform along with YouTube and Spotify. And so there are tons of other streamers trying to take on YouTube, or Spotify and Apple Music, rather, the two market leaders. But this one actually could have a chance just because of that dedicated TikTok user base if they ever do bring it here to the United States and expand more.
Deirdre, what are apps going to look like in 5 years? I mean, if that's what we're talking about here, is the kind of the change in the way we interact with apps and our phone, what's it going to be like?
You know, that is a difficult question because we have this big generative AI shift. So who even knows if we're using our phones, looking at apps, going on the internet, that could all change. However, what Elon Musk, what Mark Zuckerberg, what many tech leaders have hoped their own apps would look like are, as Steve has been talking about, super apps. But it's a very different case here than it is in a place like Asia where the internet, where payment systems evolve very differently. So we know that, you know, this isn't the first time that Elon Musk has tried to copy, or actually you could even say he was thinking about super apps before the Chinese were, but he hasn't been successful in doing so, Tyler. But what is the future of shopping online? I mean, that is a good question. Maybe you do need to open the Temu app. It's like my producer this morning said it was like gambling, like you're spinning wheels, stuff is popping up at you. The discovery function is so much more built out than, say, an Amazon, but it's really in your face and you're getting offered free stuff, free money all the time.
Not to mention, you order something, it might show up in 2 days or 2 weeks or 2 months. You don't know. It's not like this guaranteed prime shipping thing. It's a very different experience. But like Deirdre was saying, huge. It's number one, number two in the merchandise. Chinese junk.
Not good.
Plastic stuff.
Right.
So yeah, that's what they're going. But it's huge. It's cheap. That's the thing. If you want to buy a case of toothpicks or something, it's probably better than going to Walmart or Target.
Case of toothpicks.
Yeah.
That sounds
All
good.
right.
Put that on my birthday
There you
list,
go.
please.
Deirdre Bosa, Steve Kovac, thanks for joining us. So what impact does TikTok, Shein, and the fast fashion industry have on the retail space? We're going to continue to tug on this thread. Joining us now is Brian Gildenberg, Retail City's Managing Director and co-host of the CPG Guys podcast. Brian, thanks for joining us. And I'm going to ask you that very question. What does the future hold now?
Well, we're all just going to buy cases of toothpicks. Apparently, I'm very excited about that. So, now I think there's a couple of things in here, and I think that I think Steve made an excellent point talking about the concept of discovery, and I think that's a lot of what you're seeing here, which is that the nature of how products are discovered has changed so fundamentally because of TikTok and the engagement that it has, and the way in which it serves that engagement up, which is algorithmically and harder for advertisers to manipulate and control. So as a result, all of the things that can connect to TikTok are different than the things that connect to Insta, or to Facebook or to YouTube, which are platforms that large advertisers understand better. So it created an opportunity for Shein and Temu and Wish.com and other things to come along that kind of natively understood that sort of randomized, gamified, algorithmically driven demand generation and matched the sort of footprint of TikTok with their own footprint. So I think right now that's been the biggest shift. And I think one of the primary reasons why Shein and Temu have been as, short term as commercially or sales wise successful in the US as they've been.
Interesting. And we've touched on it a little bit, but the fact that there is this regulatory angst or risk or whatever you want to call it brewing around TikTok and its operations here in the U.S. But, I mean, you just mentioned some of the names of other competitors that are stepping in with a similar business model here. But we're not talking about U.S. companies that are doing it, at least not yet. Maybe X is on its way.
Okay, sure, maybe it is. They got a ways to go to figure that out.
Yeah.
I'm probably, I think Shein and Temu, which are both relatively well-established businesses in China that know how to link up to that type of algorithm, I think that's fine. I do think it's important to keep in mind that TikTok is a very different thing than Shein and Temu, which are retailers. I think TikTok's move into commerce remind me a little bit of what Shopify tried to do, which is that they
All right, guys, got a couple plans. It's 2:30. We do have these earnings coming up here in just a couple hours. It is storming here where I'm at. It's you know what, and I even have a black cloud over me at all times for some odd reason. I'm trying to change that, but it's always a storm. It's always thunder and lightning. Outside of the market and stuff like that. Let's see here. Just having some. It's not personal issues, but. Anyway, let's move on. So there's some stuff I want to talk to you guys about on the live. I want to go through and get these earnings and stuff ready, find out what time they're going. So there's some things that I'm looking at here. All right, so I need you guys to realize. Let's see, let's go to a 3-minute on Google, for instance. Equities show extended hours applied. So if we go to Google, we have VWAP. Where is VWAP? VWAP is 122.41-ish. Okay, 122.41. 122.41. 122.41. Oh, wow. Isn't that funny, guys? What do we also have there? We have the 50-day as well, 122.46. So you have a break of the 50-day on Google. Okay, and there's some other ones that I want to show you. Man, this is a nice pennant breakout here. This could be a bullish signal. So with that, I want to get into the next one.
Be under the influence of the Chinese government, and whether the U.S. government's going to countenance it forever.
Yeah, I certainly think that from if you look at Shein in particular and the kind of the curious ownership structure that it has. I mean, Temu is owned by Pinduoduo, which is a real company. I think there are certainly areas that you could see regulatory involvement start to restrict the types of Chinese companies that can work here. But I think in the end, if the consumer gets value out of something, especially for something that brings them joy like TikTok does.
So AMD, we are on the daily chart right now. 20-day moving average coming into play here. You have VWAP sitting here at 114.56. Call it 114.50. All right, I go to the 3-minute. VWAP is at
We'll get a preview of
112. So 114. What was it? 114.36. And there's a reason I'm doing this, because it shows me where I can possibly buy the dip and then look for a long exit, and if it also matches up with support, resistance, and all that good stuff. So I want you guys to start thinking about that stuff, and I'm going to talk more about it on the live stream. But a lot of this stuff is important because TC, I don't know what that is. TRP. TRP. Man, I want to make a short later on. TRP, Trans Canada. Let's go to the 5-minute. What's going on? This thing has been sinking all day. Wow. My whole thesis on this was just getting above the 50-day, you know, on the daily and touching it. Whoa, 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 whoa. Whoa, 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 whoa. So if I go to the daily, again, what do we have here? We have the 50-day. Let's just put this whole thing in the picture. I'm really going to fucking tear this market up, I'm telling you guys. We got Baba this morning. I had a little drawback on Carvana, but it's, you know, I sometimes as a human being, I make mistakes myself, trying to do the live, trying to do my own stuff, and I'm not thinking clearly, and I don't act like that. It's so weird. You know, this is why you don't try to front run a move, because you front run a move, you might get hurt. Or you know, it's maybe you got to draw down the position size. So AMD, again, the 50-day on the daily is sitting up here at 114.57. 114.57. Go to a 3-minute. 114.57 it was. So we're almost there. 114. Is it 114.57? Is that what I said? Let me see here. Yeah, 114.57, and that brings us also right in line with the resistance area. So this is the area I'm going to look to get to on AMD if we can get there. Especially if we can break close. And I mean, there's only $1 left there, and it's already ran up so much, so you got to be careful. But 114.57. If I look here, 114.57, that'll bring me just about up here with this resistance. See that resistance or support there? Should probably start to turn that into resistance, I would assume. So this whole area is where the 50-day is. That would be our target. You only got $1 or so left. Boom, boom, boom. We do also have a little bit of a gap fill up here also. So that's also something you want to think about. So there's about $2 left on it. We'll see. I should have taken this earlier. I wasn't watching it. But you can do things. Oh my gosh. So that's a failed breakdown on NVIDIA. It's a failed breakdown on NVIDIA. Let's go to the daily, and it's still way above its moving averages, so there's nothing there for that. 15-minute chart. You do have a crazy double top. Sorry, I'm just hearing the thing come through. Oh my gosh. Shit, they're talking about steel, and I've been looking at X. Look at X, guys. Wow. Wow. I told you guys. I mentioned this, and look, I have it charted out. I felt like this was putting it rallied, put it in a base, and does it try to extend for another leg higher on the dip? Left shoulder, head. You know, it may take time. So
the Biden administration's asylum policy at the border. But the ruling is stayed for 14 days, allowing the administration to appeal to the Ninth Circuit. Now, the policy largely limits migrants who pass through another country from seeking asylum in the United States. The case may ultimately end up at the Supreme Court, and legal observers tell NBC News it is likely that the policy will remain in place while that process plays out in the courts. A State Department spokesperson says the former U.S. Marine released in a 2022 prisoner swap with Russia has been injured fighting in Ukraine. According to U.S. officials, Trevor Reed was transferred to Germany for medical care. Those officials say Reed was not acting on behalf of the U.S. government. And the Department of Education opened a civil rights investigation into admissions practices at Harvard. A spokesperson for the department says the investigation will focus on whether Harvard discriminates on the basis of race by using donor and legacy preferences in its undergraduate admissions process. Morgan, those legacy admissions are really starting to come under the microscope now.
They very much are. Bertha Coombs, thank you. Ahead on Power Lunch, what is the C-sweet spot for corporate America? Do shareholders want chief executives who will get the job done and keep the ship sailing? Or innovators who push the envelope? We'll discuss next.
How did I know we could have took the long yesterday? I felt like I could have taken this long. You know, you can see here this pre-market coming into the week. It starts to shift itself from a downtrend to an uptrend. See how it comes up to the high resistance, and it feels like it comes down and supports and starts making higher lows. See that? You know, it is what it is. You know, I'm not perfect, but we are at new highs of the year now. Jesus Lordy. Why can I not fucking... You know, reading and reacting is very difficult. It's difficult, but it's not difficult. You know, you just don't have a live stream and focus all of your attention on this. You know, that could be one. It's all... I'm just kidding, guys. Don't mind me. I gotta separate myself from what it is I have going on. But other than that, I'm here to help you guys make money. I made money on BABA today. I had a little bit of a hiccup on CVNA, but it's all good. That's behind us. So I felt it, man. I felt like these markets could push higher. I was looking for the pullback, and we said right here on the SPY. I said it this morning verbatim. I said, look for the pullback in this area to go long. All right. Did I think we would get to new highs? Not necessarily. I didn't know what type of day we're going to have. This is all on low volume. The sellers have stepped away. All right. Look at the volume, guys. Look at the volume. Look at the sell volume. There is a lot of buying going on too, though. Don't get it twisted. You know, in the same token, it's just at smaller increments, and it feels like, you know, like look how low the volume is today compared to all of this. We're going to get the answers tomorrow. We're going to get all the answers tomorrow. We put in a double bottom, boom. So, you know, I just, you know, I try to do what I can do pre-markets to help you guys make money and make your decisions. You just kind of got to listen. Maybe I have to do a better job at some things. Didn't call that to catch it. So maybe I got to do a better job when I do these. Like I thought that I gave out a clear game plan, that I was looking for the S&Ps to pull in right here, roughly, and see if we could catch that bounce. I said it on AMD, or not AMD, but NVIDIA. I told you guys the target long on NVIDIA was this double bottom right here. See if we could break it and retest it. It just ripped right through it. Right here, this is a 15-minute chart, so let me dumb it down. Let me dumb it down real quick. So right here, this level right here, it kind of just, it's where we broke, it's where we opened. We opened and bang, just ripped. And what else do we have? We have a down day. Nice little volume at the end of the day. Let's see, open, close. Yeah, it was somewhat of a down day. But you can start to sense the, you know, the lower high being made. It's building a base. You know, it's not shoom, 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 and it's just like, it starts to just find itself. You know, shorts start to cover, and then now here we are, rallying out on a failed breakout. So what do we don't have any major moving averages. I can say an upside target obviously is going to be this pivot right here, 464.22. Let me dig a little deeper, guys.
Retirement age, that's an artifact of the 1930s, and Social
And
Security
do not
set that
think you
way.
can just hang on to these overnight just in case something happens. We also have a Fed meeting tomorrow. This could all be a run up and taken back tomorrow. Those are also things you want to look for. What happens tomorrow? Do we take the whole run back to new highs today? Do we take it back tomorrow? Because that tells you you might get a 2, possibly 3-day downside if we just take it right back. But I don't know if we are yet. Things aren't bad just yet.
People have to be innovators, or what is the juxtaposition of innovation?
Or I should say we haven't ran through all of the, gotten through, like, we still have a lot of earnings to go. Earnings season kind of has just started. We're about quarter of the way through, but we're going to start getting the companies that really matter to start reporting.
Just listen to the things that he's invented. Of course, we know Tesla, SpaceX.
I do want to thank you guys so much for the likes. I have a lot of work I want to do this afternoon. I'm going to start making the live stream here right after the bell. I want to get us Microsoft earnings up, so let me work on that. If you guys have any questions, throw them in the chat. If you're new, welcome. We had a great day. We called the SPY, or the markets really. We said that we would look for a bounce. We would look for a bounce back. We gave you the areas, gave you short. We were short BABA today. I took out Carvana. I did not call that out because I kind of was just like wanting to see if it could go. And then I found out the hard way what was really going on with Carvana. It was being called out probably for not a good reason. I'll put it to you that way.
Yeah, not to minimize Musk. I mean, he's not
it's still it's in a downtrend, but remember yesterday I said this resistance area, we break it and hold it. Look for more upside. But if this thing just continues, it's put in 2 lower lows. So let's see if we start to get the curl. I want to see it curl and get I don't want to see it past 43.50. Or putting in a new low. It's hard, I want this thing to just pull back, start to make, start to curl itself up, boom, 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 and then possibly start to go. Maybe it will, maybe it won't. All depends on liquidity and money that finds itself there.
CEO of Twitter, but he's calling the shots. But he was running Tesla day to day, and tied up with the regulators and all this stuff. That's not what you want him to do. So I think boards of directors need to think seriously about the kind of person who can launch these ideas, launch a company, the highest and best use, and then the professional leadership who can carry it on and really take it to the next level. But I think this whole concept around age needs to be completely rethought, tossed out the window as well. That's been done largely on boards of directors where people are staying longer. Some people are ready to retire at 55. Some people not until much later. And so I don't think you can create this artificial situation. Now, founders is a whole different kettle of fish where you've got people who come in and take it to a certain level, hand it off, and it gets fumbled. And then Howard Schultz is an example of this, where they brought him back a couple of times to run Starbucks and fix the situation. But ultimately, you have to groove a successor who can carry it forward and take it to the next level. That's what shareholders want. They want predictability and consistency.
Yeah, that bench is so important. And there are so many companies that are fabled for their executives that are groomed and rise through the ranks, to your point. I do want to shift gears a little bit here because it is helping to propel the market higher today. It's the consumer confidence reading that we got this morning. It was really a Goldilocks reading. The fact that we saw it come in above expectations, best level since July 2021. And we are seeing those inflation expectations continue to move lower too. I guess just walk us through the report and whether it feeds into the soft landing thesis that the market has really seized upon.
Yeah, so the Conference Board's Consumer Confidence Index came out a few hours ago, and it was a great report. Consumers are more confident than they have been in years, and that's driven by their own view of their jobs. Their jobs are stable. They're feeling comfortable. They're feeling like they're going to be able to keep their jobs. They're not eliminating jobs in this economy. Their wages are higher. And all of this is feeding into it. Inflation has come down, and it's predominantly gas.
Did we just get some little bit of bank news right there, guys? I don't know if you noticed. So Bank of California, no, that's Bank of America. Bank of California. Look at the bank selling off right now, guys. Zion. Come on. So look at the banks. The banks are pulling back. Look at that. Look at Zion, guys. All right. So we just got some news on the banks. This is why you got to be prepared. Got to be prepared, guys. So I'm going to take a look at these banks.
About 3 or 4% inflation levels. The Fed's trying to hit 2. We think they're going to go up again this week. They probably will go up one more time, 25 basis points. But if they can do that without driving a negative GDP number, that will be a soft landing, and it will be easier on employees.
It sure will be. It will also be somewhat of a rare feat. So we'll see if they can do it. Steve Odland, CEO of the Conference Board, thanks for joining us.
Thank you.
Shares of RTX on pace for their worst day since March of 2020. So the pandemic. After disclosing an engine manufacturing issue. Coming up, we'll hear from the CEO about what exactly is at stake. Power Lunch. We'll be right back.
So, Pack West is halted, guys. We have bank news. That's why you can't get up and move away from your desk.
Welcome back. Shares of RTX, formerly known as Raytheon, plunging after disclosing an issue with its Pratt & Whitney engines, on pace for the worst day.
So I'm looking at Bank of America right now. See what happens here. I'll let you guys know if I get into a play.
What happened and what this disclosure means for the company. Phil.
Well, it's a little bit uncertain what it means long term. Near term, it's going to be a $500 million hit that they're going to take because of the engine inspections that need to be done. We're not going to get too wonky here, but let me explain exactly what RTX is going to be doing through its Pratt & Whitney division. They will be inspecting 200 of these geared turbofan engines in the coming weeks. 1,000 of them will be checked over the next year. The issue, they're looking for powdered metal contaminants. Not all of them are believed to have these contaminants, but those that do, they will then have those parts replaced. And
I think I bottom ticked it. I think I bottom ticked it. Okay, I think I bottom ticked it, but there is news.
The Pratt geared turbofan engines power about 40% of the Airbus A320 Neos worldwide. So it's an extremely popular plane, use an extremely popular engine, but they're going to have to inspect these, which means some of the airlines are going to have some downtime here where some of the aircraft will have to have these engines pulled off and inspected. Here is the CEO of RTX talking with us earlier today about the process.
We've got to increase the shop capacity to do these accelerated inspections. We've got 13 overhaul shops today. We're going to add 6 more. So there's tooling and test equipment that needs to be put in place. We're going to have to put some rotable assets in place to replace engines as we pull them. And we're going to have to try and work with the airlines to compensate them for some of the costs associated with this.
Take a look at shares of Delta and Spirit, 2 of the airlines that fly aircraft, A320 Neos, that have these geared turbofan engines. We should point out, this is not a flight safety issue. They're not grounding these planes, but they will need to do these inspections, some of them in the coming weeks, others over the course of the next year. Also, as you take a look at shares of RTX, which, as you mentioned, Morgan, it's have the worst day since March of 2020. This is going to be a $500 million hit, at least initially. That's the expectation. Longer term, they have not been able to put a price tag on how much this is going to cost the company.
Yeah, it was incredible how much this dominated the earnings call, the conference call as well, this issue. And the fact that this very much, Phil, overshadowed what was a very strong Q2. It was a raise
Very
by
strong.
the company for the full year. Commercial, aftermarket, defense doing really well too, as you see all that restocking of supply tied to Ukraine. And yet this has been the driving factor for this name today.
Right, and it's partially that they haven't been able to say, we know how much this is going to cost long term. Is this going to be devastating to RTX, let's say over the course of the next year, or will it be a blip? Odds are it's probably not going to be long term. Keep in mind, they have a decent sense of how many of these aircraft engines they think are going to have parts replaced. They do not think it's a large number, but they have to do these inspections. And again, it's not a flight safety issue. It'd be different if they said ground these planes. That is not what is going on here.
Very quickly, where does this powdered metal come from?
It was part of the manufacturing process. And they first discovered an issue going all the way back to 2020 as they started investigating. Then they said, okay, here's where we think the impact is. It does not impact the geared turbofan.
All right, I got filled on that order, guys. So that was another quick little move there.
Thank you very much.
I set out an order. I got filled on it. I kind of went a little. Let me see here. BAN. Come on. BANC. So this is going up on this. This is actually going up on the news. So let's see. If you don't know, the news was Bank of California is going to. Wow, look at Pac West, guys. Pac West is going down, but BANC, I don't know what's going on with it. Why it's actually up so much. I don't understand. Because Pac West is in the deal. I'm not sure. I'm not sure what's going on here. Give me 1 minute. But I did take shorts on Bank of America. I got short Bank of America, and that was a pretty quick scalp. Alright, okay. Just want to make sure the sound was okay. SPY's coming down. Alright, so, yes. Again, we got bank news. Let's see what comes of this, guys. Let's see what comes of this. Alright, look at Bank of America still sitting here at this area. This is a 15-minute chart I was going off of. Oh, wow. I had no ideas. Man, Pac West down 21%, guys. Wow. Wow. So, this is why you don't leave your desk.
Covered. We have news alert on Pac West, a battered regional name hit hard following the collapse of Silicon Valley Bank. Leslie Picker has the story. Hi, Leslie.
Hey, Tyler. Yeah, the stock price recently whipsawing in the wake of those bank failures in March and April. But the Journal reporting that Bank of California is in, quote, advanced talks to buy Pac West. They say that the move is to further shore themselves up following that regional banking crisis.
They're saying that they're going to buy Pac W. It came through pretty quick. So, yeah.
It could be part of this deal to be purchased by Bank of California, which is actually a smaller lender, and that one up 13%.
Wow.
The Journal is citing people familiar with the matter here. And they say
So
that
big
Centerbridge
news, guys.
and Warburg Pincus will actually be contributing
This news is
equity
bank news slowly coming back in. Again, if you weren't here, I did short Bank of America off of this news, so we're getting it back. BAC, look, we were short. Okay, this is a nice trade. I would look for a bounce back if to see what's going on. I wouldn't even play it. The IV's already there. We got the news pretty early, so still a lot of questions, as you could tell. Maybe get a bounce back to 32.50, 32.39. I'm sorry, 32.40. We'll say even number, and then see if it can't get back above the low of the day, and then we'll take it from there. But Pac West supposedly going to get bought by Bank of California. Yeah, so not sure. You know, maybe it's just, you know, see the headline risk that's there? There's still a headline risk, guys. Just like that. Just like that, things can turn on a dime. How's everybody doing? Not that I have anybody on here. One day we will. One day we're going to have a group of traders on here. People that'll tune in and join us. It is in the afternoon. It's a little slower. Maybe there's more in the mornings. So I got to do a better job of getting people here and staying and doing all the fun activities. No, I'm just kidding. Man, there's so much I want to talk about, but we need an audience. We need an audience. So I feel like the NASDAQ is coming into resistance right now, guys. That was a decent resistance level that I think we can get a pullback off of. I just don't know if it breaks it the first try. And the SPY as well, pulling back. This is a key resistance area. You got two low pivots right there consolidating as support. Now it's just been turned into resistance. So what do we do now? Do we start to see a high volume downside? Do we start seeing sell signals start to catch up? Do we get a lot of, do we get volume on the downside to sell this thing off? I'm really curious. I'm watching a 15-minute chart. All right, I would not be surprised if we did, but I mean, there's just been so much selling.
Welcome back, everybody. Stocks are higher as the Dow tries for its 12th straight positive day, up 71 points.
You're not getting very many buyers up here, guys. I would actually, let me show you guys what I'm looking at, okay? Let me show you what I'm looking at.
You know, Tyler, it's been a wild day on so many fronts. You know, Richmond Fed is in top-tier data, and the service sector and manufacturing are weak. But what wasn't
Look how busy they are at the CBA. I'm gonna put it on, guys. I thought about getting a job at the one in Philly. They run the semiconductor ETF and stuff like that.
And if you look at 10-year, we're on pace for the highest yield close since
They're busy with this bank news, guys. They're usually just sitting around. Now they're busy with this bank news. So I want, because this is where volatility VIX is your orders for the VIX, not necessarily yours. But let's listen up.
Understanding that tomorrow's the big day for a Fed meeting that's been baked in the cake for a long time.
Yeah, I would agree with that. There's not a lot of intrigue with the actual statement tomorrow, but the forecast, people are still very curious to see exactly what they have to say. Starting yesterday, we saw a lot of interest in the expiry for tomorrow, but what we're trying to figure out is if that's for the Fed or is it maybe for Google and Microsoft tonight.
That's actually a good point. And one would think it's most likely the latter because truly there is no surprise left in this. It's like a surprise birthday party where everybody fell asleep before the guest arrived. Now, what do you think outside of the earnings, which are super important? Is there anything else going on? I'm looking up at the VIX. And the markets are up, and the VIX is up. What's up with that?
I knew it. The VIX up and the market's up, guys.
And as we said,
That's what I always say, to look for that.
middle of last week, we've had some pretty big orders come into the pit the last 5 or so trading days for some downside exposure. Coincided with that VIX bottoming, and the futures haven't really kept up the rally that we've been experiencing the last few weeks.
Now, if you had to summarize very quickly, what's the biggest issue that people in the office and clients are talking about in general? What topic would that be today?
Right now, I'm going to go away from the Fed and go more with the earnings, if you're asking me. They let us here. If they have a change of tune, the market might.
I'm right there with them. I told you guys the same thing. I'm not worried about the Fed meeting tomorrow. I'm really not. And I hate to blame it. Unless we get, like, no rate hike, then it's a surprise. We're going to get a rate hike. And unless he says something about the balance sheet.
If that doesn't take that level out, it's definitely going to be a negative, meaning we'd most likely see lower yields. 5-year note auction was a good success. Real quickly, we're almost out of time. What do you think?
I think after tomorrow we'll have a way better idea of the path of the curve.
Gotcha. All right, back to Morgan, and we're going to fist bump here because we think the Fed's going to have a hard time beating Google earnings when it comes to volatility.
All right, Rick Santelli, thank you. Markets are fading the gains a little bit here. Great to be with you,
I
Tyler.
like Rick Santelli. He's one of my favorites on here.
Closing bell starts now.
Yes, it does. Welcome to Closing Bell, everybody. I am Brian, and once again for Scott. All right, this make or break hour begins with a make or break moment, maybe, for mega cap stocks.
So let's go back to the cues, guys. What am I watching? Look at the pivot. Look at the break and retest of this area. It's a little off, but you guys know what I mean. Right here, like, we broke this level. You put in a base here. You broke it, you came back up, support, tried out, we broke it. We did hit it. Boom, and I feel like it's more up here than anywhere else. It's more here. But, again, you know, rejection. Rejection! I'm just kidding. I'm losing my mind. Not really. Not really losing my mind either. I'm going to be paying attention to banks. Again, still on the banks. Look at KRE. Still, it wicked. I want to see if we can get a bounce back and possibly go short. Just as a reminder that banks are still risky. You know, earnings were decent, but like Bank of America, I want to see what happens here, especially the regionals. PNC is not necessarily a good one to, like, I don't know. I'm going to be watching. I'm going to be watching these smaller regional banks. And like Wells Fargo, WFC in particular. And I can tell who's on right now. My guy's on. So hold on. Bank of America.
Yeah. I mean, it is a great headline if we finish.
The guy that's on here now is a semiconductor guy. This guy is really good at he focuses like on semiconductors and technology and stuff.
Things like that. Is there any way that
you guys got to remember, like, a lot of times when these people come on, they have their own niche of what they do. Whether it's like automotive, transports, technology, what type of technology, like biotech, all that good stuff.
Now than they were 6-7 months ago when the market was way lower. I mean, I'm making these numbers up, but if 0 is max bearish and 100 is max bullish, I think people started the year around a 10, and they're around a 40 or 50 now. So I don't think we're euphoric when I talk to, institutional investors. I don't think people are, incredibly bullish, and there could be more, animal spirits for sure from here. I think what people struggle with is just the valuation where we are now. You kind of have to pay a
Look at the selling coming in on Bank of America.
earnings at the end of this year.
I think you might get a change in sentiment. Like, yeah, earnings were good, but does money really want to find a home there after all this stuff? You know, that they went through it. It's just like that. A headline could take your money away just like that. That's where I'm getting at, that like banks are still risky, and I don't know if people want to park their money there. You know, because if something happens, they're out of money. That's it. You know, banks are too risky right now. Maybe I'm wrong, but I'm just telling you what I put money in the bank right now. Not with this type of headline risk that all it takes is a piece of news for it to drop 20%. Like, really?
You know about, there's 7 stocks, 10 stocks, whatever, that kind of seem to run the show, right? They top hundreds of major ETFs. Their weight in the NASDAQ 100, while recently reduced, is still spectacularly high. Not to take anything away from any of our other great best-in-class earnings coverage, but literally, is it just Apple, Microsoft? Do any other earnings matter?
I think they do. I think other companies do matter. I think if you're trying to beat the S&P 500 and 30% of the index is in 7 or 8 names, then you have to manage your risk around those. I think you have to own all these names in some sort of market weight. They're not particularly idiosyncratic, so it's not like you could know something about them that nobody else does. I think 60 sell side and 8 million buy side analysts cover them, right? So it's not like you're gonna.
There's no dearth of information that's going to give you some kind of a delta.
Yeah, you don't know something that's not in the price. 80% of the returns can be explained by some macro factors, and they're really well covered. So my sense is they're risk management stocks. You got to own close to that 30% weighted them. Maybe you like, Microsoft and Meta more than you can mix and match, but your index weight should be pretty mirrored by your exposure, and then you try to make your alpha in the other 70% of the market.
I just wonder if there's alpha to be made in other areas of the market, to your point. I know we love the Microsofts, in part because they are so big, they are so important. You also maybe like energy here.
I like
By the way, oil is about ready to hit 80 again. The OIH oil ETF is at 340. It broke above what looks to be some kind of resistance there. It's failed before. What kind of energy do you like?
Well, I mean, starters, I've been really wrong to recommend that this year. I mean, it's been our top choice for 3 years. It worked great for 2 years. It's been terrible this year. I've been surprised a little bit by supply in some places and a little bit weaker demand.
Look, guys, we're on set for the target. I'm trying to tell y'all, stop playing with me. Stop playing with me, bro. You think this is a game? You all think this shit is a game. I'm just playing. You guys don't think it's a game. But I appreciate you guys for being here. And maybe it's only got a little bit more room to run. There we go. This is our target, top side target. So, maybe I was a little crazy talking about up here, but we'll see what happens. Volume's starting to dry out.
Is rising. Gasoline demand in the United States continues to not only go up, but the estimates continue to go up. Even with a couple of million EVs on the road, Americans driving bigger cars, less fuel efficient, more miles. Have you been on the New Jersey Turnpike lately?
So, is that the one to the west of New York?
It's the one that I'll spend 6 to 7 hours on a day, and I'm telling you, it's full. Doesn't matter if it's 3 a.m. or 3 p.m.
I stay on this island unless I'm going to the airport, but but your point's well taken. I think 82% of new sales are gas, 18% EV or hybrid. Think about the installed base of vehicles. Only 8% are EV or hybrid. So the answer to your question is peak oil demand will be somewhere like 7, 8, 9 years from now.
This thing's selling off, guys. It's selling off. Pack W.
I think oil demand goes up in the United States and globally for the next 20 or 30 years.
I think on the other side of that, you'll probably you might be back where we are now 18 years from now. That could be reasonable. But I think the point is so much money can be made in the interim in the way these companies are going to generate cash. So I like the risk reward of energy. I think what's priced in is not much. I think people are negative. So tactically, I like it. And then obviously long term, I like it a lot.
All right, let's add to the conversation and bring in 2 of our favorite people, CNBC contributors, Bryn Talking of Requisite Capital Management, all the way down there in Houston. A little oil down there from what I hear as well. And Malcolm Etheridge of CIC Wealth. Welcome to you both. Bryn, you see what I just did there? Right, I'm filling in for Scott. I just diverted the entire conversation to energy because that's what I love to talk about as well. I know you like some of these names. We'll get to big tech in a moment. But do you have a macro take or some favorites in energy?
Yeah, well, so, I've been saying all year that I thought that energy long term, I think, is one of the fattest pitches out there. But especially as we were thinking we were going to go into a bigger slowdown than we've had, that hedge funds had been short. You know, you've had 2 years of massive gains. That I didn't think the capital appreciation from energy would be all that much this year, and you can get the dividends, sell calls. But this is a great year, if you don't have exposure to energy, to start dollar cost averaging that into your portfolio. And I think to, you know, you and Adam's conversation is that as people are traveling across the country, I promise you, they're not taking their EVs. Because for me to go from Houston to Dallas in my car, in my Tesla, is 5 hours. In my Jeep, it's 3.5, right? Because I got to stop 2 times. And so I think you have
Buc-ee's
a
is
sector.
lovely this time of year. So get the Buc-ee's nuggets or whatever they are. I mean, come on. That's what it's. By the way,
There's
I
no
tried
chargers
it.
there.
I tried to go from Vegas to San Francisco a couple years ago. It was grim. The video's up on CNBC.com. Malcolm, all right, do you have a view on energy? Or, before we get to tech, any non-tech space that you think may be undervalued? Because, again, everybody's just kind of looking at the same stocks all the time, which says to me maybe there's some opportunities elsewhere.
Yeah, I do think there's opportunities in healthcare specifically, but more broadly to your point, Brian, maybe we find out today after Microsoft and Google report their earnings that just because we step away from the tech rally doesn't necessarily mean that the broader markets are going to take a breather here and can't power a little bit higher too. So Adam made the case that, you know, we're 30 to 40% of the S&P gains are attributed to just 7 names. And so maybe that broadening out means tech takes a breather here, hits the pause button, and kind of trends sideways for a little bit while the rest of the market continues to power on. Maybe it's not in energy, but I definitely do think healthcare is worth a look.
Yeah, I mean, look, to me, if you're being really simplistic, what happened is CPI went up a ton, and the big cap tech companies don't get hurt by their margins were held in. They didn't really get hurt by rising CPI, and a lot of other businesses did. Now that I think, you know, CPI is going to bottom, and who knows, maybe go, you know, meaningfully lower, I think the case for a rally broadening is that some of these other companies will see less margin pressure and potentially even some headwinds turned into tailwinds, at least for a few months. We'll see. And I think that's the case for broadening. So I'm with you there. I think the part I'm most negative on and where I've gotten incrementally negative is on any place that has a store with a physical box. So I'm really negative on retailers. I think they...
Why? By the way, we have an analyst who's extremely bullish on Walmart coming up a bit later on in the show. We call it the C block, which is in about 10 minutes.
Okay, well, I'll be in my car back to the office, and I'll listen while they disagree with everything I say now. But and it's not really Walmart specific, although they won't be immune. My issues are threefold. One, I think they call it shrink. I think you and I used to call it stealing.
Yeah.
But there's a huge problem, and there's no way to change it. We track every transcript and every word related to it. We're seeing it growth across multiple businesses. There's CapEx from it. They got to put stuff in plastic cases. There are OpEx. Some guys to unlock it for you. The inventory is mismanaged. Your desire to go to the store again is impaired. So there's issues there. 2, the financing businesses there. Generally, trends are starting to slow. A lot of these consumer companies lend people money to buy stuff on their website or in their store. There's a new term you've heard of now. It's called buy now, pay later.
Oh, yeah.
You and I used to call it something different.
Yeah.
And then the third thing is the urban growth that they were counting on in some of these boxes. Now they're pushing back. You're seeing closings and less aggressive ramps. So I think there's issues across the board with a lot of these retailers. Lower margins are going to happen and lower revenue growth as a result of it. So I'm incrementally negative there. I mean, Walmart's got a hybrid of things that they have to deal with, and I would say not a particularly compelling valuation. So I'll let the later guests contradict me, but it wouldn't be my favorite place to park money right now.
Okay, definitely do not like retail. You know, Bryn, Malcolm mentioned healthcare. I know biotech is not necessarily directly healthcare. It's not like a health insurance, obviously. You've owned the XBI, which is one of the bigger, more liquid biotech ETFs. Do you still own it, and why?
Yeah, so, I mean, XBI, or just biotech in general, has done very poorly for the past few years. The way I've been managing that position is selling calls against that because I don't think it's going to get called away. It's got a very strong channel. But I think I agree with Malcolm. Healthcare is actually my sector pick for the year. It hasn't done well. But when you look at, like, one of the best metrics, Brian, when you're valuing a company is free cash flow yield. Not just free cash flow, but free cash flow yield. Energy and healthcare have the 2 highest free cash flow yields, you know, of all of the sectors. And so I think that as this market broadens out, both biotech, I think also because rates are higher, and these companies, most of them don't make money. The higher interest rates is definitely a headwind to a lot of these biotech companies, but I'll just continue to sell calls within that channel. But I do think healthcare can redeem itself and have a good back half of the year as that free cash flow yield is so high and it's so stable as well.
It is amazing, Malcolm. You know, I don't know if you have a view on biotechs. If you do, let us know, because you look at America, and I'm going to say something unpopular. You know, we've got a lot of health. We came out of COVID. We got a lot of health issues. Some of them were magnified by COVID, obviously. Obesity crisis, diabetes, cancer rates are on the rise. I'm not trying to be negative. What I'm saying is that you'd think the market might reward more of these companies that are actively trying to solve many of these major crises that we've got going in healthcare. And yet, to Bryn's point, if you bring up a 5 or 10 year chart of the XBI, it's at 6 year ago price. Hasn't made any money in 6 years unless you actively traded it.
Yeah, you'd be a lot better off betting on our vanity and our interest in some of the weight loss drugs and the Botox drugs and things like that coming out of the biotech and healthcare names. But I'm more interested in the ways that the health insurers are able to pass along the additional costs that United Healthcare and other companies have told us they expect to see from seniors stepping out there and having some elective procedures done now. That is a real cost driver near term. But I imagine that because of the way insurance works across all sectors, they will find a way to pass along those increased costs to the insureds through additional premiums, increased premiums. And so for the healthcare stocks and the health insurers more specifically, I just see a possible growth engine and profit engine near term bubbling up underneath the surface there.
I agree with the guys. As long as the market pulls back some, I think the service providers will have more achievable estimates, so they have huge pricing power for sure. I don't know if the market keeps rallying, if they'll keep up. So I think it's prudent defense if you think we're ultimately going to get a bit of a pause in the market. They look pretty attractive on next year's numbers, but I doubt they'll keep up if we keep ripping higher.
Yeah, there you go. Hey, Adam, really appreciate it. Good to see you on set here.
Good to see you.
Thanks for schlepping in. Bryn Toggin in, thank you.
See you guys.
Malcolm Etheridge, thank you all.
See you, Bryn.
All right. Let's get now to our Twitter/X. Still, I guess we'd call it Twitter, even though it's going to become X. Well, anyway, go to our Twitter question of the day. We want to know which stock reporting today after the bell could see the biggest pop on earnings. Will it be Alphabet? Will it be Microsoft? Will it be Snap? Or will it be Texas Instruments? Head to @CNBC Closing Bell on Twitter to vote. We're going to share the results later on in the hour. And then, of course, maybe tonight on Last Call, we'll revisit the poll and see who got it right. All right, in the meantime, let's get a check on some top stocks to watch as we head into the close. Christina Partsinevelos here with that. Christina.
I'm betting on Texas Instruments because I'm reporting on that. But let's move on to GM because investors right now are pumping the brakes on GM despite a revenue beat and upbeat guidance. But that particular upbeat guidance is dependent on successful talks with U.S. and Canadian labor unions in the months ahead. GM is also recommitting to the electric Chevy Bolt, but says a supplier delivery issue has slowed down its production of EVs, and that's why you're seeing shares down about 3.5% ever since earnings came out yesterday. Now, let's talk about GE. It's at its highest level, actually, since 2017, after handily beating earnings and revenue estimates. The industrial giant is also raising its full-year profit guidance, citing strong aerospace demand and record orders in its renewable energy unit. You can see shares are up over 6%. And finally, Biogen is under pressure today as the biotech company slashes around 1,000 jobs to cut costs. This comes as the company rolls out its newly approved but unprofitable Alzheimer's drug in the United States. It also reported earnings and revenue that topped estimates, but those shares are still down about 3.2% right now. That's Biogen for you. Brian?
We just talked about biotech not being able to get out of its own way, and there you go. Christina Partsinevelos, see you in a few minutes. All right, folks, we got to take a short break. We are just getting started. Up next, Going Global. Oakmark's David Harrow is here. He's going to break down some of the opportunities he is seeing around the world and what he calls one of the most undervalued sectors globally. We are live at the NYSE. This is Closing Bell. We're back right after this.
LL Flooring today.
All right, welcome back. Financials are pulling back a little bit today, although the sector is up over 5% this month as part of the market's broadening out story. And your next guest is finding more opportunity outside of the U.S., calling European financials one of the most undervalued sectors globally. Let's bring in David Harrow of Oakmark Funds. David, it's been way too long, my man, since you and I have chatted. It's got to be going on 20 years, so it's good to see you again.
Well, less than that, Brian. You've been avoiding me for some reason. I don't know why.
Well, you didn't want to get up at 4 in the morning on my previous show as my guest, but good to see you here nonetheless. Listen, I feel like European financials, it's like that sign in Irish pubs, free beer tomorrow, but it's always today. Tomorrow never comes. They've been undervalued for so long. We saw what happened with Credit Suisse. When do they get some love? Is there a catalyst that needs to happen?
Yeah, there has been a little bit of love over the last 12, 18, 24 months. They've done pretty well, but the main catalyst is what we've seen happen since the global financial crisis, when banks had to rebuild capital and you had this negative interest rates, which in essence was a headwind, especially in Europe where you had negative rates. And really the catalyst is interest rate normalization. I mean, now that we have interest rates going to 3.5%, 3.75%, 4%, you still have some growth in assets, growth in lending. You have very restrained costs. You have rising fee income. And most important, Brian, most important is these companies are overcapitalized. What this means is everything that they earn, they can either plow some of it back into growth, but more importantly, give it back to shareholders in terms of dividends and stock buybacks. And this is exactly what we see happening literally with every major financial that we own, and just about every financial in Europe is so overcapitalized that what they're generating today, which is good free cash, is being distributed back to owners. So speaking of free cash flow yields, we're well into the low double digits, 11, 12, 13%.
All right, so we know you like a Lloyd's, not a pure play financial, obviously a very kind of unique leader in insurance and maritime and a lot of things like that.
This is, this is Lloyd's Bank.
Oh, it's Lloyd's Banking Group. Fantastic. Okay, good. Well, it's kind of a new name then. I was looking forward to going down the path of like Admiralty Insurance, so this is a good thing. Who is Lloyd's Banking Group, and why do you like them?
Well, Lloyd's Bank is probably the single most, I would say, important banking franchise in the United Kingdom. They specialize in kind of higher net worth, SME banking, and they're just in the United Kingdom. They don't have, it's not a universal bank. It has a somewhat narrow niche and a very strong and loyal deposit base. You know, probably mid-teens of the deposits in the UK banking system, if not higher. So it's a good, well-run, conservative bank that in the next 5 or 6 years, barring any big shocks, they basically will return their enterprise value to owners and dividends and stock buybacks. So good, stable business franchise, efficient at costs, very well capitalized, and very shareholder-friendly capital return policies.
Yeah, another company, I guess similar. Would you consider an Allianz? Not exactly analogous. I get that, David, but an Allianz, very well known to our viewers. But what makes their business attractive to you as a stockholder?
As a stockholder, you have a situation where Allianz, of course, is a big global insurance company. That also owns PIMCO. So 25-ish% of its value is from PIMCO, and the rest of it is selling mostly P&C insurance. And they, again, very well-run company, low 92s, 93s combined ratios, hugely cash generative. Again, and like I said about the other European financials, distributing large sums of money to the owners. I think this is the theme. They're very well run, very low in costs, very good at managing claims, and as a result, they have all the surplus capital which they're distributing. And then again, with higher interest rates, this lends itself to better investment income.
And we recently interviewed the new-ish CEO of CNH, Scott Wine. He was the CEO of Polaris here in America. Now he took over CNH, which people don't realize, Case New Holland. They make tractors, a John Deere competitor. But they also got this ownership structure involved with the Elkann family, of course, of Fiat fame, CNH, industrial, truly global company, exposed to commodity prices. What's the bull case?
The bull case is arable land is getting smaller and smaller and smaller. The world's population is getting larger and larger and larger. There are two main agricultural equipment companies in the world that have the technological wherewithal to help farmers and farming increase its yield. One is John Deere, one is CNH. CNH literally trades at almost half the valuation of John Deere. They're not so dissimilar. Deere is, of course, a little better, has a little higher market shares, but CNH is very competitive. Scott is doing an excellent job. When he came in, there was a problem here and a problem there. They needed to clean up some of the automation in their tractors, etc. He's in the process of doing this. They will be very competitive with Deere. It's a margin expansion story, and we're starting at a very low earnings base. And the big picture for agriculture, very important to have these types of players who could get more productivity out of every acre of land.
David Harrow, we did Arable Land, we did Allianz, and we did Lloyd's Banking Group, and that's why we love you. Thanks for coming on Closing Bell. Let's not make it like another few years, David.
Anytime for you, Brian.
6 p.m. Central for last call. David, thank you very much. All right. All right, up next, Bob Iger under fire. The Disney CEO facing some scathing criticism from the famed actor Bryan Cranston. We're going to bring you his comments and what they could mean for Disney right after this.
Now.
All right, welcome back. Award-winning actor Bryan Cranston, he of Breaking Bad fame, lashing out at Disney CEO Bob Iger at a SAG-AFTRA strike event in New York City earlier today. Listen.
We've got a message for Mr. Iger. I know, sir, that you look through things through a different lens. We don't expect you to understand who we are, but But we ask you to hear us, and beyond that, to listen to us when we tell you we will not be having our jobs taken away and giving to robots. We will not have you take away our right to work and earn a decent living. And lastly, and most importantly, we will not allow you to take away our dignity.
Powerful stuff. Cranston's comments are the latest in a growing chorus of criticism, largely aimed at Bob Iger and a few others, in the wake of his interview with David Faber 2 weeks ago, where he weighed in on the heightened tensions in Hollywood following the start of the writers' strike. Remember this?
There's a level of expectation that they have that is just not realistic. And they are adding to a set of challenges that this business is already facing that is, quite frankly, very disruptive.
All right, Julia Boorstin joining us now live from Los Angeles. Talk about what this could all mean, maybe for the stock in general. Cranston was fired up, Julia.
Cranston was fired up, and I would say that his comments and Iger's comments really illustrate how far apart the two sides really are. Now, keep in mind that interview that Bob Iger did with our colleague David Faber, that was nearly 2 weeks ago now. And since then, which is when the actors' strike started, we have not seen the two sides come back to the negotiating table. So from what I'm hearing, there's a lot of expectations here in Hollywood that this strike could continue to drag on. And one thing I have to point out, Brian, as someone who follows this very closely, months ago when there were rumors about what could happen with this strike and rumblings about what to expect, at the time, people thought that Bob Iger might be one of the people to lead a compromise. And then after his comments and then some of the reaction to his comments, now people may be disappointed that he's not the sort of conciliatory one leading the compromise and that the two sides really are still so far apart.
Yeah, do we have any kind of an idea of how far apart they really are? I mean, it could be one of these things that's, you know, they make a deal tomorrow, like UPS kind of surprised us today, or could this drag on a long time?
Well, I don't think they're going to make a deal tomorrow because they have to come back to the negotiating table first. The first step with them would be both sides saying, okay, we're going to come back to the negotiating table now. We're going to sit down. We're going to hash out different ways we can compromise on these different issues. And remember, it's not just Bryan Cranston speaking on behalf of actors. There's also a writer's strike going on as well. These two simultaneous strikes with some very similar issues, but also their own distinct issues. These two issues have to be worked out, and we have the AMPTP, that's the Association of the major movie studios and TV studios. That's what's negotiating with both the WGA and SAG-AFTRA. So I think that this is not going to be resolved in the next week. A number of people have told me this is something that's going to drag on for months, not weeks. I've heard speculation that at first people were hoping it would end September 1st. Now people are saying November 1st, even December. It'll be a long time before this is resolved. And you just heard it in the fire in both of those men's voices. They really feel like there's some major differences here.
Julia Boorstin. Julia, thank you very much. By the way, Julia will be joining us live from CNBC and Boardroom's Game Plan event. That begins at the top of the hour, brings together some of the most influential people in sports, business, money. For details, scan the QR code or go to cnbcevents.com/gameplan. All right, we've got a news alert on Bank of California. Those shares are halted for news pending. Remember, last hour, Leslie Picker reporting the company was in advanced talks with PacWest Company for a deal that could be announced as early as today. Bank of California halted, up 11%. PacWest down. And you're wondering, why would PacWest be down if they're the ones getting bought? It's because, according to the Wall Street Journal, which broke the story, it could largely be a take under. That maybe PacWest is bought out for less than the stock is, like no premium, because you got to remember, you got to take on a lot of assets if you're buying some of these regional banks. And remember all the problems with regional banks that began earlier this year. They're not all resolved. There's still some issues that are floating out there. So PacWest collapsing by 0.25% on the news that it may get taken out or taken under by Bank. What's the difference between a bank and a bank? Anyway, Bank of California. All right, up next. One Wall Street analyst is flagging just a slightly large retailer based in Bentonville, Arkansas. You might know who they are, that could benefit from any kind of turn down in grocery prices. We're going to get the analyst take on Walmart next.
Yeah, Snap's ripping, trying to make new highs. It's pulling back. BFRG hung in there. Possible gap up tomorrow. We'll see what happens there. You know, you get these early market 7:30 in the morning. It's probably got to be up early on these small caps and be on them. I mean, so I'm gonna go back to Snap. All right, we have earnings coming out, guys and girls, ladies and gents. Let's see what happens here, guys. It's an exciting time. It's an exciting time to be alive for some people. I still haven't heard market on closing balance, which is weird.
Com.
All right, welcome back to Closing Bell. Walmart stock hitting a 15-month high earlier today. Pulled back a little bit since then, but your next guest says there could be more gains ahead. Piper Sandler's Ed Yruma upgrading the stock to overweight today, and he joins us now. Ed, thanks for joining us. How much is, thankfully, a slowdown in the increase, not a decrease, but a slowdown in the increase of grocery prices helping or going to help Walmart?
So we think we've started to see this process begin. You've seen it in areas like dairy, protein. But I think what's interesting now is we've detected a significant uptick in the amount of rollbacks. So these might be packaged food, this could be other goods. And so it seems like these vendors are trying to drive volume at Walmart. Walmart's partnering with them and they're driving prices lower for consumers. You've even seen back to school right now, back to school at last year's prices. So it seems like a lot of these inflationary pressures are starting to abate.
Yeah, I mean, and again, I was reading your note, and I live and I'm married to a consumer products executive, so I know about how Walmart works internally, which is kind of this mysterious thing with these rollbacks, and you get these vendors and all these the way that it works. Tell us in layman's terms what exactly is happening and how Walmart is benefiting from companies, the suppliers who basically will temporarily lower prices to increase volumes, I'm told.
So suppliers have been clearly struggling with volumes and they've been raising price. And I think what's happening is they're going and partnering with Walmart, reducing prices for 60 to 90 days. Walmart in turn buys more units of those items and they feature them prominently. So if you're walking past that great item that's on rollback, Walmart's buying more of that and the vendor's providing that decrease in price for a stipulated period of time.
Yeah, and so these are all temporary programs. So what's the longer term bull case on Walmart because they simply get more people back in the stores? Are they taking market share from others? And if they are, Ed, who is Walmart taking market share from?
So we think they're taking market share from a lot of the large grocery competitors, from the regional grocery peers. And I think it's a couple fold, right? First, it's reintroducing some of these consumers back to Walmart, that it's a great place to buy grocery. They've called out that they're seeing a higher uptake of household income above 100,000. So for them, that's not their power customer. But I think as they bring that customer in that's maybe feeling a little stretched, they're showing them there's a great grocery experience. And over time, we think they'll convert those grocery customers into buying other areas of the store, which, by the way, they're making some significant improvements in.
All right, Ed Yruma, bullish on Walmart. We're watching the name, Ed. Thank you for coming on Closing Bell. Appreciate it. All right, folks, kind of like a short-term discount. It's the last chance to weigh in on our Twitter question of the day, where we asked you which stock reporting after the bell could see the biggest pop. Is it A, Alphabet, B, Microsoft, C, Snap, or D, Texas Instruments? There is no all of the above. You have to make a decision. Head to CNBC Closing Bell on Twitter. We're going to bring you the results after the break, and then at some point tonight, maybe we'll see who won. Stick around.
We could check out Datadog also. All right, DDOG. See if there's anything interesting there. Okay. Wonder when their earnings are. This thing's been a beast. I know that. For anyone that owns it, you're up almost at 100% now from the lows. So she's climbing. She is climbing. Look at all the buying that was going on down here. Boom, nibbling. You know, it's why you just gotta buy the dips. Always, the market goes up, and it will recover. So anytime you get big dips, gotta buy them. She said I had a big dip too. That's what she said. I mean, you know, I don't know. So all you gotta do is buy the dip. For the most part. You get a Great Depression, it might take you about 30, 40 years to get back out of it. If you guys have never looked at a chart of like the SPX and gone back to the Great Depression, you should. Your break even was like 30 years. 20, 30, 40, and it happened in the 20s and it didn't clear up until the 40s. You didn't get break even until the 40s. It's pretty crazy. It's actually really crazy. So we'll go to Snap. We got a lot of earnings coming out, guys. Ladies and gentlemen. A lot of earnings, so we're going to run through them. And we'll have them up here for you guys. And we'll go through some earnings calls as well. We have
Nobody cared about Texas Instruments. I voted.
We have our whatchamacallit real time.
By the way, this show's off air in 13 minutes, so maybe we should redo this poll tonight on last call
we have
and see which of you got it right.
shit, I
Microsoft,
can't
though,
remember
the
what the
big
heck.
winner in the poll.
We have
All right,
Squawk Box
your big
real,
earnings setup. We're going to bring you a rundown of
here
what's
live,
those
so
numbers
we'll get them as
take
they
for a
come
few
out.
minutes, and do not forget to tune in to last call tonight, pending traffic.
All right.
If I can make it from here to there in like 3 hours, there'll be a show. And by the way, it's 15 miles. There's been times where it almost didn't happen. Welcome to New York. We're going to bring down all the big results after that, the conference calls, and much more. It's a great show, great team, decent anchor. We're back after this.
What? Are you crazy? Oh, so they're building roads and stuff like that on the moon. Are you crazy? Is this serious right now? RDW? Huh? Did you guys hear that? Holy smokes. So, NASA's giving them a deal. RDW, right here, guys. RDW. Guess what they're doing? They're going to be building roads and infrastructure on the moon. Got to get around. Oh my gosh. Oh, hold on. Alright, so, like, let's just say for the Qs, guys, we sit here and hold 379. 379 is where I want to see us hold. Maybe 378, 75-ish. I want to see us hold to be able to make new highs tomorrow, guys. And girls, ladies, and gents. Remember, it was a low volume day. We still have a lot of volatility getting ready to come our way, so be patient. Alright, we had a great day today. Let's not mess it up.
There we go. All right, guys, welcome to the market zone. We're about ready to make it 12 positive sessions for the Dow in a row, multi-year streak. The record is 13, set back in 1987.
Roughly 10 minutes, guys, and we get our earnings.
Downturn in the next 10 minutes, which we could. Tomorrow will be kind of an historic day. Scott Cronert, first to you. I know you're pessimistic. You got a $4,000 target on the S&P 500. I know no one trades off the Dow. The moves haven't been great, but come on, 12-day streak, more than just a headline or no?
Yeah, I think it's more than just a headline. I think it's a couple of things. We're going to be talking about these mega cap earnings, that's for sure, and that is one hurdle that we thought we had to get over going into the third quarter. The other, I think, is probably as important as the broadening we're getting is you're getting the soft landing narrative beginning to take a little bit stronger hold, and this is leading to some broadening that ultimately supports some of the.
All right, it's coming, guys. Give it a couple minutes, and we're gonna have all this up here. We'll have all the earnings playing out loud and all that good stuff, so you guys get it real time, and then we'll go over some earnings calls.
Would it start tonight if we get an earnings whiff from one or both of Microsoft or Alphabet?
We've seen a couple of instances already. Your big seven, if you will. You've had two kind of pretty good quarters that resulted in sell-offs, and so that becomes an issue. But the market seems to be taking that in stride right now. I think what you're going to need to see is in addition to the earnings coming out, we've got the Fed coming up. We probably have another 25 basis points coming at us. We're watching 10-year yields moving higher here. So the issue is there something in the macro circumstance aligned with what's happening in the micro with the big seven that begins to change the narrative here? It's hard to say we're seeing it just yet, but we think that's the risk in the markets in the shorter term.
I'm going to ask a question that has like a 25% chance of me getting fired on the spot. Does the Federal Reserve matter right now?
I think as long as 10 years are below 4%, I think the market's pricing in a peaking of the Fed rate hike cycle.
I mean, that's my point. I mean, as of tomorrow, the Fed decision, we kind of know if it's not, could they change the game, or is the market, what I mean is not that they matter, have we looked past it? It's been 2.5 years of Fed. Is that it?
Yep. Market's looking past it for now, right? And so that's what I'm saying. It's going to you need some incremental shock effect, and it's hard to say where that's coming from given the way that we're now pushing out the recession risk scenario. So where's that shock?
Look at Microsoft going up through this level, guys. It's trying to rip higher. It's getting real volatile. Watch Google. Google's doing the opposite.
That's not very visible yet, but that I think becomes a big risk factor going forward.
All right, Scott Cronert, $4,000.
I'm really curious how this bank news. So, like, this is going to slow down money in the Dow, because who is going to park their money in a place where all it does is take 10 seconds of news to come across the wire and you're down 15-20% on your position? Big banks included. All right, think about those things. There's still risk with the banks.
year to date for
they gotta be at decent valuations for people to feel comfortable in buying them again. I can certainly say, I'm just saying what I would do. What would you do? If now you've seen it again, things aren't gravy. Things aren't gravy. So, yes, they've backstopped the banks with the Fed. That's good. But again, all it takes is just something to take your money and take it away. You know, so that's definitely still a very risky asset to be invested in. I did short Bank of America. That was a nice little trade. Shorted Baba today. Long Carvana. Got a little messed up on that. It is what it is. I'm human. Ended the day off with a short on Bank of America off of that news. Not too bad of a day.
To Google's business. Why would I need to Google anything if I can just talk into a phone and then AI tells me what to do? What's the best restaurant near me, right? Why do I need to Google that?
Right. The whole idea that generative AI chatbots are going to kill Google search. There's that. That's maybe further out on the horizon, but what may be very important for this quarter right in front of
My hand's killing me. I had problems with it a while ago, and now I wonder if it's coming back.
They're expensive. Who's buying them? The hyperscalers like Alphabet. So does that change their capital investment, their spending this year? That's going to be an important question, especially as the core business and cloud remains perhaps a little slower.
That is it. I love it. We'll let you get ready. Numbers crossing after the bell. Earnings call. Deirdre, thank you. Now let's go to the other one. My equal favorite colleague, Steve Kovac. Steve, what's the under-over on how many times Microsoft executives say AI or artificial intelligence on the call? Under or over 50?
Oh my God, I'm not even a bet, but if you play a drinking game, you might pass out hearing AI so much.
Don't do that.
But look, Brian, it is all about AI, and like Deirdre alluded to just now, Microsoft gave investors a huge gift last week by announcing pricing, monetization, real sales for how much they're going to charge for this AI Copilot that they're putting in Office apps like Outlook and Teams and Microsoft Word. $30 per month per user. That's on top of the $36 that many enterprises are already paying. So you can do the math there. There are a few 100 million users for Microsoft 365. So look, there's a huge.
I just want to make sure you guys are able to see the screens.
Microsoft yet is when they're going to actually start selling it. They're only testing it for a small number of their current customers.
Here's a question you probably can't answer, so I don't mean to put you on the spot, Steve. Maybe you can't. Microsoft is really known for like adding everything together, and then you just have the stuff that you didn't even really want. Like I've got PowerPoint, but I don't use it, but I got it. Is everybody going to have to pay the $30 a month, or is it going to be an optional thing? Like if you use 365 at NBC Universal, are they going to automatically have to pay, or is it an option?
It's an option, and that means the burden is on Microsoft.
Great job today, folks. Let's go. We got big earnings coming up. Let's get it. I'm going to go through them. We have the... All right, let's go. Let's go. Can you feel it? I know you can. I know you can. Let's go. If you guys could, please hit the like, share, and subscribe. We're trying to get to 100 subscribers if you haven't been subscribed. But we have Google, Microsoft. Okay, we have Snap. We have Visa. We have Texas Instruments. We're going to run through them. And we also have our Squawk Box Live right here for you guys. If you could, again, we're trying to get to 100 subscribers. We greatly appreciate it. We trade live here. It takes a lot of work. It's just me here. Greatly appreciate it. We have also a live stream we do at night, and you guys are not going to want to miss that. I have a really cool lesson tonight for you guys. Let's see here. I got to make this a little bit bigger so you guys can see this, so it's not so squished. All right, maybe we don't need to worry about the spy so much. Maybe we don't need to worry. You know what? We can just take out level 2. There we go. Time and sales at least. Alright, we can take out time and sales. Thank you guys. That's awesome. I appreciate you guys. That's awesome. Time and sales. Let's go, guys. There's the bell. Let's go. Let's go. Let's see what happens. We have bank issues going on now. So that's going to throw a wrench in it. Bancorp, MVC. If you guys can hear it, if I have to turn it up, let me know in the chat if you guys can hear it. Okay. All right. That way you.
But we're going to finish higher, I think. don't want to ruin anything. Yeah, thank you for clapping.
All right, guys, I'm going to put up CNBC for us.
Close higher, we're 33 points
Let's
up.
do this, guys. Good job today.
PAC
We had
halted for news.
Pac West halted for news.
PAC West halted pending news.
Squeak out some kind of a game. It looks like we're going to close higher.
Wall Street Journal of
Lucky Taylor
Bank
Swift
of
13.
California.
I won't be here tomorrow, but you needed on the last
So again, this was just
Alphabet is out. Microsoft
Alphabet's
is
out. They're out, guys. All right, there goes Google.
Microsoft reporting $2.69. The
$2.69.
55 cents. That's a
$2.59. That is a beat by 10 cents for Microsoft. A beat by Microsoft by 10 cents. We got to get into the sales. We got to get into sales and stuff, though.
Now brace yourself for a whirlwind of big earnings reports.
Google's flat.
Alphabet, Microsoft, Visa.
I guess you can usually say when they go up like this, watch out. Everybody thought, I mean, I thought Microsoft wouldn't do too bad, but pop, lock, and drop. We know how this goes.
Director of Equity Research here on set. Dan, how big a
Sorry,
deal
let me
is
get this
the next
up.
rush of earnings?
Alphabet reporting $1.44.
Because of the AI revolution.
Alphabet $1.44, guys. Look at her go. All right, the market should be about flat with this type of news. Unless Microsoft can reverse. Look at it go. 130? Is it going to hit 130? They were saying, downtown Josh Brown was saying, guys, if you get the pullback, you got to buy it because they're back in business. The CEOs are back in their chairs. What's up, Bingo? How you doing, buddy? Again, guys, if you don't know, we do trade here live every day. We hit Baba short early. We got on that early, entered at VWAP. Over 100% trade today. Also, Bank of America short at the end of the day. It was a great day today.
Sorry, just to interrupt you there real
The
quick.
estimate
Microsoft
was
results
$1.76.
are out,
That's
and
a
we are
beat for
going through them
TXN.
now.
Revenue
The stock, at least
4.53
for a
billion.
quick moment, taking
So-
it
Is
after
a beat
hours,
for
but we'll give
Tango
you those numbers
X-ray
as soon as we go
November.
TXN should be Texas Instrument, guys. Texas Instrument is apparently a beat. But it's on its face. So we got to go into these and we got to look at sales. You guys want to see sales? All right, it's important. Sales are important. You know, it's and revenue growth. Sales and revenue growth are going to be what's key, guys and girls.
Alphabet CFO Ruth Porat will assume newly created role of president and CIO of Alphabet and Google effective December.
That's big.
Effective September 1st.
If you guys could, we're trying to get to 100 subscribers. If you guys appreciate this or anything that we do here, we're going to have a live stream tonight at 8:30. If you guys want to subscribe, join us. Talk about our trades. We traded Baba to the short side today. We caught VWAP. We took our position at VWAP early this morning, probably around 9:40, 9:35. First dip. First dip we got short. It's over 100% for members today, and we don't charge. It's free 99, by the way. So, if you guys could, we're trying to get to 100 subscribers. Like, share, and subscribe. Spy doesn't know what to do. Google is, I think, surprising the most. I really do. We're going to have to wait for the earnings call. Maybe this just flips. Maybe we get a flip on the earnings call, and then Microsoft is up and Google's back down. Snap's not doing too great. Yeah, we did. Baba. I took a small long on Carvana to try and front run a possible move to the upside because there wasn't much going on, and then stopped out on that. And then the Bank of America news, well, not Bank of America news, but Bank of California, First Republic news. We took a short there on Bank of America. It just felt the weakest, and it gave us follow through. It wasn't like a big trade, but it was a nice scalp. You know, I think we got in around 20 cents, took it to 25. You know, I'm sorry, 27. 27 was the exit. Dish and Amazon news. Rumor. I don't know. I must have missed it. Oh, wait. Did I see that? No, I seen the Amazon robot news this morning. This iRobot news with Amazon's been going on for a while. let me. I'll have to check that out. I'll do my work on that, Tegan. How you doing tonight, Tegan? Hope you guys are good. Hope you guys had a great day. Volatility is still around the corner, guys. This morning, just so you guys know, if you don't know, I've been trading for about 7 years. We started to stream, I don't know, maybe it's been about 4 or 5 weeks, maybe 5 weeks. This morning we came in the day and, you know, I mentioned this is what I wanted to see. I wanted to see the SPY pull back into this 353.75 area for the long. Did I think we would get new highs today? No. I was not confident in new highs, but I was long-minded. We'll go over that, and I'll tell you guys exactly why we were thinking that. I mean, just reading the chart will tell you. Reading the chart will tell you.
These stocks chop around for a little bit a couple days after.
But again, I hope you guys had a great day, and don't. If you guys haven't done anything, just relax. This volatility is getting ready to kick back up, and I don't even think it's going to be the Fed meeting. We got GDP, PCE, and all that fun stuff. We still have more earnings. Like tomorrow, Thursday, and Friday, you guys are going to. Boost Mobile and Amazon are partnering for a phone plan, and Dish could shoot. Oh yeah. Nah, I don't have any earnings, but dude, I had a great day today, so I'm like, man, I'm not putting on any more risk. I had a great day. Shorted Baba right off the bell. We'll get into it. Not off the bell, but huge downside candle on Baba, and said, whoa, what's going on with Baba? Is there news? First pop back to VWAP. I said, guys, we're going to be short Baba. I got into the 96 puts. First pullback to VWAP. I'll go over that on the live stream. And we got in them. It was like $1. It was $1 something. They went all the way up to 230. They went over 100. They probably went to like 100%. I'd have to see where they're at now. But it stalled at the base and kind of just sat there. But I was just taking it out, you know. And it just, because I know when Baba does stuff like that, it'll give you follow through. So just knowing that, and you know, it's like my risk to reward. So Baba took a small long on Carvana, stopped out, and then Bank of America when we got that First Republic news. Thank you. Thanks, T. But again, I'll be live at 8:30 to go over all the stuff in the news. I did want to, yeah, look at it reversing. Hit that support, popping right back off of it. Wow. Teledoc is going off now. Let me throw the scanner on. You guys can listen to it. I'm going to have to look, guys. I'm going to have to look. It's just a lot.
You look at these numbers, digital advertising, stabilizing, upticking. You look at YouTube, look at that
I think Google's just a beat, maybe the valuation. We've been saying that we want to see valuations. Listen, join us at 8:30 if you guys would like it or free. 8:30 Eastern time. Listen, I said last night on the live stream, and yesterday during the live stream, and Monday, Spotify, those type of companies that are going to start reporting, they've had such a nice run up. You need to think about the valuation aspect of this growth and the period we're getting ready to come into. If they're trading at 40, 50, 60 times earnings, and their forward multiples and their earnings aren't reflecting it, and even future quarterly revenues are not going to be, you know, with these headwinds, those are going to be the best opportunities, I think, before your large caps. I mean, obviously Google and stuff, there's always opportunity, but these smaller mid-tech, these mid-cap tech companies, large-cap, mid-cap tech companies, watch for them. We already said Spotify's probably going to have trouble. They had subscriber growth, but that's not revenue. That's not money. That's the multiple trading at a high-end multiple for what it's reporting, and institutional money flow is not going to be there. We want to know, where is institutional money going? Where is money finding a home, and where is it leaving? That's going to give us our shorts, our longs. It's going to give us the liquidity, the volume, and the follow-through. I'll go over that on the live, but members that are here, they know. We called Spotify out early in the week, like, guys, it hit the 200 weekly moving average, and it just broke down. And our target, I said it on the live this morning, before the market opened, didn't take it because I took Baba. I felt like I had some follow-through, but either one would have been good. Spotify, it was like 340, 357, 347 was our target to the downside, and it went much further. Wow, yeah. I'll just let me be quiet, guys. We're gonna go live at 8:30 Eastern Standard Time. Wow.
As well, and looks like the stock here moving slightly lower after the report here. We don't have guidance quite yet, but we'll bring you any updates.
We do this stuff for free, by the way. Just a like, share, and subscribe. We're a like and a subscribe. We're trying to get to 100 subscribers. But that's all. We trade live here Monday through Friday. I've been trading for about 7 years. If you guys want to tune in, you find out for yourselves. I go over, tickers, whatever you guys want to go through, and then I also go over my own, what I think. What do I think the market's going to do? What's hot? What's not? What am I going to be short? What am I going to be long? Do I back up along with a short? In case we get bank news, that way profits on the long, we ride that short down. I don't know. Great day today, though. I'm really happy with it. Now, I've been waiting. I've been waiting for Wednesday and particularly Thursday. But tomorrow should be a fun day tomorrow. We'll talk more about it on the live. Oh, thanks, Tegan. I greatly appreciate that, man. And listen, if you guys are having any trouble at all or just something you want to know trading, don't know how long you guys have been trading, if you're professionals, if you do it full-time or not. But even on the live stream, go on the live stream, ask me whatever you want, whether it's a ticker, if there's something you could get help with, ask me a question and see if we can get you in the right direction. Bank of California news, here we go. First Republic. And that was... Oh, they are reporting earnings.
But the Alphabet advertising numbers are the big highlights so far.
Gotcha. All right, well, Snap's results are out as well. Kate Rogers has
Let's see here. Hold on. CMEC's talking about it right now.
Snap reporting a narrower than expected adjusted loss of 2 cents a share, better than the 4-cent projected
These are
loss. Revenues a slight beat at 1.07 billion versus the 1.05 billion anticipated. Daily active users a beat at 397 million in the quarter. That is above the 394.9 million projected. On the advertiser front, Snap says it has record active advertisers in the quarter, up more than 20% year on year, and through improved retention compared to this time last year. In terms of
I'm telling you guys,
has not given in recent quarters, the company giving some official guidance here, seeing Q3 daily active users of between 405 and 406 million versus the street's expectation of 406 million. The company says forward visibility of advertising demand remains limited. Q3 revenues anticipated between 1.07 billion and 1.13 billion, and Q3 adjusted EBITDA of between negative 50 million and negative 100 million. Both of those numbers
not good. Not good. Listen,
about 16% now, guys.
I've been saying this. This is where it should start. No, it's not. No, you have puts, right? Yeah, if you have puts, wait. I think she said damn. I think Morgan Brennan just said damn. Yeah, nah, dude, that's good. That's a negative 100 and some EBITDA. Oh, that's nasty. Valuations. We're going to come into this. This is what I've been saying. I'm going to get into it real quick, but join me on the live stream so I can really talk you guys through this. This mid-cap tech, large-cap tech, not your Apple, your Microsoft. Let me turn this down. Multiples, okay? Earnings multiples, forward earnings. But these multiples that they're trading at, mid-cap tech, large-cap tech can trade 30, 40, 50, 60 times earnings. All right? Institutional money flow is going to exit this rally. We've just had a rally. They're going to take... This is going to be the reason why they can take their profits. Two, the biggest number to this. Some of these companies start running out of money that don't make money. There is no PE. There's no E at the end of that because they don't have earnings. As you can see in Snap, they're losing money. They're not positive. They're negative. They run out of cash. Or it gets to the point where they have to get more cash. They go to the bank. The bank says, you don't make any money. You do have this, assets, whatever. You're going to be paying a higher interest rate at a lower amount than what you need. There is going to be a potential here in the next 6, 7, 8, 10 months. You're going to hear it first, where some of these companies who aren't managed right start running out of money and may have to close shop. You know, now Snap, will it happen too? I doubt it. But this is where you're seeing multiples are going to start mattering when these institutional money flow that's already had a nice, I mean, look at some of these stocks. They're up 60, 30, 50, 40, 20%. Like, they've made up for the past year and a half where bonds and stocks lost money. They've caught the lows on the stocks that they missed out on, the Nvidias, Apple's, Microsoft. You've seen IWM, and you've been noticing the Dow stocks. I've been saying it for the past since Sunday night. I said energy and banks to start the week. We're going to be watching Dow stocks because that's where the valuations are low. To an institutional money manager, that's where they're going to put their capital to work. Because these mid-cap tech companies, it's going to be hard for them. It's going to be really hard, especially if their revenues are shrinking in a higher interest rate environment where we're coming in where things are going to start slowing down. Add on things like the college tuition, people paying higher energy prices. You have higher taxes, and the fact that this college tuition and all these other things are coming in, there's less money to go around. These mid-cap tech companies that trade at high multiples are going to have trouble. But I'm going to really break that down at 8:30 tonight, guys. Let's look at the chart. I'm gonna pull up the chart. So Google's still ripping. Man, I need to cut out some of these boxes. But so Microsoft's even. Google's still going up. Let's see here. Let's go to the daily. I did have levels for Snap. So that brought me to my point of Spotify. I was like, guys, watch Spotify. The chart looked like it was going to head down. What news are you streaming? It's just Squawk Box. Benzinga Squawk Box. I don't really I'm not even gonna say it, but it's what I have. But it's Benzinga Squawk Box. Let's see here. So it does have some minor support here on the daily. We do have some minor support at 12.13. Now we're probably, let's see where we're trading. I'm sorry. Let me go back. Where are we trading at right now? Let's chart this out. So we're at, oh man, you're gonna be, God, I wish I was on those puts with you, bro. This earnings was bad, and listen, you're going to get more of these for some of these mid-cap tech companies, even large-cap tech companies. So PacWest is merging. Man, Tegan, you nailed it, bro. You nailed it. You nailed it, bro. I don't know why I didn't. I was kind of just waiting. I wanted to wait for the volatility this week. I kind of was like, because we still have a lot more of these type of tech companies to, you know what I mean, come in and not meet the valuations that they're at. Like, these earnings are going to come in, and if they're trading at 60 times multiple or 60 time forward earnings, and they report and it's like 30, 25, they're going to exit. This is the reason why institutional ownership is going to have a reason to exit and put the capital into Dow names, energy, treasuries, you know. So where are we trading, man? We are trading at 1050, 1048. Let's just run to the daily real quick. Boom, boom, boom. Man, so you have support right here. You have an area of support right here. You're actually below the 50-day now too. What I would look for tomorrow is to see if we could bounce back. You stay down here depending on the earnings call. Man, you're way down here, man. That's awesome. Good for you, bro. Clap it up for Tegan. You know. Just make sure you manage your risk and don't go over your skis on earnings calls. But this is a good time to be on the short side. I feel like it is. In these type of sectors is the more important factor there. Clap it up for Tegan, man. That's awesome. Here's what I would look for. I would see if you get a bounce back to this level right here in the morning and see if you get more sellers. Snap is going to be in play tomorrow. That EBITDA is horrible. That's atrocious. That's so bad.
some questions around.
I'm gonna make this bigger, and I'll have everything cleaned up later on, and we'll go over it. You break 10. If we break 10, Tegan, I mean, you break 10, you got a gap fill down here. You got a gap fill right down here. Nah, it's a little small. This thing could be back down to $8.50, $9 in another week or two for me. You were on snap puts, right? Oh man, I mean, what if you don't mind? What were they? I think you got enough movement here, man. You're down $2 some. You're down at least 20%, right? $10, $2 movement is 20%. So I doubt that you paid 20% in premium. Some were 12. 9. Now is that 9 cents or $9? I don't think they were $9, right? Let me see if I can pull. Hold on. Let me see if I can pull it up. I'll pull it up myself. I got my phone right here. You're good, buddy. See if it still comes up where they were at.
Yeah, and that's going to be sort of the key.
Oh man, nah, dude, you're Gucci, bro. What? You got to get 9 cents? That's like $9 puts. Oh, so you bought way.
Thanks for kicking off the hour with us here in real-time reaction to
So by 9, you're saying you spent $90 a contract. Oh, 89 cents. Dude, yeah, you're good. So you got to get $1. I don't know what strike you are. Here's the best way to look at this. What strike was? Let's say if it was a $10 strike, okay, and you have it, let's just say for this Friday. $10 is your strike price minus 89 cents. So you got to get to $9 and what is that? $9, $11 strike. Oh, nice, bro. Nice. You paid 89 cents. I can figure this out for you right now, buddy. You paid pretty much, we'll just say $1. Well, you paid $1 for 11. You're good. You're in the money, bro. You're in the money. You're in the money. Yeah, you're in the money. The stock was at $12, $13. What was it at? $12.50 today. You're Gucci, bro. You should be at least be up 100% by tomorrow. If it stays here. If it stays here, yeah, you got the $11 puts. You paid 89 cents for it. So $11 minus 89. That would be $10 and roughly where it's trading at. You paid 89 cents. The stock was at 12. You had $11 strike price. The stock was at $12.50. So that's $11.50. We'll take the other 50 cents for yours. It'll be $10.75.50. I'd have to get my calculator out. You should be at least 100%, man. We open up here. So what you want to do is take 89 cents minus $11. Right? You paid 89 cents. So you pretty much paid, we're just going to say $1. You paid 89 cents, be $89 or $100, right? You're trading at $12, $12.50. So you paid the 89 cent move, which would be like $1. The dollar move would be from $12.50 to $11.50. That's $1. So you've paid you're past your premium. You have intrinsic value or extrinsic value now left. So what I'm getting at is that let's say if you have an $11 strike that you just paid 90 cents for, the stock's at $12, it goes to 11 what is that? 11.10. That's your break even price. You've paid the premium, and now the premium should also shoot back up because you're almost in the money. You've taken away your premium because you're past $11, and that's why I said it at 90 cents. It's easier just to say you were at $1. So anything below $11, you're in the money, you know. But you paid 89 cents at $12.50, so really at $11.50, anything past $11.50, you're in the money to an extent. It's not in the money because it's not at 11, but you have Wednesday, Thursday, Friday still to go, and the move has moved the premium. You get what I'm saying? The stock's moved 89 cents already. It's already moved $1. You paid $1. So you're good, man. Those things should at least be 100, 150, if not 200% if you open up where you're at here. The easiest way to do it, I do it, is if I have a $12 strike and I pay $1, I know that I'm paying $1 if I buy puts. At $12, I'm paying $1 in premium. For an $11 strike, I get to $11. I've paid the premium. Now it's all about time. Yeah, exactly. Yeah, so
kick it off with you. The results we just got from
that's
Alphabet and
awesome,
Microsoft,
dude. That's awesome. Oh, he got September 15th too. Oh my god. Yo, give it up. I didn't see that, Barnett. How you doing, bro? I hope you're doing good, Barnett. Yeah, I made it easier because the stock was at $12.50 today. He paid 89 cents. Call it $1. $12.50 to $11.50. Premiums paid plus some. So now you just have time, pretty much time value left now because you have it's below 11, but you got September 15th, dude. You have it. Oh, awesome, dude. Dude, that's so sick, Barnett. Dude, that's sick. That's sick, bro. That's a good call, dude. You got to. An environment like this. I mean, listen, I've said this Sunday night. I've said it yesterday. I said it last night. I said we got to watch these mid-cap tech companies that are trading at, 30, 40, 50 times earnings. And these earnings start coming in, that it's going to be a tough time for them, especially if they're not ran right. You start getting through a couple of these quarters, and they start running out of they start running out of money, and they need to get capital. They need to raise capital. I mean, you either go to the bank or there's I'm sure there's a bunch of ways they can issue it, but they're going to have to get it at a higher interest rate. May not get as much money as they want, and all that stuff. Yeah, it is. It absolutely is. It absolutely is.
And I believe this is the fourth industrial revolution playing out.
They might just hold it up here, just for the watch them do this. Watch them do a little shakeout, and then give it. But again, it's after hours. So you're just getting limit orders in now, so there's not going to be too much playing around with people. So that's the only good part that I do like about after hours and pre-market and after hours is like you don't get that, like you don't have to usually worry too much about like the shake and bakes where they try and shake people out, which I can usually expect. I mean, like just for instance, guys, like when I say we've been talking about oil, like even just USO, we have this is just an insight. This is all recorded live and everything. This was our target. It's a little bit further. It's right around here, and we've almost gotten there. And I said when I did this that it's going to be a lot. It's going to take more time. We're almost at the top end of that measure and move right here. That measure and move is about done, so you'll see a pullback. And I meant over time if things start to play out. Like look at actually like CRM. I do this shit all the time when I'm bored at lunch or something. I'll try and set myself a target, see if I'm reading the markets right. We did this a while ago and literally pinged our target. And I forgot about it. I didn't even play it. So, but we do that. We trade here live Monday through Friday, 7:30 to 4, cover earnings and stuff. Let me get ready for the live stream tonight at 8:30 if you guys want to come join us. We're going to go over trade ideas. We're going to go over the trades today. We traded Baba. I was looking at Spotify, but I was looking at Spotify short. We told members. Members here, we were long coming in today. We were on the long side. Some of them aren't here. They've left, the usual members, but it's free 99 if you guys want to like, share, and subscribe. I just do this myself. I'm trying to get to 100 subscribers. We just started this channel like 5 weeks ago. And again, I've been trading for almost 8 years. Been trading for 7 years, almost 8. I stopped counting. But no, not Spotify. But our target this morning was 147 this morning, and it went well past it. That was the target for this morning on the short side. Snap. So yeah, guys, I'm gonna get ready. If you guys want to like, share, and subscribe, that'd be great. I'm happy for Barnett. Tegan, give it up for him.
I think ultimately software, it's going to lead the rally, in my opinion.
Amazon did take the deal.
Golden age for software. In terms of what we've seen with the second, third, fourth derivative. Also add cybersecurity.
Yeah, I think that news came out this morning though, didn't it? Or you're talking about with you're talking about with whatchamacallit. The cell phone company. They're eating everything up that they can. Teledoc.
But ultimately, the winners, I believe this is really, in my opinion, the start of a new tech bull market.
Matt, balancing investment.
Great job, guys. That's awesome, man. Oh, Dish. Okay, yeah. Yup. I mean, I see it. I mean, they're eating everything up that they can. They have the capital to spend, so why not? I'm surprised that like when's it going to come to like the FTC tries to step in and like, you know, I feel like if a company wants to be sold, I get like trying to like watch like one company buying everything and they own it and they dictate the price, and it's tough for new companies to come in and like, you know, market themselves and all that stuff. So, but I don't know, you know, it's like 50-50 with, you know, different situations as far as like Amazon coming and buying everything. They actually have an electric thing where I'm at, and I think they're starting to do that. Is they're having their own electric power supply, so they're eating up everything. They're eating up market share in every corner you can think of. You know, they have Amazon or AWS, and they have I think they have their own IP thing for people to have their own internet sites and stuff like that. They're doing a lot. They're doing a lot. You guys have a good night, guys. Again, we're going to be live at 8:30. We're going to go over real quickly. We're going to go over. We'll just. You know, I'm more focused on what's going to happen. We have Bank of Japan, BOJ, Thursday night. We have ECB, like Powell and stuff, guys. I'm not really. Yeah, we do bingo. Yeah, we stream every day. I come on at 7:30 in the morning, and then we'll have the live stream in the afternoon. We'll just go over the day. We'll go over earnings. We'll go over news. We'll cover stocks that we want to be long or short. We'll match them up. You know, we just, you know, teamwork. A place that people, you know, that we can go to, that where we can trade, and you don't have to worry about spending like X amount of dollars every, you know, every year or so. You know, it's not about doing something good, but there's ways that things can be done. You know, there's ways. I feel like there's ways that things can be done, and like, you know, you can have all the tools and stuff like that, but that's also not going to help you trading, and you honestly don't need it. I mean, as long as you have the internet, because at the end of the day, if you have the internet, all you got to do is pull up CNBC. Hell, Bloomberg, Wall Street Journal. What's going on? What's the news? You want to be on the news, the back of the news anyway. That's where your liquidity is. That's where the movement's going to be. You want your R-vol and your relative volume, you know, which is going to give you a decent ATR, knowing your ATR, which is your average true range. What's the average? So, and I like to tell members this too, is like, you know, there's a difference between an ATR, an average true range of a stock on a daily basis, when it's volatile to when it's not. So if there's nothing going on, and I'm trading Tesla, I know usually from high to low, I can get $4 to $6. Maybe a little more, maybe a little less. All depends. But I know from high to low, that range, I can at least grab a $4 to $6 range. On a volatile day with news, you know, you're looking at 8 to 12. So that's your ATR, is what I mean by that. If you don't know what ATR is, your average true range. You want to know those things because it's going to help you. You know, it's just a piece of the puzzle that you put in together, like to not like say, oh, it's 9:45 or it's 10 o'clock in the morning and it's made a move and it's pulling back and you can't grab the pullback because you think you missed it. You know, if it's, you know, we teach all that. We go over lessons. You know, trading's not perfect, but if you do the basics and keep things simple, you can do really good for yourself. You know, you really can. You know. Working on your entries, like, all right, I'm going to be long at this 90 MA. I got my orders sitting right there. I got my orders sitting. I have, I don't know, 23.6 fib or 32 fib sitting right here. I got VWAP there. I got an area of support right there with it, or like the high of the day, whatever it is. You just match it all up, buy signal. You just set your order, get ready, just get in. And let the stock do what it does. Have your stop loss. You know, that's all you can do. Trading's not perfect, but you can make it as close to perfect as you can. If you know how, and you leave your emotion out of it. Don't just come in like swinging for the fences and you're sweating during the trade. It's gonna hurt you. It's gonna do more. It's gonna do more harm than it is good if you can't, you know, be comfortable. You know, but we had a great day, man. I was not right off the bell. I was a little leery on Baba. I was waiting to see what it wanted to do. Baba put in this candle, guys, at like 9:45 or so. It was like 9:35. It was like 5-10 minutes when we opened, and Baba put in literally a candle with that was almost 2 million share candle. It was like 1.5 million candle. I'm like, I thought there was news. So that's when I was like, I feel like I have my my whatchamacallit, my trade idea. And I'm going to show you guys real quick where we entered. And this went over 100% today. Well, it was just under 100%. I'm sorry. Now, the moving averages are going to be a little skewed because of the time that's put in here. But again, we have, like we grabbed this very first pullback to VWAP. Right here was the entry. We waited for the pullback. As soon as we hit VWAP, I was in. As soon as we hit it, I pulled the trigger. All right. Where would my stop loss be? It would all depend. You know, my stop loss would all depend on what I was giving it. That's what we had. All right. That's what we had. So we pull back in. See, the moving averages are a little off because we were still right here where the 38.2 fib was in this area. This is where we got short. You know, this is where we got short. It's probably because no, it's good. So, but yeah, we'll get into all that. And I took profits into the close, like right here on this tail. Took profit, bounced back up. I took 2 profits right here. I took profits off the rejection because it went. I locked in a piece, took in another piece right there off the bell, and there was just no weakness. What I was looking for in this trade was, you have to talk yourself, whatever you have to do to keep yourself in the trade. Has it gotten here? If it gets there, I know the trade has changed and it's going in a different direction. Now, it could sit here, but if it starts making its way back up to the high of day, I already got 2 pieces of profit. Maybe it's not necessarily break even because I'm in weekly options, but it was still such a good entry that if we closed and started making like a higher low, then I would have said I'm out of this trade and I may not even have had to wait for VWAP. But this was where I was looking at Baba saying, if we start getting up here, then I know things have changed. We've came down, hit the close. Now do we rally back up? We didn't. Look at the tail that was put in. Volume, I was a little worried about, but I did say, guys, this is China stocks. You know, it's not going to trade the way as some of the other equities that we do trade here. That's cool, Tegan. We'll see you in the morning, 7:30. But again, I'm going to be live tonight at 8:30. We're going to go over a lot of stuff. I want to go over some of the stuff I'm looking at, my targets, what's my plan for tomorrow, what's my plan for the rest of the week. Thank you guys for joining us. We'll see you guys tonight, 8:30. If you haven't, like, share, and subscribe. We're trying to get to 100 subscribers. We greatly appreciate it. And so far, sometimes there's a lot of crap out there with people that don't really know what it is that they're doing. Knowing what sectors to be in, how to read the markets. Again, I came in, I was long. We were long-minded today on the S&Ps and the NASDAQ. We'll tell you why in the live stream. And just reading and reacting, and not putting yourself in a position where you can't handle the position. So, we appreciate everything, guys. We will see you tonight, Eastern Standard Time, 8:30. Ivy League Trading, guys. We'll see you then.